by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately. Right now, the price is high enough that that war will continue. You got to bring down the oil price. You got to end that war. They should have done it long ago. They're very responsible, actually, to a certain extent for what's taking place. Millions of lives are being lost. With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us.
Okay, good morning. It's Donald Trump making headlines this morning as well, saying, I'll end the war, Saudi Arabia will drop prices, and I will get interest rates down. What everyone wants to hear at Davos.
And come and manufacture in the US, or we'll increase tariff.
Or else.
Or else.
So a very interesting morning today. Of course, all of us in India, because we're celebrating 26 January, a day earlier. But what do you think, Kaga, markets will look at what Trump is saying seriously in terms of oil?
It's going to be a wait and watch on this one. We'll have to see how things come and how much of that pans out over what span in time in terms of periods. And of course, he's just going to take over, and he's already signed a handful of executive decisions. But I think it's still going to be a wait and watch. The markets will just see how your parameters change, because while he says that he wants to see interest rates cut, every head of the state wants to see interest rate cuts in their own country.
He can't really force them. So what can he actually do? Okay, here's the Trump tracker for you this morning. He's spoken at the World Economic Forum days after the inauguration. He says he will push for a drop in interest rates immediately. He pushes Saudi Arabia and OPEC to bring down costs of oil, says oil price cut will end the Russia-Ukraine war immediately. He's also threatened European Union on tariffs and says, make in America or else we will put very heavy tariffs on you. So a whole host of things that Trump has said this morning. But let's just take you quickly through what the global markets have been like overnight before we get to our conversation this morning. And first up, winning day for U.S. markets that we saw. Dow up nearly 400 points. The 10-year also rose around 5 basis points to 4.64. But a couple of reasons there. One is that if Trump keeps talking about tariffs, fears of inflation, of course, go up. But on the other hand, you also had jobless claims inching up in the U.S. For the week ending January 18th, the number came in at 223,000, slightly above the estimate of 220,000. Oil has turned lower after Trump says he'll ask Saudi Arabia and OPEC to bring prices down. Asian markets open higher, but all eyes on the Bank of Japan meet. In about maybe a half an hour or so, you can expect an announcement, and it's penciled in that there will be a 0.5% increase in interest rates by the Bank of Japan, taking rates in that country to a 17-year high. So a lot happening there. I'm going to quickly pull up the implied open before I get to our first conversation this morning with Ben Powell. 48 points in the green, some relief that we could definitely do with. We'll see how it sustains. Numbers overnight have not been too bad. But Ben Powell joining us. He's Chief Middle East and APAC Investment Strategist at the BlackRock Investment Institute. Ben, very good morning where we're sitting, of course, and thank you so much for joining us on the conversation today as we try and make out the impact of what the US president is saying. I'm starting right with that because I think that's the biggest trigger point. So when he says that OPEC Plus should put their rates down, it will end the Russia-Ukraine war, do you think that there is a clear connection between the two, and can he really get interest rates down? Can he get oil rates down?
So good morning, great to be with you. Happy near Republic Day. Look, we're all watching Trump press conference by press conference, tweet by tweet, Truth Social post by Truth Social post. And at the moment, it feels like drinking from a waterfall a little bit. There's just so much across every dimension. And I think all of us need to be appropriately humble and recognize that we don't know what's going to play out exactly over the next weeks, months, and years of his administration. Of course, President Trump is still in the early stages of even bringing his team together. He still doesn't really have a cabinet yet. They've all got to get appointed in the American system. So that's still very much an going process. I think we can say in the early days that there has been, to your question, there has been a clear focus on energy. Clearly, this was something he made a tremendous amount of noise around on the campaign trail, and seems to be very much now enacting some of his promises around drill, baby, drill, and looking to increase the oil supply both domestically, I suppose, over time. But drilling actually takes a little bit of time to get things in order. Maybe, I'm not going to say it's easier, but perhaps it's easier for somebody of President Trump's rhetorical gifts and powerful position to kind of lean on OPEC. But the direction of travel seems clear, both in terms of negotiations or encouragement in the OPEC direction, and then domestically with drill, baby, drill. They want to see more oil, which makes sense because oil goes into everything. So if they can bring the price of oil down, you would think that could be quite helpful. But for now, it's more rhetoric than reality. We're all waiting to see how much reality plays out in the period of time ahead.
Okay. Ben, morning. And I understand that you're pro-risk at the start of 2025. Obviously, you've had to make certain base case assumptions, and you've said that it's important to stay humble, and that point is well taken, because every day we're reacting to a statement that is made in North America, in the United States. So on what basis have you set this pro-risk strategy?
I think this is actually a profoundly important question. I'll just speak for myself. I can't keep up with him, right? So there are other complications in the world, but even if we are, just talking about President Trump, I think, again, for me and for us at BlackRock, trying to trade the kind of news flow tweet by tweet is going to be really, really hard. Where we would anchor our views in is a more kind of substantive, deeper view into what's going on. So this takes us back to our mega forces. These are the 5 what we think are huge structural changes to the global economy. I won't list them all here, but including the artificial intelligence revolution. So I think one thing we can say over the last couple of days since President Trump was inaugurated is this seeming doubling down even on the AI infrastructure. So we don't know exactly how much of the Stargate $500 billion will actually appear, but it seems to be, again, more money flowing into this. So rather than try and be at risk of being whipped around by the volatility and trying to sort of chase your tail a little bit, or at least that's the risk, think about what we can be really confident on and kind of stick with that. So one thing we think is an ongoing mega force is AI. And actually, there's been some evidence in that direction over the last few days with President Trump's and his team's statements around even more investment and even more commitment to making the US the AI center of planet Earth.
All rhetorics aside, how are you expecting funds to move between the United States over the next few months and quarters and emerging markets, perhaps the Asia region specifically?
So a couple of things to watch. Firstly, the Fed, I guess, is very important. So we still think they're going to cut a couple of times down to 4%. So that should be somewhat encouraging for risk in a general sense, emerging markets specifically. Second, China, of course, we've all been, or maybe I should just speak for myself, I've been anxiously waiting for the policy stimulus from China to actually come through. So they sort of made a big implication noise back on September the 24th, which seems a long time ago, but we're still waiting to see actually really the follow through from Chinese, particularly fiscal policy. So if you were to see that combination of Fed a little bit looser, not so much, but a couple of cuts, I guess, is helpful. And then perhaps more importantly, China get much more on the front foot in terms of growth and supporting that with a more assertive fiscal policy, that would be useful. Strangely, they actually might interplay. So I'm wondering if we might see a kind of Trump's more assertive approach to trade with China and many others, by the way, but with China, maybe that's kind of the catalyst for China to do some more self-help. They feel that maybe the world has become a less friendly place in terms of the global trade system. So that weirdly, Trump might be the catalyst for China to do a little bit more self-help. So if we, again, to answer your question directly, that combination of the potential for a little bit of Fed cutting and more to the fore, China sort of getting more on the gas pedal, I think could be enough to see investors become more excited by emerging markets. I have to say, we're not quite there yet. It does feel like an America world for now. But as we all know, we've been in this game for a long time. That can change. And those are a couple of kind of signposts I've been looking for to indicate a change of the flows that you're talking to.
Just to take that point a little further, one factor, of course, that has determined capital flows has been the yields that have moved up in the US. And we're also speaking just minutes perhaps ahead of what the Japanese central bank does. I'm wondering why you're saying that you are selective in fixed income, and your specific comments on being underweight on long-term US treasuries at a time when our understanding is that a lot of capital flows are moving back to the US because risk-free rates have gone up there.
Yeah, this has been a long-standing call of ours going back several years, actually, which has played out pretty well. So there's two kind of prongs to it. One is we've been, over the last several years, much more hawkish than the market. We have a view that inflation is going to hang around, driven by some of these big changes in the global economy, and that's going to be a problem for the Fed. I have to kind of fess up. That is now much more consensus, right? The market has moved much more in that direction over the last several months. So we feel much less kind of anti-consensus on that call. We still think we're right, obviously, but less the case moving forward. So that's the cash path. Secondly, the so-called term premium. So there's still going to be a lot of bonds, right? To put it very simply, fiscal deficits, both candidates going into the election were really, I think, running on sort of keeping deficits very, very huge. And that's likely to continue even under a Donald Trump presidency. So we're expecting to see a substantial amount of supply into the market in the coming months and years ahead. And other things equal, that should weigh on prices. So you're right, we're still underweight US Treasuries. I would say our kind of enthusiasm, we're still underweight, but the enthusiasm is less than it would have been 2 or 3 years ago when it really felt like a kind of a very one-way directional bet. Now it's a lot more nuanced. On balance, we're still underweight, but a much closer call, as you're saying, because those yields, they've gone up, right, over the last several years and are definitely more attractive than they used to be. That's true and important, but for us at the margin, still a bit underweight for the reasons I've mentioned.
Ben, your 2025 Outlook report talks about being overweight American equity, and of course with all the ifs and buts attached. I'm just wondering if you have a view on emerging markets and India specifically.
We're still pretty constructive, India. So India, I think, look, the very well understood long-term bull story for me, I guess, as the chief Asia strategist for BlackRock, the world's largest investor by far, I just think it's completely true. So I don't need to tell you guys about the demographic potential and the extraordinary productivity gains, the huge efficiency gains we've seen in the Indian economy over the last many years, which are likely to continue in our assessment moving forward as India kind of leapfrogs maybe a decade or two quite quickly and becomes a digital economy. So all of that, right, as everyone on this call is extremely aware, I think that's true. In the short term, there's been a little bit of a growth concern, a little bit of an earnings concern, and that's been somewhat exacerbated by a quite reasonable regulatory kind of oversight just to check in, is everyone doing sort of the right things across the board in terms of how much risk investors are taking. All of that is totally reasonable, but it has meant that we've seen this correction in the India market, 10 to 12%. Obviously, it doesn't feel good. It's not a happy moment, but it does happen, right? Again, for us who've been in markets a long time, sadly, they don't go up and to the right every day. You do get pullbacks. We're in one at the moment in India. I think that's understandable given the slight growth concerns we've got. But for me, that does not obscure it's not a long-term growth story, right? This is a medium-term, at the outside story around India's growth potential, harnessing that growing labor force, becoming more productive. I just think it's true, and that's why we are still quite constructive India within an overall neutral emerging market equity call, I should say.
And thanks so much for joining in. Absolute pleasure speaking with you this morning. Thanks so much for the context you provided.
Thank you.
All right, I'm going to very quickly get you up to speed with what happened in trade yesterday, because there's lots to talk about before the start of trade. So let's not spend too much time. Foreign institutions once again selling in trade yesterday to the extent of 5,462 crore rupees. To a lesser extent, that has been matched by domestic institution buying. The bulls did recover from an early setback and pushed the benchmarks marginally higher. The Nifty 50 gained about 0.2%, but they actually gained about 0.5% from the intraday low. Broader markets have outperformed once again, and you have the mid-cap index that was up about 1.8%, made quite the jump, and you had the small cap index that gained about 0.8%. Stocks continue to react very sharply to earnings, and I'll name a few that reacted very, very sharply yesterday. Zensar Technologies, you had Go Digit General, you had Ultratech Cement towards the afternoon. You had Persistent Systems as well as Coforge, all reacting to earnings and all positive. IT as a pact outperformed, led by the mid caps that I mentioned, and pharma, auto, realty companies also gained. OMCs were under a little bit of pressure though. Let's see how that pans out with the results that came overnight though. And you have a Stallion India Fluoro, which had a great debut, just that last point, gained about 40%, Agam.
Right. Well, that's as far as how things fared yesterday, and it was, well, an interesting day, yet we didn't see too much happening. So I'm going to tell you about what we can expect in trade today. So the range of 23,000, 23,500 remains. That hasn't changed, and that, in fact, for the 7th straight day, where we are, in fact, moving in within that bracket. As far as fund flows are concerned, I want to very quickly talk about the cash markets and what's happened over the last handful of sessions. So FI sold for the 14th straight session yesterday, and this particular bout has seen an outflow of around 71,000 crores over that. And DIIs have bought for the 27th session yesterday in a row, and this bout has led to an inflow of 94,200 crores. At the moment, when it comes to the index futures, long-short ratio, it's still fairly stretched towards the short side right now. But it is not an extreme end, as was the case maybe about 3 or 4 sessions ago. Currently, long standing at around 19% against the balance 81% shorts at the moment. And it's still, a slightly sold market. I'm not going to say oversold, because plenty of parameters do indicate that there could potentially be a little bit more leeway in the correction. However, we must remember that your option premiums are set to rise, as they always do on the occasion of a very large event coming up. It does seem like at the moment markets are trying to factor in any bad surprises from the upcoming union budget. And if we don't see any bad surprises or any surprises at all, you never know, that could potentially trigger short covering, but we're going to have to wait for an entire week before that happens. And besides that, of course, we're watching out for some of the key levels at around 23,500. A recovery in banking stocks as well, because they've also been very, very volatile of late. And should we see some strength return with both these key indices, conquer and sustain above some of your important round digit numbers, then that's where you will know that we are starting to see an ease in the selling pressure. But I'd reckon that it's unlikely to come through before at least the union budget. So we're going to have to wait for another week's consolidation potentially, and a week's volatility as well, unfortunately, before we start seeing a direction in the markets.
But you're looking at some maybe kind of clawback today, Agam.
Yeah.
One would think, because numbers overnight have not been too bad.
Right. I agree, and some amount of short covering is to be expected, and I wouldn't necessarily want to attribute it to Donald Trump's comments. It's just the way positioning works, because we've seen the expiry come through yesterday and we didn't see any volatility at all, at least not on account of the expiry. So usually Fridays following very, very weak or very uneventful expiries do see a little bit of direction, and I reckon that today that direction will be on the upside. Okay,
so expect a bit of a better day today. I think focus will sharply be on mid-cap IT. The way Coforge, Persistent has responded, and then emphasis numbers also have come out. That would be in focus. Cyient, however, is not making that cut, and that's the first stock I'm talking about. A thumbs down, unfortunately. Numbers were okay, numbers were in line, but there's a whole host of other things going on, which is why Cyient might see a bit of pressure if you own the stock. Stock was up 2% yesterday, moving up with the entire IT pack. Remember, that index was on fire. Nifty IT was up nearly 2%. So let's talk about Cyient specifically. Revenues up 4.2% in the third quarter at 1,926 crores. Versus 1,849 crores. Their EBIT earnings essentially were 8.4% down at 211 versus 231 crores. Margins were also squeezed a bit from 12.5% down to 11%. Profits down also 31% at 122 crores versus 179 crores. But that's not all, because those weak numbers were actually expected to some extent. But they have said that they expect the DET, that's digital revenue degrowth, to be in the range of 2.7% year on year in constant currency terms. They basically reduced their forecast as well. Their guidance for how growth will pan out has changed to a degrowth now. So that's going to be seen as a negative in clear terms. They also expect the financial year 25 EBIT margins to be in the range of 13.5% due to a shifting of revenues within the year. Other things to look at, which will be a downer, is change in the top slot. Their CEO has resigned, Karthikeyan Natarajan. So world of pain actually today for Cyient. A clear thumbs down on that one. Good news for Amber though. Great numbers. Thumbs up there on Amber. Revenue is up 65% at 2,133 crores, way above estimates of 1,691 crores. EBITDA is up 2x, two times at 158 crores, 159 nearly, versus 115 crores. Margins have also gone up to 7.4%. The estimate was 6.8%. Profits are at 35.9 crores versus loss of 48 lakhs. So you've seen full, move to the black. The estimated profits were 20 crores. So thumbs up here. Stock was already 8% up. So yes, there has been a run up ahead of the numbers already, but I would reckon that you would see a bit of a thumbs up today as well. So Amber, one to look at. United Spirits is the other one. Again, a thumbs up. Third quarter has been good for them. Revenue up 11%, EBITDA up about 17% at 568 crores. Margins have been in the same range, but a slight improvement, so not half bad, from 16.2% to 16.5%. Net profits are down about 4.3%. But if you look at the highlights, profits have been impacted by 65 crores under exceptional items. So you need to look at that figure as well. There was a one-time expense towards severance cost because of a closed unit, but net sales value grew at 14%. Volumes were up 11%, and certain segments of theirs, for example, prestige and above, so their high-end segments grew by 11%. Their popular segments grew by 6%. Remember, United Spirits has already been running up because some of the fog over issues of selling in certain states has now come off in Telangana, etc. So, which is why United Spirits might see another bump up over the month, though they've lost about 2.5%. So those are my top three.
Right. I have a few as well, and they are all, in fact, thumbs down, unfortunately, based on the earnings.
It's a TGIF mood, but then
it is what it is. We've got to pick what it is. We've got right on top, we've got Dr. Reddy's Laboratories, which is a thumbs down, and this is the Nifty 50 company that posted results post-market hours. The revenue increased by about 15.8%. Now, this was more or less in line, but there is a reason for that. We'll come to that. The margin is coming at 27.1% against an expectation of 27.9%, and the net profit has actually missed the margin. The margin contraction was on account of the lower Revlimid contribution, and the India growth was led by the vaccine portfolio from Sanofi. We've got Dr. Reddy, so Jeffries and Dr. Reddy's that has spoken about this. They've said that the Q3 miss was on account of weak core revenue and the high selling and general as well as administrative charges. The underlying revenue growth moderated to 7.5% year on year. They have spoken about the contribution of the nicotine treatment which they have bought, which has contributed a substantial amount to the revenue in the quarter gone by, as much as 600 plus crore rupees. And if you remove that, what they're talking about, the core income, that has not been very substantial in terms of the growth. You also have the weak US and core India sales, which have been offset by a strong performance in Russia and UK. And the SG&A, what I talked about, the selling, general and administrative charges or spend is likely to remain high in the near term, is what they've said. They've maintained an underperformance and cut the target price further to 1,170 from 1,210. So that's certainly something to watch. Sona BLW, on the face of it, the numbers are not too bad. In fact, the revenue and net profit have more or less come in as per expectations. You have the revenue that was up about 11%, and the net profit is risen by about 13%, coming at 151 crore rupees. The margin also expanded, and in fact, it has come in just below expectations at 27%. The expectation was about 27.5%. But the thing is that Citi has said that it's cautious on the outlook going forward for this company. It has maintained a buy, but it's cut its target price to 630 from 750. And the way that stocks have reacted in the recent past to even meets but slightly worse expectations or outlooks going forward has been negative. So at least for the short term, you should watch out for the downside on this particular stock. And the last one is a clear thumbs down. You have Syngene, which has lowered its revenue guidance in the current financial year. Remember, this is a stock that reported earnings during market hours yesterday, and this is actually something that came post-market hours in the analyst con call, and it has said that it's lowering its revenue guidance. It expects to close the full year with a single-digit revenue guidance or revenue growth and a flat profit. The company was expecting initially a high single-digit to low double-digit growth in FY25, which is certainly going to be seen as negative for the street today.
Right. Well, I do have all three of my stocks, which have done very well. So we do have some green tracking. Of course, right at the top, we have Mankind Pharma. Well, this one is actually known for Manforce condoms and Prega News. But, beyond that, it does look at several other pharmaceutical products, and which is why we've seen that top line growth coming through of as much as 24%. Its EBITDA margins as well, pretty steady, coming in at around 25.7%. Against 23.3% year on year. So there has been an expansion in its EBITDA margins too. The only thing that perhaps would work against the stock, and not necessarily so, is that its profit has come off by around 16%. But this is because of finance costs going higher on account of its acquisition of BSV. We do know about this, so this has largely been factored in. So I'd reckon that in general, overall, this is a pretty strong set of earnings. We move on to Tejas Networks. This is where we've seen your revenue rise 5 times. So it does seem like Tejas Networks is now starting to come out of the woods and starting to show up for all the projects and the order wins that it has made through over the past few quarters. It's now starting to show up on your revenues. Then that perhaps is a positive because it's on an operational front. It's made an EBITDA gain of around 372 crores against an EBITDA loss of around 7.5 crores year on year. EBITDA margins also coming in at around 14.1%, and it's also posted a net profit of about 166 crores against a loss of 50 crores in the year gone by. So again, this is a positive quarter for this one. And the last one I have on my radar is a relatively smaller retail company, but it has made waves over the last 12 months, and that is V2 Retail. This has seen a staggering 58% growth in its top line. Its margins have expanded by well over 60 odd basis points to around 18.9%, and net profit doubling to around 51.2%. So again, a very strong show for V2 Retail. That also explains the kind of stock movements that we have seen for this one over the past couple of quarters. It's also, in fact, clearly outperformed the indices that would include the mid cap and the small cap indices. So this one is going to be the other one to keep an eye on. All three thumbs up from my end.
Okay, so you are in a TGIF mood, and we should be, because thank God it's Friday and thank God it's Saturday, working for all of us.
Oh my!
But also exciting for all of you. So we have an exciting pre-budget weekend lined up for you. Do join us. We have our very first budget investor guide. And tomorrow you will see veterans of the industry come in right here to our studios at NDTV Profit. We want to hear from you if you have anything to ask them, because look at the people that we're speaking to right here. We'll be speaking with Ramesh Damani, Prashant Khemka, Nilesh Shah, and of course you'll have your very own special edition of Ask Profit as well, isn't it, Alex?
Absolutely. We're going to have Gautam Shah and Kush Bora address all of your questions, and a lot of you will be wondering how to position yourselves ahead of the budget, which generally sees announcements that causes stocks to move. Remember, Saturday, the 1st of February is also a trading day. So if you want to know how to position yourself ahead of that big event, this is where you should send us a video. By the way, if you are sending us a video, make sure you hold your camera in a horizontal mode. Some of you have already sent in your video clips, and I'm quite excited to see them. You could get your chance to be on national television.
Yeah, so it's going to be exciting. We'll also mention Saurabh Mukherjee is going to be with us, and we're going to have a masterclass with him at that event, so stay tuned. Very short break. On the other side, we get top trading strategies of the day. Don't go away.
They say fortune favors the prepared. The more prepared you are using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
This January, the world will come together at the World Economic Forum at Davos to bridge differences, because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
I present the budget for a historic
Well, Budget 2025 is around the corner, and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits, and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and
Welcome back. That's our watch list for you that you saw on your screen, and a fair bit of red as well, but some stocks that will move positively today based on numbers. What's the technical view? Kush Bora in studio today, as is Parag Thakkar. Parag Thakkar, of course, head fund manager at Fort Capital. Welcome to both of you. Very good morning, and great to have you in the studio. You didn't get the memo, Kush, to wear Indian clothes.
And I'm guessing that's because you want us to represent the modern side of India.
Oh, sure. Good save. Nice attempt.
Okay, see, this is a segue.
I'll give it a 6 on 10.
Oh, just that.
What is the outlook for the market? You know, I would say not decent, but at least we stayed with our head above water yesterday. Sure. Do you see a build up today?
Just the conversation that we were having about the Republic Day sale just before we just when we were at break. I'm just going to extend that. I am expecting the Nifty to go up to about 23,800 to 24,000. I think it was Wednesday closing show when I first said that I think it's time to buy now, and we've seen the market move up then and yesterday also. At least technically, things are setting up in a way in which the shorts from here on will not make sense. A good support zone comes in at 22,500, correct? Now, if the Nifty does slip below 23,000, which is a strong support zone at the moment, from there on you've got 500 points on the downside, but about 1,000 points, maybe a little higher on the upside. And we are seeing that play out. There are also some positive divergences that are setting up. So I'm pretty optimistic. There's a good possibility that we might have this run maybe now, by now I mean maybe in a day or two, or maybe around or just post the budget. But 23,800, 24,000 is on the cards, and I am taking this as an opportunity to buy. Also, let me just caveat that, or let me just give a quick disclaimer. This is more of a recovery play. This is more of a reversal play. I am not saying that from here on the worst is over and we are headed to 26,000 again. No, we might again look at 22,500 sometime from now. But as a recovery play, there's a good possibility that in the near term you could play that bounce, and you could see that bounce to 23,800 on the Nifty and 24,000 as well.
So context of the Republic Day sale, what we were speaking me in the break that you very often have all of these opportunities on websites for Republic Day sale. Are we seeing a Republic Day sale in the market? So the short answer is yes. Yes, buy today. Bank Nifty both is a buy today.
Yeah, in fact, Bank Nifty is also a buy today. It's just that it's more volatile, and the PCR on Bank Nifty is very close to oversold territory, 0.67, but it's not there yet. So if we do test that 48,000, 47,700 kind of support zones, I think the PCR will also go into oversold territories, and Bank Nifty actually might see a sharper rebound. So 49,500, 50,000 thereabouts are the levels that I'm looking at on the Bank Nifty on the upside. So yes, both of them on a buy. Bank Nifty could be more volatile. So either you want to just hold up on that purchase and see that dip come about, or just place your stop losses deeper. So constructive on both.
ऐसे नहीं कि if you buy right now, summer sale is on and winter is coming, ऐसे तो नहीं है? आप वो तो नहीं बोल रहे?
Winter is coming. For sure, for all the GOT fans out there. It's just that we might have a day of sunshine before that happens.
See, that's the point.
So that's what we need to lock it to. Okay, stocks.
Sure, a couple of them, but I'm still going, with a long and a short kind of a strategy, just because the kind of volatility that the market is presenting, even that's an opportunity, right? So on the long side, I've got AIA Engineering. The stock's done very well. It's made a very strong base around the 3,300, 3,350 mark, and you've seen it go against the market trend and move higher, cross some of its near-term, moving averages very convincingly. So AIA Engineering for targets of 37.60 and 38.70 with a stop loss around 35.40. On the short side, I've got ICICI Prudential. A lot of stocks are seeing a positive divergence when on the way down. This one's not. The volumes are also picking up on the way down. The mood hasn't really changed on this one. So on the short side, ICICI Prudential, 588, 581 targets, 600 is where you place that stop loss.
Okay. Parag, good morning.
Good morning.
From my end as well. ICICI Bank is your top pick.
Yeah,
and
definitely.
It's very interesting ahead of the numbers tomorrow.
Yeah.
We'll be live, by the way, and we'll probably be able to speak about it. But why?
Simple. See, basically, HDFC Bank has showcased that there is no problem in asset quality in large banks. Okay, because they have lended to their own known to bank customers, right? So the biggest problem in the banking area right now is unsecured loans, right? And ICICI Bank has always showcased a consistency after Mr. Sandeep Bakshi has taken over, that they always remain risk calibrated. And they always focused on risk-calibrated profit growth, and they always try to give compounding structure and predictable returns to investors. In my view, at current valuation, after dropping from 1360 to 1201 now, it is trading at hardly close to 2 times FY27 book value, and PE is around 12. And I think they can easily grow at 15% given where the CD ratio is for them, around 85-86%. Given the deposit franchise which they have, so low cost deposits, and given the lending franchise they have, because they are doing it in a very risk calibrated manner. So I am sure that they will not disappoint the street on asset quality side also. Plus, unlike HDFC Bank, where they have due to CD ratio thing, they have to go slow on growth. Here the growth will be also decent. I would say not. See, the economy, we have to understand that this year is economy wise, it was a pause year.
FY25.
Self-applied brakes. I call it people call it speed breaker. I call it self-applied brakes.
FY25.
Election, government was not spending. RBI was focused on, bringing down the risk factor in the economy. So many microfinance companies were told not to give loans. Now all that is getting unleashed slowly and gradually.
Accelerator is now ready to be pressed, but not yet.
I think hopefully if budget does that, in my view, because I think government also should be aware that 5.4% GDP growth for which we reported in Q2 is not enough for India.
No, doesn't work
for
India.
So definitely the growth has to be supported, and it has to be supported from both monetary side and fiscal side.
Well, it's been described as a blip. So let's see. All right, quick focus on some brokerage notes this morning, and Adani stocks are on the radar. Investec is bullish on Adani Green and Adani Energy, while Adani Ports is on Ventura's watch list. Mehika is joining in for more.
So we had Adani Energy and Adani Green also post a strong set of numbers yesterday. Adani Energy 73% rise in profits, Adani Green 85% year-on-year rise in profits. Investec has maintained its buy on Adani Energy Solutions. Now the target price is set has been set at 1,352, implied potential of 66.9% upside. The revenue was driven from newly commissioned projects as well as higher energy sales. We've seen EBITDA growth on the basis of the strong revenue as well as treasury income and steady regulated EBITDA. Distribution loss in AEML has also been improving consistently, and under construction pipeline is strong at over 54,761 crores on 5 new project wins. On Adani Green Energy, Investec has maintained a buy at a 1,030 rupee target, which implies an 114.2% potential upside. The muted revenue growth was only because of the decline in EPC revenues, which offset the 32% increase in energy sales. We've seen EBITDA up 9.5% because of better operating performance. Profits were aided by 24% lower interest costs as well as lower tax expenses. According to Investec has also noted that 425 megawatts of capacity was added in Q3, and we've seen the total renewable capacity get a big boost to 11.6 gigawatts. And one of the key milestones that was highlighted by Investec includes the PPA with MSEDCL, which will supply 5 gigawatts of solar power for a period of 25 years. And then we have Ventura, which is actually positive on Adani Power. The target price implies a potential of 55%, and this is the 24-month target price is at 806 rupees. The enhanced coal availability and business expansion is what's fueling the growth for the company. It's committed to the future growth via continued investments in thermal power capacity. It's not shying away from this area of power despite the focus on clean energy. Venture is also saying that the company is strategically positioned with robust capacity expansions to address the critical demand needs for power in India. And lastly, the net debt stands at 30,985 crores, which is manageable for the company and can support its balance sheet strength, is what Ventura is saying.
Mihika, thanks so much for sharing that and putting that out. Let's also tell you, of course, a standard disclaimer, this is NDTV Profit, part of the NDTV group, which is owned by the Adani group. But a lot of these stocks have not moved maybe as much as some other people have anticipated. But I want to know, Kush, whether you're seeing opportunities in any of the stocks that Mihika just mentioned, or the likes of Adani Enterprises or Adani Ports even.
You're right, Alex. Actually, after all the allegations were quashed in the US, and one would have expected that to act as a trigger where momentum would have picked up, and these stocks would have actually gone higher. So while the bottom is in place, the momentum is missing, and that is what is perhaps holding at least me in terms of initiating any kind of fresh recommendations of a buy. As long as they don't cross some of these critical resistance levels, it will be difficult to see that momentum come through. However, one name that I like is Adani Energy Solutions. The reason being that for about a month and a half, 2 months nearly, 830 as a level has been acting as a bit of a stiff resistance, but also on the downside you've got the support at 795, 790 zones. Given the kind of numbers that were announced and the view that was just shared, there's a possibility that it might this time around break that 830 mark. Once that happens, you're looking at a much higher level of 880 as well. So Adani Green, with that base formation in place, just needs that kicker. So with a stop loss of 790 can be considered for a long trade.
Okay, Parag Bhai, another space that I wanted your view on, and I know you have a whole host of stocks that you are picking this morning, we'll talk to you about the Republic Day sale as well, is on mid-cap IT. The kind of boost that we saw, and Coforge had, numbers were fine, in line. It was the commentary that came in, and the commentary is much more positive than what your bigger companies are saying right now. Wipro's commentary actually saw, a bit of disappointment. Emphasis has reported, and we'll see that coming in, but 11 a.m. is when we'll hear the con call. Are you feeling a little more positive on mid-cap IT, or IT is something you want to stay away from?
I would say that, I believe in cycles. And one thing is that because of the Trump trade, that upside is captured in IT. Because everybody has believed, and rightfully so, that Trump will focus on US growth. Yesterday, Trump has commented, I think, on Davos that he wants lower interest rates globally, right? Which is good for IT. He is going to cut corporate taxes in US, which is good for IT spending. So I would say that things are looking good. There is no problem in IT. But the point is valuations, right? While on the other hand, on the domestic side, because we had a very bad 9 months because of lack of government spending and also urban consumption suffering due to higher inflation, things are bottoming out. I am a believer of cycles, and that's why I am more bullish on domestic cyclicals today, if you ask me, from risk reward perspective. Like ICICI Bank, I told you, like TVS Motors, for example. If you hear Mr. Sudarshan Venu's commentary in Davos day before yesterday, he has said that January has been excellent for them. Right, they are gaining market share. They'll become the top market share in EVs, in EV scooters in January. And if a company, a high corporate governance company like TVS Motors, which has excellent balance sheet, robust cash flows, and of course market leadership in many spaces, plus they are present across the segments, right, across price points in two-wheelers. If such company comes and tells you that from January things are recovering, you have to believe it, right? So things like TVS Motors, for example, yesterday on Ultratech's call, Ultratech called out that now, at least in Northwest, the prices have also started to pick up. The demand is improving due to infrastructure spending. So I would rather buy domestic cyclicals like banks or cement or auto selective like TVS Motors or some auto component companies, you know, where I would be more structurally bullish from here on, because the best of the IT you have seen, the best of and you have seen worst of the domestic cyclicals.
Okay, so even in this, in cyclicals and some of the stocks that you've told us about, SBI, you're also finding Constructive, Ambuja Cement and Minda Corp. Talk about these as well.
So basically SBI, again, see, like SBI is, I think that is a real Republic sale which is going on in SBI today. 100% for sure. It is below one-time book. It is at a 6 PE. Okay, but the chairman has come on channel and said so many times that they are targeting 10% deposit growth and 14 to 16% loan book growth, which means their EPS growth will be 12 to 13%. 12 to 13% EPS growth is available at 6 PE. ROA of 1.2 or 1.3% is available at below book. And if there is an economic recovery, which is boosted by budget, of course, then the SBI, who can be the better proxy to play India than SBI? And remember, SBI's unsecured loan, which is the biggest problem for the industry today, is not a problem for SBI. They have a 3,41,000 crore book given to government employees for unsecured.
And a very large mortgage book.
Yeah, plus they have said on channel, and this I'm just quoting him, that their margins are stabilizing. Their EPS growth is in double digits. They don't have any problem of asset quality. Credit cost is only 50 bips. Unsecured loan is safe for them. This is what all chairman has said on channels.
Okay, so bullish on SBI, and just the other two we'll wrap up. Ambuja Cement and Minda Corp, because I want to get that flow of thought in.
So basically cement, again, as I told you, that cement is a domestic cyclical where I would recommend anyone who is not so much focused on stock specific and who wants to play, that every cement stock, when they declare numbers, buy them, because we are at the bottom of the cycle. Because from here on things are only improving. I have heard that things are slightly shaky in south and east, that prices have not gone up so much, but except for south and east, I would say, so for Ambuja, for example, is a pan-India player, and they have done so many acquisitions. They will integrate, the cost synergies will come. I think from 2-3 year perspective, it looks like a no-brainer to me. Because prices have bottomed out, volumes are picking up due to infrastructure spending picking up. Of course, government will do something on housing. There is one another stock called Aavas Finance, which is there in our portfolio, which we have bought because lowest credit cost company in my view in financials, because they give loans only against self-occupied residential property. And of course, definitely there will be some boost in housing in budget, because housing is a sector which creates huge jobs. So that is a booster to the economy. So
I want to get your view very shortly on the pharma space. We've got a couple of companies that have reported numbers, but one of them, of course, is Syngene International. This is a company that reported a steady set of numbers, but it lowered its guidance for FY25. We've got Varsha joining in to tell you the key details. Varsha, it reported during market hours, but post-market hours was the con call when they talked about the guidance. What have they said?
Yes, Alex. So they have lowered their FY25 guidance. Now they expect single-digit growth with flat profit. Company was expecting high single-digit to low double-digit growth in FY25. That was the guidance that they gave in Q2, but now they have lowered it. Now the lower guidance is due to 8 to 12 week a delay in demand recovery. With a delay in US biotech funding recovery, management has lowered this guidance. US biotech funding delays in Q3 FY25 FY25 has impacted market stabilization and revenue expectation as per the management in con call, and the EBITDA guidance has remained steady. The capital expenditure of $60 million is on track, with Unit 3 set to complete by April for future growth. That's what management has said. Their biologics manufacturing utilization remains a concern for the company, with the newly acquired unit not yet operational, and also the Q4 margin recovery is expected. But overall, if you see, this is not actually a good sign for the company because they've lowered their guidance. And also, if I were to talk about the numbers, they posted a quarter of earnings which was a miss from the street expectations.
So that's Syngene. We should make the point that we were talking about Aavas with Parag Bhai, and of course, Kush, you spoke about it yesterday on closing as well, right?
Sure, absolutely incidental, but yes, I mean, the signs were already there, the base formation and all already in place, momentum picked up, volumes have picked up, so no reason to, not go out and buy Aavas Finances, at least technically. And just to reiterate, yesterday in the closing show, we had discussed this stock for targets of 1770 and 1820, and 1670 was your stop loss. Today, we've got a stamp of approval from Parag Bhai as well, so yes, there you go, fundamental and technical both.
Okay, breaking news on your screen. Breaking news on your screen that we need to address. Bank of Japan has raised their overnight call rate by 0.5%.
No, 25 basis points to 0.5%. Yeah, 25 basis points to 0.5%.
Yes, that's what I said. So they have raised their overnight call rate to 0.5%. This was penciled in, but remember that this brings Bank of Japan's overnight call rate to the highest level in about 17 years. We need to take a very short break, but what is the implication for global markets, for fund flows, for India? All of that after this break. We're coming right back.
They say fortune favors the prepared. The more prepared you are, using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking Welcome back. You're watching India Market Open, and we're discussing breaking news, of course. And we told you just before the break, the Bank of Japan has decided to increase rates as was expected by 25 basis points. It now stands the overnight rate at 0.5%. Now, why is the market not reacting too substantially to this? It's because we've been speaking about this for the last several days. The yen is more or less where it was yesterday. The Japanese Nikkei is reacting positively. It is currently about 0.9% higher. But Parag was just making the point in the break, and he was talking about the fact that to a certain extent this was priced in. And also another interesting point is that Japan never moves in lockstep with the rest of the world, right? It's more or less walking in another direction. Parag?
Yeah. When entire world is talking about easing, Japan, because of their own inflation-related issues, have been increasing. So they are odd men out right now. Even Trump has yesterday said that he wants interest rates to be lower in US, and not only in US, in the entire world.
He said we will lower rates, everyone else will follow. Of course, not Japan. Though I think the only reason we are tracking this so closely is because the last time this happened in August 2024,
there was a scare.
The yen carry trade factor came in and everything was topsy-turvy. This time round, don't really expect too much of stress on that front. Okay, first opening rates in, we'll wait for them to settle. But, let's talk about some of the stocks that you could see buzzing today. And Kush, I want to come to you on Amber. Amber, essentially because good set of numbers, has already run up yesterday. The question really is if there is more steam left, and we'll see if we get the first rates up as well on Amber.
In all likelihood, there is some steam, on the upside. However, this is a slightly higher level, but 7,100 is where I would, I would see some sort of resistance come in. See, some of these names have already run up quite a bit, but then again, they've corrected also quite a bit. Now, you can't wait for all the technical parameters, perhaps even fundamental, to fall in place because, they've defied gravity for the most part. Now, we've seen a bit of a profit booking in these. Support levels around the 6,300, 6,400 mark. I think there's a possibility that, the stock could head higher. As I said, the first level of resistance and also the target comes in at 7,100. Once that is taken out, you're looking at a 7,550 as well. So yes, fair degree of volatility, but perhaps a good time to enter, some of these names, including Amber Enterprises.
Okay, Amber Enterprises buzzing in the first minute of trade, and this is the pre-open session. Keep that in mind. So this is just indicative if unless you are able to trade in the pre-open session. I also want to look at V2 Retail. I want to look at Cyient. Some of the stocks that have been on our radar this morning. V2 Retail also 5% up. I reckon that might be on a circuit right now. Cyient 9.5% down in the first few minutes, and this is something that we said is probably going to happen. Let's take a look at SBI, which is something that Parag is so bullish about in terms of a Republic Day sale. Okay, not getting a rate for that right now. It's early days yet. Dr. Reddy's is the other one. Dr. Reddy's, Sona BLW, pain with those numbers. Even Nippon Life AMC numbers came in, and that's also looking pretty bad. Sona BLW 10% down as well. Scient we talked about. And Nippon Life also seeing some pain over there. Ujjivan, another one that has reported numbers. Ujjivan, small finance bank. They said they want a universal bank license, but numbers are frankly not great on any parameter for Ujjivan. So, we were speaking earlier, Parag Bhai, and you said that you're not too worried about the results. The fact is that if there is a feeling that the number is not great, there is a huge reaction from the market.
Yeah, so basically, if you are structurally bullish on that particular company, then you should buy. For example, we bought TCS on the result day, and second day TCS bounced back strongly, right? Because the commentary was positive.
You bought it at lows.
So basically, so if you are structurally bullish on the name, and if one result is here or there and it gives you a 10% downside like what market does today, this time, it's a great opportunity to buy.
Did you manage to see DRL, Dr. Reddy's Laboratories?
So I have seen the results. One thing I can tell you that everybody is worried about how they will compensate or offset the impact of Revlimid going away, because Revlimid contributes 40% to the EBITDA. And from company side, there are two products. One is obesity related, the other is a blood thinner, where they are expecting that to offset the Revlimid's impact. Of course, this time again, in US market, the core business, that is X of Revlimid, also saw some price erosion, some demand maintenance. So market might be very upset with it, but as far as my understanding goes, the CEO is very good in terms of cost optimization and capital allocation. So definitely, if it really opens 10% down, it's worth a look.
And there was also the contribution of the new nicotine treatment drug which they had.
They have acquired, and they've acquired at a good valuation. It's a habit forming business. So I like that acquisition actually. And it was bought at a very reasonable valuation also. So I think in Dr. Reddy's I am not worried about capital allocation, but results will be lumpy because of Revlimid and because of various other things happening in US and various other parts of the world. I would say that the direction of the company is right. There might be some speed breakers here or there which should be used to, of course we don't have it right now in the portfolio, but definitely it's worth a look if it opens so much lower.
Okay, some stock spotting this morning. IEX up on numbers was expected. HPCL also doing well on the numbers. Indus Tower showing some up move. Adani Green about 2.5–3% up. Minda Corp, United Spirits. Minda Corp actually on Parag Bhai's list. United Spirits on the numbers also doing fairly well. Anything you're spotting right now, Kush?
Too early, but I think if I were to continue the trade, it would be Manappuram Finance. Again, one more stock that we had discussed yesterday, comfortably above the 200-day moving average, crossed it after about good 3–4 months of resistance. So Manappuram Finance is something that I have on my radar, close to the 200 psychologically important level. But I think once that is taken out, it could make a further move towards 215 kind of levels as well. So Manappuram is something that I have on my radar.
Sona BLW was on my list today, and not because the numbers were terrible, but more because the outlook for the company going forward may be a little bit foggy. At least that's what our latest brokerage note that we're looking at seems to suggest, and we've got Harsh joining in soon to tell you about Citi and what they're saying about Sona BLW. But just to drive home the point that we were making on pharmaceuticals, Dr. Reddy's Laboratories, Parag Bhai, some of the factors that they've spoken about, which is pricing pressure in the US, we've got a lot of companies. In fact, Tamanna, just before Trump got inaugurated, had a list of companies that have had a very substantial allocation or revenue generation from the US. This is a problem that they're all facing. So from that perspective, is there anything that you would buy right now in the pharma space?
So basically, I would look at Dr. Reddy's very closely, what price it goes down to. Definitely.
But apart from Dr. Reddy's?
See, pharma as a space we have liked, and we feel that many of the pharma companies, if bought at a right price, can give. So Lupin is looking good, and Emcure Pharma. So these are some of the stocks which we had in the portfolio at some point of time, or we might be having today. I would say that Divi's Lab is of course on the top list because they have a structural story ahead for next 10 years, So I would say that pharma is a good sector to be in, but we have to see at what price we get.
Okay, Z popping this morning, they have filed a counterclaim of 70 crore rupees plus interest against Star India. Remember, they had earlier claimed damages on Z for a failed ICC contract. That stock showing some signs of action. But so many to track this morning, and one of them is Sona BLW. Harsh, here with the top brokerage call of the day.
Well, yes, Citi continues to be constructive, 16% upside despite cutting their target price from 750 to 630 on the back of both guidance as well as earnings. Now, I want to talk about what Citi made of the numbers. One, EBITDA they believed was marginally above their estimates, while it was below consensus. They had expected very muted margins, but it's slightly better than that. PAT is boosted by other income is what they are saying. Now, in terms of what commentary they are highlighting, one, near-term outlook is cautious. EU and destocking in North America is one of the reasons why there is caution with regard to the business. Revenue, though, would continue to double by FY27. That guidance remains. And in terms of order book as well, you've seen a bit of an uptick from 23,100 crore. Order book has inched up to 23,200 crore on a sequential basis. In terms of near-term, in terms of investment in ClearMotion, around $4 million to be invested. ClearMotion is a component maker for premium cars. In terms of the estimates that they've built in as part of their valuation, they've cut earnings estimates by 12 to 14%, FY24 to 27. Price to earnings ratio also cut from 47 to 45. So signaling the way in which they are looking at the numbers, looks like earnings cuts are what Sona is seeing, and that's likely why there's pressure on the stock pre-open as well.
Absolutely, that's the reason why it was a thumbs down for us as well in the morning. We highlighted this to you before the start of trade. Parag bhai, any thought on the space that it operates in?
Which?
Sona BLW.
So basically we have Mindacorp in our portfolio in the auto component space because it is mainly domestic business, and all the three businesses of Mindacorp are seeing increase in content per vehicle story. Plus it is about 20% ROC business, hardly any debt. Of course, now they have done some big acquisition, but that is also EPS accretive as well as ROC accretive. So we like such stocks. As I told you, for example, if you tell me to buy something which is related to Europe car companies, right, which Sona BMW has also said on the call that Europe is slow and they don't see any revival there. So I would avoid those kind of spaces, but anything which is related to India specific stories definitely is worth a look. Of course, in mid caps and small caps, the only problem is that valuations are not cheap. In large caps, as I told you, SBI is...
Any view on Amber?
So I'm not a lover of EMS space. I'll clearly sell. See, it's a good story to have from India perspective that, okay, electronic manufacturing, which we used to import a lot from China and all, now we are manufacturing out here. And at some point in the past, when Amber got listed, I was also bullish. But now at this prices, as I told you, I'm a believer of cycles and valuations.
7,200 on Amber, cushioning buy only at 7,000 if at all. Okay, quick look at on the cement space, and Tushar Chaudhary is joining us this morning. Tushar, thank you so much for speaking with us. We've just 4 minutes to open, and so we'll get a first quick view. Of course, Ultratech reported yesterday, but the cement space overall for the last quarter has seen a muted outlook. What is your sense on some of the key players right now?
Yeah, thank you. Yeah, you're right. Last quarter, basically post-elections, we were expecting domestic demand to inch up, which couldn't happen. Probably there was delays in government spending, and till November, pricing was weak, and that is the reason overall outlook was weak. But post-December, I think within in the month of December, prices started inching up because of demand, which started improving. And going forward, next 3-4 months, I think as we are in the key construction phase, your demand should improve as well as government spending is also expected to improve.
Just a specific comment on stocks that you've obviously not seen the results of, but then the outlook heading into the fourth quarter, and how much of that is going to be determined by what you hear in the budget. Tushar, because you're looking for any announcements that could be made on government capex that could push the demand for infrastructure-related activity, and cement, of course, is front and center. So what would you want to hear that will give you the confidence that heading into Q4 and in the next financial year, it will improve?
Correct. 4Q outlook remains very strong because demand has started improving, government spending has started improving. Overall, urban housing remains stable. Rural housing is also positive this quarter. At least companies are telling us. From budget, obviously, the disappointment of last year, probably there was a delay in government spending, which will not happen going forward. Probably the focus on infra spending will remain high from government side, as most of the elections are over. Delhi will be over in a month or 2 months, and I think we should see uptick in infrastructure projects allocation also, as well as spending also from government side. So that augurs well for cement demand in general.
Yeah, okay. So what, according to you, are the top picks in the space, Tushar?
So we are positive on large cap, mainly companies like Ultratech and Ambuja, mainly because capacity demand is improving, but at the same time, capacity is also inching up. Ambuja is very aggressive in taking capacity share over the last 1-2 years, which we have seen. As well as Ultratech is a pretty efficient player, and I think these companies, large cap companies, probably will take away the market share from smaller companies going forward over the next, let's say, 2 to 3 years, and consolidation probably will continue in the same pace we have seen.
Okay, thank you so much, Tushar, for giving us your time. So large cap cement is the way to go, and of course consolidation continues in that space. Ultratech down in the pre-open session. You might see some pain points right as we open up, but what's going to be on focus? I think the negatives might outweigh, especially in terms of results coming in. Top call seems to be amber this morning, but we'll see what happens there. Kush, one top call before we go into the open session.
I think I'll go with the consensus trade that's there in the studio today, which is Aavas Financiers. The stock is opening about 0.5% higher, maybe a little more than that. So just to reiterate the targets, 770 and 1820, stop loss at 1670. So Aavas Financiers from a near-term plus a medium-term perspective as well looks on a strong footing.
Is ICICI Bank a buy for you today, Kush? Because we spoke about that ahead of its earnings.
I would wait upon ICICI just because the selling doesn't seem to be over just yet. HDFC Bank is slightly more preferred because it's got that base in place around the 1620, 1625 mark. So technically, from a very near-term perspective, slightly more constructive on HDFC Bank. ICICI Bank, I just want to wait out for a day or two, perhaps, to see if the recovery does indeed begin.
Okay, and of course, you'll see the numbers coming in tomorrow. All right, we're in time and set for market open, and expect a little bit of pain. You're going to see a range of consolidation for the next few days. Remember, ahead of budget, maybe no one wants to take any big positions. Some recovery yesterday was a relief, and look at that, a completely flat open. We can just be thankful that there's some green on the screen, which seems to be disappearing fast. Volatility in a small range is the name of the game of what you'll probably see on the Nifty. I'll pull up the mid cap and small cap very quickly just to see what the broader markets are doing and whether there's any sharper movements there. Nothing at all. This is a market which has pressed the snooze button, perhaps, at least in the opening session. Let's pull up the heat map and give you a sense of what is happening on the Nifty companies. BPCL on its numbers, a day after its numbers, seeing some recovery over there. On the other hand, Dr. Reddy's in a world of pain, nearly 5% down on Dr. Reddy's after their numbers have failed to really excite the street. You'll hear from the management on NDTV Profit at 9:30, so stay tuned for that. Apollo Hospital, Cipla, I think a lot of the pharma pack falling on the back of the Dr. Reddy impact this morning, perhaps, but more green than red on the screen. That's one good thing. Shriram Finance ahead of its numbers in focus, and we'll get a view from Parag Bhai and Kush on Shriram Finance after we come back on this opening segment. But you have what? The Adani pack also in focus. Adani Ports, Adani End up in the opening trade. ONGC also doing okay, but no big movers. Alex, no big movers except for Dr. Reddy's. taking a beating this morning.
Dr. Reddy's Laboratories, really one of the stocks to watch, of course, that we pointed out this morning on the back of the earnings. I would also like to pull up the sector heat map if we possibly can, because that, of course, early in the session we might see big moves late in the day, but it's more green than red on the screen. And right at the bottom of the list, of course, you have the pharma pack, probably led lower by Dr. Reddy's Laboratories. We'll talk about a couple more pharma stocks that are in focus, but you have a little bit of a spike on the India VIX. It's around that 16 mark, if I'm not mistaken, the last I checked. And oil and gas, of course, led by HPCL. We'll talk about that in just a bit. You have energy that's doing reasonably well. You have metal that's gaining about 0.5%, but again, no big moves on the sectors either. The Nifty Bank just about 0.2% higher in trade today. Let's see if that builds momentum over the course of the session. But let's talk about a few stocks, and I want to talk about the earnings that have disappointed first, just so that I can end this on a positive note. The stocks that have done not too well. Mankind Pharma, it's a miss on the earnings front. It's probably going to be down in the dumps. There you go. So 4.5% for Mankind Pharma. Dr. Reddy's Laboratories down in the dump as well. And you had a miss on the PAT number for Dr. Reddy's Laboratories, which is really something that the rest of the pharma pack will watch very closely as well. Cyient expects a degrowth in FY25. Another stock, this was on Tamanna's radar, and it was a downtick for her, or it was a thumbs down for her. It is clearly bearing the brunt of that outlook change. It's down about 9% as we speak. Syngene, another stock, another company that has changed its revenue guidance for the financial year ending March 2025, and this is a stock that is now down about 4.4%. Let's turn the page and look at the stocks that are doing well, or that have guided to better results or have performed better. Amber is the first that we're talking about. We spoke about it all morning, in fact, and it's up and about 3.5% or thereabouts. Very strong set of numbers for this company. V2 Retail, this was on Agam's list, and it's likely at upper circuit. We'll have to pull up the intraday chart to confirm that. Tejas Network also on my list. This is reported a profit in the third quarter as opposed to a loss in the comparable quarter, and so it's something to watch, but it's down in the dumps today, down about 8% or so. We'll have to look at the fine print. And finally, Bondada Engineering has gotten an order worth 450 crore rupees. It's up about 1.8%. Last stock on my list, of course, is HPCL. We saw BPCL yesterday, which disappointed the street, but HPCL numbers better than BPCL numbers. You've seen an expansion in the gross refining margins, something that is watched closely. And in a slightly muted environment, this is a better set of numbers than was expected, and so the stock is reacting positively. Tamanna.
Just a couple of more I want to mark. Emphasis for one, of course, the numbers is what is perhaps weighing in on the stock, 4% down, but also on a new segment heard on the street with my colleague Somit Sarkar. He spoke yesterday about buy flows in IT, but large HNIs selling this counter, and that's where we get you all the khabar from the markets. There are also multiple concerns like big blocks in the work. This is what we had reported yesterday. And of course, lower business from one of its large clients, FedEx in this case, is what is weighing down on Emphasis. So that's one to mark, and it's an outlier because the space has otherwise been good. Look at a Fintech. Fintech has had good numbers, and Fintech doing well in the opening session, 9% up, strong Q3 numbers, pushed by their mutual fund segment. So that is why you're seeing this. In fact, revenue from ops was up 32%. EBITDA also was pretty decent at 131 crores versus a 98 crores. Margins, of course, completely flat. Profit after tax was 90 crores. So you are seeing Fintech also moving up and about this morning. So two on either end that you should look at. But I wanted to talk about Shriram Finance because big set of numbers coming in. Shriram Finance, ICICI Bank, just in anticipation and what positions you can build. Let's talk about 1.5% up there. Any views there, Kush, that you want to start? And then what you are spotting this morning?
Sure. On Shriram Finance, we've seen some kind of a base formation activity around the 515 mark. The stock's moving higher, but I'll give it a miss just for now because the 545, 550 zone has been a resistance for the last week or so. You could see some supply pressure coming in. Also, just above that, you've got the moving averages, where you typically see some sort of resistance. So maybe beyond 560 kind of levels, this might just turn a buy with, it passing the first litmus test. So good moves, but I would actually perhaps use this as an opportunity to exit in the near term. Now, just to come to markets, while I can be very happy about, see, I told you so kind of a moment where the markets are up.
You live for that. I told you that you would say, I told you so.
Of course I do. Why wouldn't I? No, but I'll tell you what. Slight concern. Monday, 20th January, something interesting happened, and mildly so, which is the markets were up, but the VIX was also up 3.5%, and we saw the markets give away all those gains and then some more on Tuesday. Now, while the markets are up today as well, we're seeing that that consistency play out in the sense that markets are up and the VIX is also up. Hence, I'm going with a bit of a cautious view. I still remain bullish, as I had indicated in the morning commentary. I still remain bullish. Any dips, closer to the support zones on 23,000 on the Nifty, 48,000 on the bank Nifty, I will take that as an opportunity to buy. And hence I said that, perhaps this is from a very near-term perspective, a buy on dips kind of a market. So cautious but optimistic.
Okay. Cautious but optimistic, point taken. We haven't spoken about Interglobe Aviation today, and this is a stock that should be in focus, should be on your radar, of course, because it's going to be posting its numbers for the third quarter today. Also, it was in focus earlier in the week because of the passenger traffic data that came in for the month of December, where 8% increase in overall passenger traffic in the month of December. 64+% was the share that Indigo had in the domestic market, and so it's sitting pretty with 2/3 of the market controlled. But interesting update coming through overnight from Make My Trip, which has delivered a strong 24% year-on-year top line growth in obviously a seasonally strong third quarter, but that's certainly something to note. This is on a high base, remember, and so this augurs well for something like an Interglobe Aviation on the day of its results, and perhaps to a certain extent that is what the street is looking at very closely. Parag bhai, any view on Interglobe Aviation?
We don't have that in our portfolio, so I'll be very hesitant to give my view. Overall, of course, the industry is very consolidated, so I think overall in long term it should do well. But as I told you right now, and there is no caution here, and my top picks, thumping the table topics are ICICI, SBI, Axis kind of banks.
I love it. Thumping the table.
Yeah, Bajaj Finance kind of NBFCs, TVS Motors kind of two-wheeler name, and Ambuja Cement kind of cement stocks. Thumping the table buys,
So
no
please,
caution.
But you must thump the table.
Yeah, thump the table.
Okay.
No caution.
That's when it actually works.
Of course, with a disclaimer that everybody should have take advice of their financial advisors.
Yeah. Of course.
And all my views are personal. All my views are from medium to long term perspective. These are not for intraday
We put
trading.
that on the screen also.
Of course. No, just to your point on Interglobe, because the company will post. I think what could also be boosting it is the Make My Trip numbers which came in.
I just pointed that out.
Yeah, which is why it's helped. So you have that kind of a push coming in for the entire space.
Strong numbers on a high base, on a strong base of the previous quarter, which is what is perhaps working ahead of trade. And the consolidation remains the case, 64% being held by one company in the aviation space in the domestic market. I'd be more curious to find out how many routes on the international side they're adding and how they're going to keep customers happy, Tamanna, because people have said that they're not necessarily too happy with some routes.
No, but this is not a customer's market.
Of course.
This is there's too much demand. And this is a seller's market, aviation.
Yeah.
Flights are packed. They could be terrible quality, but you're going to stand in line because everyone is traveling and has to travel.
No
I mean,
doubt.
they could never be in a better place than there is. You can crib how much you want on social media, you're still going to book that ticket and go.
And pricing is going to be under
Through the
control,
roof.
63, 64% of market.
Yeah, completely. So in Interglobe, at least buy the stock. If you don't enjoy the flight, you might enjoy what that happens. These are some of the options you can say. Okay, just a quick word on Fintech Kush, which we've been tracking. Emphasis we talked about, some of the other movers that we're seeing this morning.
So Fintech, very good move, but this is more of a dead cat bounce, a recovery kind of a move. If you see for the last month or so, the stock's actually just fallen off the cliff from 1600 odd levels all the way down up until 1050. So wait up on fresh purchases, because this is more of, as I said, a dead cat bounce. immediate resistance close to the 1250 mark. So that's where it hit. It could hit a hurdle. Emphasis, on the other hand, is setting up rather nicely despite all the commentary that we heard, because the 200-day moving average also happens to be a good medium-term support zone near the 2750 mark. That's been held for a while now, and as long as that is held, the stock could, in line with some of the other IT names, attempt a recovery. So with a stop loss around 2750 for targets of 2950, and once that is taken out at 3100 kind of a level as well, emphasis from a medium term setup is turning out to be a good long term opportunity, or rather a medium term opportunity. Just a quick word, AIA Engineering was a stock that we discussed this morning as one of the picks. Stock is about 1.5% up, close to the first target of 3760, but if someone's not entered, they can still consider it for the second target of 3870. So AIA Engineering doing well, could very well continue to do so.
Let's pull up Elecon also very quickly, because numbers are out, and we'll wait to hear on the call. They have raised their revenue growth guidance as well. And Elecon not moving at all, but remember 11 a.m. is the call, so watch out for that. V2 retail, I want to see if it's doing anything. Numbers were good. Stock is on a 5% circuit, so nothing for you to say at all in this push, because nothing that can be done right now. But in this retail space, Parag Bhai, are you looking at a D-Mart, V2 retail? Are you looking at brick and mortar, or you think this is all Swiggy, Zomato ka zamana?
I think right now I have of course, I was very bullish on D-Mart at some point of time. Then we sold at a very good profit in our portfolios. But right now, as the space looks like, it looks like a space which has attracted everybody, and so there is an intense competition. So definitely, if within this we'll find some opportunity. But right now, at this space, we are not invested in any retail stock as of now.
Okay. Thanks so much, Parag Bhai, for that view. Dr. Reddy's Laboratories is something that we've been tracking all morning, and it's something that is reacting to results quite sharply. It's down about 6.4%. But what exactly is the street upset about? We've spoken about some of those aspects, but Varsha joining in to tell you about the key numbers. Varsha?
Thank you, Alex. So yes, the stock is under pressure on the back of earnings. We've seen weak set of core business what Dr. Reddy has given in Q3. Now, net profit has missed estimates. The double-digit growth in revenue that we are seeing, this is on the back of one-time milestone payment by US FDA of 120 crore, and growth was led by newly acquired their NRT business. Excluding that business, the growth would have been only 7.5%. We have seen the EBITDA margin contraction, which was led by low Revlimid, that is a cancer drug contribution, and elevated selling and distribution expenses. The India growth was led by vaccine portfolio from Sanofi, new launches and price increase. If you see that their US business actually degrew 9% quarter on quarter, but grew 1% year on year. But the higher volume in the US business was offset by price erosion, and the Q on Q US impact has been due to lower sales from the Revlimid, that is the cancer drug. If I were to talk about the brokerage views, let's see what Jefferies is saying on Dr. Reddy. So they've maintained, underperformed, they've cut their target price. According to them, Q3 was a mess on weak core revenue. That's what is upsetting the street, and also the higher S&G selling and distribution expenses that the company has seen. The underlying revenue growth moderated to 7.5% year on year according to them, and the weak US and core India sales offset was by strong performance in Russia and UK. Their selling and distribution spend to remain high in the near term as per the Jefferies. While Nuvama has buy rating with target price of 1,533, according to them the current valuation is at attractive levels, and Dr. Reddy's is preparing for the Revlimid fall that is going to expire. The patent is going to expire in FY26, and they're set to taper in H2 of FY26. They expect that it can retain large part of the Revlimid earnings, but the key product approvals remain critical. So these are all the brokerages that we have, and also the stock is under pressure due to the weak core earnings that the company has seen.
Looking into the business is 25% EBITDA and 25% ROC. So we're pretty much in line with what we had expected. And again, if you see what the organization is doing is basically, while growing the base business, also investing in the future businesses in terms of innovative assets, consumer health, and biosimilars. So in line with the investments that we continue to make while we drive the productivity on the existing business, we are able to deliver the EBITDA that's in line with the guidance that we have.
Give us an update on the Revlimid contribution. How was it in the quarter? And the street was expecting a slowdown here in terms of revenue recognition. So how was the Revlimid contribution?
So Revlimid continues to be meaningful for us in the quarter that has passed by. Of course, for the quarter, as you would see that the contribution from Revlimid is lower. In spite of that, we have been able to grow the business thanks to both the new product that we're launching as well as the volumes. So Revlimid has contributed and will continue to be meaningful for the next couple of quarters.
Any reason why the contribution has come down for Revlimid?
Nothing as such. No particular reason.
US markets, you've grown better than the base. At least the base numbers have grown well. Can you give us a sense of the kind of pricing environment that we saw in the third quarter? Because last quarter when we spoke to you, you said that pricing pressures are bottoming out. So what's the scenario as of now?
So pricing pressure continues to be moderate. And I would not say anything exceptional in the quarter that has passed by. Actually, the growth is driven by our ability to grow the volumes as well as the new product launches.
And how was the volume growth there in the US business?
So continues to be healthy.
Give us a sense of the Sanofi portfolio integration. Where are we on that?
That has gone pretty well. Thanks to the support that we have received from Sanofi and the internal capabilities that we have been able to nurture over the years of working with multinational companies and integrating the businesses to the core business that we have been able to actually integrate and grow the portfolio well. And I do see that this has contributed meaningfully to the India business.
And if you can give us an idea of the kind of contribution that has been added in the quarter from Sanofi alone to the top line?
So it has added a couple of 100 basis points to the growth of the business because we have both the base growth as well as the growth that is contributed through the in-licensing of portfolio. And Sanofi has definitely contributed meaningfully for us, for India. For the quarter that has passed by.
You did a major acquisition of the NRT portfolio, which is a nicotine replacement therapy business. Has it been integrated, and what kind of contribution have we seen in the third quarter?
So, if you would have seen, so this is contributed. So the integration has happened, and over the next several months, we would be having a phased approach in terms of how the business would move from current owner to Dr. Reddy's. So in terms of the contribution, it has contributed about 600 crores to the top line of the Euro business in the third quarter.
Sir, it's contributed around 600 crores, you said, but once the integration is fully done, what could be the contribution that will come into the top line from the NRT business?
So this is the current size of the business. You could expect that we will continue to have the integration in the other quarters as well. And currently the business is a single-digit growth business. And once the integration happens, we also expect to grow single-digit.
And how are the margins placed once that integration happens? Will there be any pressure on the margins, or will it be accretive to margins?
So it should be accretive to Dr. Reddy's.
Global generics, you've grown the US business by 1% YOY, but I think it's fallen 9% quarter on quarter. How do you see the business environment there, and what kind of growth there can you expect in 2025 in that market?
So what we had said as far as the US business is concerned, still holds good, which is you have the base business growth, which is where you have on the positives the volume growth, the growth coming in because of new products, and then you have the pricing pressure. So we should expect single-digit growth over there. And from time to time, what we should expect is upside story. We've had a couple of them in the past, whether it is Suboxone, Icopacent, currently lenalidomide, which has been a super upside. So single-digit growth on the base business and continue to work on potential upsides as they come along.
You did 3 launches in third quarter. If you can give us some idea of the kind of launches that's expected in 2025 or Q4 and fiscal 26.
So what we look forward for the US is anywhere between 15 to 20 launches. So I think the way in which the portfolio is shaping up, we should expect a similar sort of a launch as we move into the next year.
Biosimilars pipelines, it's a growing pipeline and you're investing in it as well. Where are we on it, and how do you see the progress coming in here?
So you would have seen that the last quarter we got the European approval for rituximab. We had in the last quarter done the deal for denosumab. We have filed a product both in US as well as in Europe. We continue to work on our internal pipeline. So at this point of time, it's a combination of our internal pipeline versus and complementing with the pipeline of our partners.
Sir, in Q3 we saw your R&D expenses coming off marginally to 8%. You've been in the 9 to 10% level. How do you see R&D expenses? Is it one-off that you have brought it down to 8%, or it's a it's a conscious call to moderate it at that level?
So we are investing. If you take our R&D, both in terms of complex generics, biosimilars, differentiated assets, we continue to invest because this is core to our growth. So I would say that maybe in a quarter you would have seen a little lower, but our investments into R&D continue.
How are you looking at the cash positions? Are you still open to doing for the inorganic growth, especially in areas where you see future growth coming in? And which are the areas that you would be looking at?
So definitely, I think cash position, as you know, we are on a positive side. So obviously, we have the ability to invest. BD is one of the growth levers for us, and our interest to invest largely would be India as a market. Apart from that, interest would be to look at opportunities to bring in more innovative assets, consumer health and biosimilars. So these would be the areas of any BD investments going forward.
In the emerging markets, sir, Russia has been, the traction has been good there. Can you give us some idea of the kind of growth that you see in the Russian market? And is it back to the pre-war growth or revenue rate?
So Russia continues to grow well, and what we've also seen is we've been able to work with partners, and we also have in that growth the products that we had licensed in from Novartis. So we do see that the market is growing. It's a combination of price and volume, and being a reasonably strong player in Russia, we continue to grow with our portfolio as well as our partners' portfolio.
And is there any payment issues which are coming in from Russia because of the sanctions?
No, I don't see any payment issues.
My final question, sir, on your Hyderabad facility, if you can give us an update on the observations, and by when do you see this getting resolved?
So you're talking about the facility inspection at CTO.
Yeah.
We have received the observations, and we have also responded as per the stipulated time.
And is there a timeline by when you see some kind of go ahead and resolution coming in from there?
We're expecting to hear back from the FDA.
So domestic market has been growing well for you. You've been growing ahead of the growth for domestic market. How do you see that growth happening in 2025 calendar year?
So if you take domestic marketing, it's been, let's say, driven by growing our existing brands, but also India being a focus point on innovation. We've also been able to license in and launch innovative assets and also bring in certain products which are required for the Indian market, which we had developed internally. The second area of growth is the consumer health, and you have seen that in the last quarter we have got the Nestle JV up and running, and then the third area would be in terms of digital therapeutics. So last quarter we have seen the launch of toripalimab. It is a product for a significant unmet need in nasopharyngeal carcinoma, significant improvement in terms of the progression-free survival compared to the chemotherapy today, and also a product that we launched in for constipation, Pixibat. So India will be two levers, I would say. One is continue to grow the existing business, and then on top of it, innovation in the form of innovative assets, consumer health, that should continue to drive, and our aspiration continues to be in the top 5.
What's the feedback that you're getting from on the Nestle JV? And are there any further launches that have happened from that JV?
So the feedback has been good from all of the stakeholders of two companies that are focused on bringing in innovative products for the patient's needs. There are several products that we have in terms of the pipeline to bring into the market, and we should expect more launches as we go into the next few quarters.
Sir, while NRT is currently focused in the European market, do you plan to bring those products to the Indian market as well?
So NRT today has got sales both in Europe as well as in emerging markets. There are certain important markets where it is not present, but we do have a presence. So we're obviously studying how might we consider bringing NRT into those markets.
So that's the management of Dr. Reddy. Is an interesting move on the counter because it seems that the brokerages have also turned cautious. 4.5% is the downtick. We've seen cuts in terms of target prices that have happened, and this is mainly on the back of the weak US business as well as weakness that we've seen in the India business as well. Very quickly, you have Nuvama who's gone ahead and cut the target price to a 1,533 from a 1,553. So not a major cut coming in there, but it's mainly because of the sequential dip in the US revenues and the rising competition that they've seen there. And you have a Jefferies which has maintained and underperformed, and if you see in terms of their target price cut, that is to 1,170 from a 1,210. And clearly what they have also indicated is that it's the rise in competition with regards to where the key products are concerned, on the back of which the company is bearing higher selling expenses. So that's the view coming in from the management of Dr. Reddy's and what brokerages make out of it as well. But moving on, let's hear a view coming in from Sanjeev Bajaj on the financial intrusion on the tech space and what's ahead straight from the World Economic Forum at Davos with Neeraj Shah.
If you try to think about inclusion, inclusion is about access, it's about affordability, and it's about transparency. The benefit we've had in India with the India digital stack is the government has created a whole set of public goods on the digital infrastructure. Look at digital payments. India processes now 16-17 billion digital payments a month, almost as much as the rest of the world put together. What that does for access is you can be a small store owner, you can be a guy with a push cart, and payments is no longer an issue. Look at now the account aggregator framework. I believe 120 million people have already signed up for it. We are one of the biggest users of it, where to a customer, you can give access to your bank statements digitally to a loan provider. It's no longer restricted to your own bank and their terms and their interest rates and their duration. And you can get banking products from anyone. So it opens up tremendously financial services to everybody and more importantly, the common man.
Several years back, we had demonetization and an attempt to move away from currency. It just seems now that willy-nilly we are getting to that stage when people transact more digitally than through physical currency. Going forward in the future, do you believe that that original goal of demonetization would in a sense be achieved in that we won't have physical currency, it will almost always be automated or digital?
Very much so, and in a much nicer manner, because you've not taken the currency away.
Right.
You've given a much better alternative that is easy, that's affordable. It's really no cost actually to the people. And this is the right way to do it.
Let's talk a little bit about our digital backbone, because a lot of what you do has to do with the progress of 5G across the country, smartphone availability. Are we gradually overcoming the digital divide, by which I mean some people who are literate who can use smartphones and many who can't use smartphones, who are not literate enough to use it? Are we getting to a stage when we are overcoming that?
We are very much moving into that direction with a number of additional supporting features. One, today if you go to our app, it's available in multiple languages. Our communication with customers is today in 17 to 18 languages. We've recently been working with some of our top technology partners from the West on the advanced use of AI, including Gen AI. And while they have a couple of languages ready, what they've done is they've built ports where we know a number of Indian startups are working on individual languages, and you can combine the two. So ease of access, whether language, whether by using visual tools, a lot of our promotional data is now all digital.
Right.
And if I were to see the last 6 months, nearly 80% of our digital marketing is AI enabled.
Right.
So what's happening is access is improving, easy to understand, costs are coming down as well. So when you look at the digital world and the various elements to it, but all of it put together is making a big positive difference.
Beyond chatbots, how are you embracing AI?
So let's look at it on the marketing side. As I just said, our digital content, 80% of it, end to end, the AI tool is creating.
Right.
The human just confirms that there is no copyright issues, this, that, and some. There is still some noise, but that's one. Second, we are now, so we do about 4 million loans a month in Bajaj Finance, give or take a little bit, right?
Yeah.
We have a pilot running for the last 12 months where there is an AI tool that for customers that want loans and say that have contacted us through various channels, will call them in English, Hindi or Hinglish, talk to them and sell them a loan if they meet our requirements, negotiate pricing, negotiate tenor. It's a completely artificial tool and you can't realize that it's not a human voice. Of course, again, we have people watching to see are there mistakes, are there errors. But let's not forget that the call center person calling is also making errors.
Right.
On the service side, in the same manner, we've got, but there it's human assisted because on service, these are existing customers. We have to be 100% right. So, but we again using AI over there. So whether it's productivity, whether it's revenue, we are clearly seeing use cases across.
I was always curious to know, given the number of loans that you process every single month, huge numbers, and these are small consumer loans in many cases, is your recovery of the loans efficiently done? We have a certain element of notoriety in our country for larger loans, recovery of loans, people paying back loans not taking place. Is this a problem that you confront with small consumer loans?
Overall, no. Our loan losses have been steadily over the past decade below 1%, very often 60
Is it decreasing?
70. In the last 12-18 months, as RBI had also flagged on certain unsecured small value loans, it had gone up a little bit. It is.
So that's Sanjeev Bajaj at the World Economic Forum. But moving on, emphasis, revenues and profits in line, margins above estimates and healthy deal wins. Let's get your conversation with the management as what worked for the quarter gone by and what is expected going ahead. Listen in.
I think, again, firstly, very pleased with the performance of the deal wins in the quarter. We've been building up the pipeline over the last few quarters to kind of convert. You're absolutely right. A bunch of uncertainties have obviously been addressed over the last 60 to 90 days. U.S. elections, outlook on economic environment is pretty stable. We're definitely very much in the soft landing camp. We've seen 100 bips of short-term interest rate cuts. Of course, there is some uncertainty around inflation outlook and what that means for cuts, further from here. But I think all in all, with the recent, improvement a little bit in the geopolitical environment, definitely seems like there is confidence back with customers. Earnings have been pretty strong, especially in the banking segment in the US, as we've seen over the last 2 weeks. So in a good environment to continue to originate opportunities, and we've seen some pickup in closure of deals linked to some of that confidence coming in. Very excited about what 25 will bring in terms of conversion further, because as you've seen in the numbers, pipeline is also up about 50% year over year.
Sure. Arvind, coming on operating margins, what can you tell us about the impact of pricing of deals at the moment in the current environment, the impact of the rupee movement against the dollar, and several other factors? How do all these elements come together in terms of your expectation in operating margins going forward?
Sure. So I think we came in at about 15.3% operating margin for the quarter, which was about a 10 basis points drop on a sequential basis and about 40 basis points increase on a YOY basis. So we've been executing very strongly on operating margins, right? So we have a lot of puts and takes in the quarter. It's typically a weaker quarter because of furloughs, but we had a lot of operational efficiencies. Our utilization went up sizably YOY, right? So, we've been doing a lot of non-linear revenue growth because our headcount has largely been static or dropping mildly, but we've still been starting to grow revenue, and that is kind of playing out, right? So to that extent, I think we are comfortable with the margin range we had talked about historically at about 14.6 to 16. We are bang in the middle of it. And I think we are quite comfortable to operate within this range.
Right. Nitin, there's also curiosity around FedEx now that that contract comes to an end for Mphasis. What could potentially be the impact here? And, is there any way by which we can actually see the revenues fill up from other sources?
Yeah, I think it's probably not appropriate to kind of pick an individual customer conversation around, the earnings around event. So what I'll say is, if you look at the overall performance, if you look at the earnings commentary, the outlook, I think it's kind of comprehensive view of where the business is headed. And we'll continue to execute as best as we can across all verticals, all customer segments.
But is there a possibility to have them back on board soon?
Again, as I said, right, we don't typically want to discuss individual customers, whether you indicated certain names, but from a company standpoint, we'll continue to focus on our portfolio of business. And we've neither, talked about it in the past, and we definitely don't want to start that trend today.
Sure, I understand. Arvind, can you come in on the banking financial space at the moment, the current environment, given the fact that, at least there is speculation that it could be an inflationary one, which is why we are potentially expecting interest rates not to correct dramatically, even though the President Trump has suggested that he wants interest rates to follow. What can you tell me about this?
I think we had a very strong growth sequentially in our quarter, right, which has furloughs in BFS. I think we were probably the first to call out the bottoming and stabilization of the BFS space. And I think our performance has been very consistent with our commentary. I think we've been seeing pickup in incremental spends. A couple of the large deals that we announced in the quarter were BFS. So I think we are seeing momentum. And it's in line with our expectation. And I think we need to wait and see, right? I think obviously there are divergent commentaries, and today there was commentary around interest rates falling, and I think we need to watch. But I think in general, I would say we are reasonably optimistic on BFS.
Sure. Nitin, what's the way forward in terms of FY26 as we move into the new financial year? What are the areas that Mphasis is going to look to focus into?
I think a little bit early to call about FY26. We still wait for client budgets to get a little bit, more clearer. As I mentioned, I called out a few things that are definitely, better today in terms of the environment, especially around, election uncertainty having taken, a good outcome. From a market's perspective, the belief is that we will see renewal of some of the tax cuts. In some shape and form, we'll probably see a more benign environment when it comes to interest rates. So I think the way we are focusing and positioning is as I mentioned, fairly forward-leaning on continuing to make investments around go-to-market, around our AI platforms. And I think the themes that will continue to play out will really be around a combination of efficiency using AI combined with the ability to drive transformation using AI as well. So very focused on those themes. We'll continue to drive opportunities. We have, as I mentioned, a very strong pipeline, up 50% year over year and 23% just quarter over quarter. So I think at this point, all the focus in the company is to continue to drive deal conversations, conversions, and as we convert pipeline to TCV, TCV to revenue, pickup in growth is definitely what we are focused on.
Right, a final question, Nitin. There's some sort of speculation in the markets where we're expecting Blackstone to sell further stake in the company. Has there been any indication from the promoter towards the management of the company so far?
Very difficult to answer that question because firstly, it is not something that the management drives. Secondly, public company shares are exchanged on a daily basis. At this point in time, there's nothing to call out. As we have better understanding of where the promoters are headed, I think they will probably inform, with the right disclosure. So at this point in time, nothing to call out. We are focused on executing our business, driving, as I mentioned, value to our customers, and we'll continue to do that.
They say fortune favors the prepared. The more prepared you are using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
I present the budget for a historic
the mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims.
Welcome back. You're watching India Market Open. Clearly, we've now moved into the red with 32 declines versus 18 advances. 23,147 is what you're tracking in terms of Nifty 50. So near the day's lowest levels as we speak right now. Let's pull up Bank Nifty as well. 200 points cuts is what we are seeing. 48,370 is the level we are tracking, and that also is seeing selling pressure in today's session. Overall, let's pull up the mid cap and the small cap index, because clearly, Agam, if you see in terms of the way the markets are, I mean, there is not much of positivity, and any earnings that come in, even a slight bit of the negative, the stock gets beaten, beaten down.
Yes.
And that's the aspect that we've been picking up across sectors. I mean, it's not really relevant whether it's only the BFSI space or the IT space. Across sectors, whether a mid-cap company or a large-cap company, you are seeing that pressure comes in on the back of the negative news. But let's look at Adani group of companies. They have been on the brokerage radar. Investec is bullish on Adani Green and Adani Energy, while Adani Power is on Ventura's watch list. Mika joins us with more. Mika, what are the reports indicating?
We actually had Adani Green Energy and Adani Energy Solutions post their net profit results yesterday, and we've gotten the Investec notes post that. Up first is Investec on Adani Energy Solutions. They maintained a buy rating at a target price of 1,352 rupees, which implies a 66.9% potential upside. Revenue was driven from newly commissioned projects as well as higher energy sales. The EBITDA growth was on strong revenue growth, treasury income, and steady regulated EBITDA, and the distribution loss at AEML has also been improving consistently, and the under construction pipeline stands strong at 54,761 crores due to the boost has come up after 5 new project wins during the year. On Investec on Adani Green Energy, they've maintained a buy rating. Target price is at 1,030 rupees, which implies a 114% potential upside. Now, the muted revenue growth that we've seen this quarter was because of lower EPC revenue sales that offset the higher energy sales. EBITDA, however, is up 9.5% due to better operating performance, and profits were aided by 24% lower interest costs and lower tax expenses. The company added a total of 425 megawatts of capacity in Q3, and the renewable energy capacity now stands at 11.6 gigawatts. And the key milestone that has been mentioned by Investec is the PPA signing with MSEDCL to supply 5 gigawatts of solar power for a total of 25 years. And then lastly, we have Adani Power. Ventura has maintained its buy rating with a 24-month target of 806, which implies a potential upside of 55%. Now, enhanced coal availability and business expansion is what's fueling growth for the company, and Ventura notes how the company is committed to future growth via continued investments in thermal capacity. It is not shying away from this area of power generation despite the focus on renewable energy, and it is strategically positioned for robust capacity expansions to address the growing demand needs. And it's also mentioned that the company has manageable net debt of 30,985 crores, which supports Adani Power's balance sheet strength.
Right, Mihika, thank you so much for getting us all those updates with respect to those Adani Group companies. But there's yet another stock which is in a free fall today, and that's Sand, even as we see higher costs weigh down on profitability. We have Rucha who's joining us to tell us what's behind this sell-off. Rucha.
Yes, so Cyient has been tanking in trade today on the back of its third quarter numbers. Let me talk to you about numbers first. Revenue actually up by 4.2%. Margin came in 11% versus 12.5% last quarter, but net profit down about 32% in trade. But apart from numbers, what is actually causing the stock to tank is the FY25 outlook, which the company has been bearish about. So they have cut their FY25 guidance from a flattish kind of growth to a degrowth of around 2.7% YOY in constant currency terms. In terms of margin, they expect the exit margin for FY25 to be in the range of 13.5%. Now, this is primarily because of shifting of revenue trajectory within a year. Now, the other highlight for the company is that the CEO, Mr. Natarajan, has resigned from the company with immediate effect. So, these two are major causes of the free fall in the stock price today. While other highlights are that the company, had an order book intake of about $312 million, up about 5% YOY. They also won 13 large deals with a total contract potential of around $235 million. So the deal pipeline generally looks healthy, but the guidance has been cut. And the company in the call also mentioned that this year, the exit year for FY25 might not be good enough, but they look out for opportunities in the Q1 of the next year. So this is what we have on Cyient. Cut in terms of guidance and management resignation is what is causing the stock to tank down.
The stock is down almost 18 to 19% in trade, and it was interesting to see how all your mid-cap IT companies were on tear in terms of yesterday's session, the likes of Azenza Technologies. You had Persistent System as well that reported numbers. So these few names did see a good run, but today you're seeing some bit of selling pressure that is coming in. But moving on, with just 7 days to go for the union budget, NDTV Profit has been on the ground asking citizens about their expectations this time around. My colleague Haripriya spoke to some students about what they're expecting from the finance ministry in terms of the education space. Let's listen to that.
We are here in Bengaluru and we are here to understand what does the state of Karnataka expect from the central budget that's upcoming. We have multiple stakeholders in the industry and from the commerce body in the city here. We'll understand what are the requirements that they're looking for in this time's budget. Tell us what are the expectations like.
So as FKCCI, we have across about 6,000 members across the state of Karnataka. Most of them are small entrepreneurs. And if you really look at it, Government of India's Udyog Aadhar clearly states that 95% are the micro enterprises and 4% are small entrepreneurs. If that be so, the focus needs to be on the micro and the small entrepreneurs. So we have 3 important points that I would like to share about. One is, of course, the MSMEs. We want a separate policy for the micro and small entrepreneurs. So an MSE policy is what we are looking at with 3 focus areas. One is, of course, infrastructure. Infrastructure is really important both for the startup and the growth of micro to small entrepreneurs, and that means plug and play infrastructure that is needed. The state governments itself won't be able to manage it. I think there is a lot of support that is needed from the central government for this activity. The second is, what is important is, yes, there is a lot of focus on digital, but we really do not have a B2B platform for the small entrepreneurs. We do have GEM, but GEM is only linked to the PSUs as per the public procurement policy, and we have ONDC for the retail entrepreneurs. But what about all the small entrepreneurs across the country? How do we get them all connected on one single platform, and that no state can take it upon, and it has to be the Government of India. The third, and something which is very important, is also the ease of doing business for small entrepreneurs. Why do I say ease of doing business? Labor laws, PF, everything can come onto one platform so that it helps them to focus on their core business and not on compliance issues, which should be much more easier. And I would like to add additionally, the women entrepreneurs. Being a woman, particularly as an entrepreneur, I would like to say that there is a larger need of focus. Yes, there are these small schemes or subsidies. How do I get more women into the economic chain? And that means a lot of support is needed to associations and of women entrepreneurs who can help build capacity to reach out to more women entrepreneurs. Don't expect the government to do it, but is there a way in which you can help women entrepreneurs to be part of vendor development or vendor supply chains of PSUs and large corporates? So that's something which I'd like to share. Thank you.
What are your expectations, sir?
We expect from the traders' perspective, from the FKCCI, that the ease of doing business in the budget, though the union budget always speaks about ease of doing business, practically there are a lot of issues in the, say, TCS, where I remit the amount, my purchaser or the deductor will get, again he has to claim it. But government is not getting anything out of that, because as of now I am no dues for the income tax. But why they should arm twist me in all these compliances, especially in the 45-day payment schedule which the government last time introduced. Industry side, manufacturing side, I do agree, but they should exclude some of the say food items like essential commodities, where the trading takes place between two buyers and sellers, where there is no manufacturing at all, because we are a trading community. So that is one. After all, it will come from a reprocessor. That is what the ease of doing business. And the third point which I stress is that any licenses, the portal accepts the fees. The portal accepts whatever the amount we carry and give it to. But when it comes to take the certificates or queries which we ask, unless we see the officers, it is not being. But so there is corruption. So government should pay the use per, because ease of doing business, unless we make hassle-free business, because he has to spend more time on the business rather than going to the offices. That is from all departments, I am just saying. And coming to Bangalore, I request the present union government to allocate more funds for the public transport system in Bangalore especially, because state government is talking about tunnel project, metro projects, new buses, and more flyovers which can connect and decongest the city, so that, because Bangalore as per is a global hub, so we at par from 10-15 years we have to gear up so that more funds for tunnel projects, irrespective of whatever the party it may be, they should provide funds, because Bangalore is going to become much more faster growth for economy also, and also population will carry. So we request for public transport more allocation of funds for Bangalore.
Yeah, Bangalore is a startup hub. The last budget, government has amended the angel tax for the subsequent years. We urge the government, it has to make it retrospective effect, because startups are started, again they are putting into disputes. It will again demotivating the startup companies. So that is for the taxation angle. Infrastructure angle, the Bhadra project, they announced already 5,000 crore rupees, but still they have not started implementing. If they delayed, the again cost of implementation will get more. And coming to the infrastructure, smarter upgradation to in a smarter way of our airports and rails, because if they upgrade to smarter ways, that will reduce the logistic cost, and especially the railway projects. Karnataka needs more upgradation, and there are so many projects in North Karnataka especially, they have not yet completed. When I am in child, I am hearing the Kochi-Bagalkot rail, still they have not moved from 50 kilometers. That is very disappointment for the people who are residing, and they wanted to connect to other side. So like that, if we connected very well, definitely our industry and business will grow more, and it will help with the economy and majorly unemployment, and moving from the one city to another city, because Bangalore is now more crowded. That has to be that has to be balanced. And one more request for the central government, they have to increase for the metro line to the second line city like Mysore, Hubli, Gulbarga and Mangalore, like that. So again, it will increase the efficiency of logistics and public transport.
With Bengaluru and more specifically Karnataka in the broader sense as well being the center for the startups, the trade hubs and multiple businesses, people here ask for better implementation of policies, a change in the MSME policies, ease of doing business, more focus on the northern Karnataka regions, and looking for infrastructure development in terms of public transport and multiple things like roads and airports, and multiple other requests that people have put in ahead of the budget.
All right, and with that, we have Subhana, who has an update from the Reserve Bank of India on the proposal of LCR norms and liquidity coverage ratio. Subhana, over to you.
Hi. Yes, so actually bankers are saying that, RBI has asked for all commercial banks to share the impact of LCR norms ahead of its implementation in April. Now, it's important to understand that back in July 2024, the RBI had introduced these draft norms on liquidity coverage ratio, which will come into effect in April. So a lot of banks had made representations to the central bank and to the government to, make changes to these draft norms, as this will have a potential impact on banks' balance sheets, given that liquidity is already, liquidity has been draining for these banks. And so hence banks have, they're expecting RBI to consider the feedback or defer these norms for that matter.
Okay, Subhana, thank you so much for getting us those updates. So that's the latest with respect to RBI. But a quick look at the markets, Hiral.
Absolutely. I mean, if you see in terms of the broader markets, that is what is interesting right now, because it's a lot of stock-specific action that you're seeing. If you see Nifty 50 is, if you see the broader Sensex as well, we're seeing cuts of almost around 150 points. In terms of the gainers, you have Jyoti Structures, which is up almost 7 to 8% in trade. Fintech, that stock is buzzing on the back of earnings. It's up around 5.6%. Raymond is an interesting one in today's session. Cyient, 19% is the kind of cuts. Tejas Networks is reacting to numbers as well. Paytm, let's pull up a Paytm on the screen. 7.5% cut coming in terms of Paytm. Syngene reacting to numbers as well. A 7% downtick. I think it's a bad day of trade for pharma majors on the back of numbers. But how the second trading part of this trading session pans out should be interesting from here on as well. But let's move on to our next segment, which is Talking Point. We have Vaibhav Sanghvi, CEO at Ask Health Solutions, joining in to talk to us about what's in store for 2025 as a year from here on. Vaibhav, good morning and welcome to the show. My first question coming to you is, clearly with the way the reactions that we are seeing in terms of Q3 numbers, stocks with negative earnings, even with the slightest of the negative aspect, are being beaten down right now by the markets. Taking the way valuations are, do you think expectations with regards to earnings growth needs to be trimmed down from here on?
Of course, and to be very honest, I think that would always be the case when you have extremely high valuations and any scope of disappointment. In fact, any disappointment, even though it may be absolutely marginal, I think it will take start to take a knock, when the risk sentiment in the broader market is not very conducive. So in this case, what we are seeing in terms of several names where there is slightest of disappointment, we are seeing more than proportionate reaction to try and see that from a longer term average multiples, it kind of moves towards that. At this point in time, it is kind of trading much higher, especially in the mid and small cap segment.
All right, Vaibhav, if I could just ask you about things global, from a global standpoint, and I reckon that this is to a certain extent pertinent for Indian markets. We've had a lot of noise with the US, the elections, the president, and all the sort of comments they're making. We have a different sort of an understanding, a very conflicting understanding of how interest rates could potentially pan out for the US. That brings me to the question that at the moment we have seen FIIs sell into Indian markets. Are we expecting any likelihood of them coming back anytime soon? And the reason why I ask you is because we want a better understanding of the valuations picture of whether or not we could perhaps see valuations go back to elevated levels. Of course, I know that you have already suggested that valuations are still expensive. Do you think there could be some sort of possibility, keeping global events in mind?
No, of course. See, when we talk about 2025, when I had written an article in terms of outlook for 2025, I clearly mentioned that 2025 is a year of government policies and reforms. And to be very honest, it's pretty anti-intuitive, purely because after 9 or 10 years of the current government, why am I talking about policy reforms and policies again? Now, in this perspective, I'm not only talking about India, I think I'm also talking about what's going to happen from a US government perspective. What we do expect is basically 3 or 4 things. Quickly, one is weaker oil prices. 2, I think in terms of corporate tax cut, which I think to some extent it's being talked about yesterday. 3, I think vocal exchange of views between the between the US government and the Fed in terms of interest rates. Lastly, tariffs is always the case. So in all, what we do think is that it's going to be US industry first, and precisely the reason why we've seen the last couple of months where dollar is kind of strengthening. And because of which also we've seen large part of capital is kind of moving back to US in terms of the record inflows to US as a market. My sense is basically this will continue to happen at least for some time, till the time we don't resume our earnings growth or probably stabilize our earnings growth. And from a valuation standpoint, I think we start looking, attractive, from a relative perspective as well. So let's wait for it. February 1 is going to be an extremely important day in terms of our policy direction and reforms. We'll wait for those kind of events to pan out and then take a call for the next 18 to 24 months.
So Weber, what are you advising your investors at the moment? Keep cash on the sidelines, or are you seeing any pockets where you could deploy?
See, we are a long short fund, right? And we have that flexibility of going into cash, waiting out, and taking out these kind of risk events completely from the portfolio management perspective. So we do these ahead of any big binary events like a budget or probably a credit policy or any event which has the potential to take the market either ways. We generally go in with high cash and probably high hedges as well. So we will wait out, wait for the events to pan out, see what is the outcome, and then analyze and redeploy. And that's the liberty we have, from an absolute return fund.
Okay, and going forward, I'm assuming that the approach will be a lot more bottom-up than it was. The question then is, in terms of your expectations for growth in FY26, have you tempered those expectations down as compared to perhaps 3 months or 6 months ago?
Of course, I think that the consensus is way higher, to be very honest, from an earnings growth perspective. While this year is likely to be a big disappointment from a total earnings growth, I think 26 and 27, I think the numbers are likely to get downgraded, as we kind of, go by. So we do expect that to happen. But what is going to be also important is that, when February 1 comes, the direction of the government in terms of capex versus consumption, or probably a combination of both. In fact, that will kind of determine what is the constitution of the market in terms of the movement for the next 18 to 24 months as well. We've seen in the last 9 years to 10 years, the government was laser focused on terms of capex, and because of which we've seen fantastic kind of performance where earnings also growth happened and also multiples kind of moved up or inched up in this whole segment, while consumption kind of lagging. So my sense is basically if we are coming from 2 quarters of suboptimal growth from a GDP perspective, it will be very important to see how the government kind of helps to pump up the kind of economy from here on in terms of the growth rates.
Weber, I mean, 2 events that we're watching out for, how the impact pans out is with Donald Trump that Agam was just talking about. You have the budget, which you mentioned as well. But apart from these 2, what else should be on an investor's radar from an impact perspective? Because clearly a couple of commentary that came in from President Trump was interesting, where he's clearly indicating that companies worldwide should come and manufacture their products in the United States or face tariffs. That's a big statement to make, because if you're looking at a manufacturing hub post-China, we were looking at India as China +1. Do you think this is something which could probably impact your export-oriented sectors as also?
See, I think if you see the last tenure of President Trump, I think what we've seen is this, constant talk about tariffs to the extent that it kind of helps them on the negotiating table and kind of arrive at a better trade deal. I do not expect anything away from that. We will continue to see a lot of talk about tariffs, but eventually I think it will, turn out to, have a trade deal which, probably is in slightly favor of US going forward. So, that's a pound of flesh they will try to kind of catch up. So America first is, of course, something which they will play on. But that wouldn't mean that the total trade environment from a global perspective is likely to be disrupted completely. What I do also believe is that while China is going to be an important factor going forward, also the interest rates, how they are panning out, and the Fed policy kind of actions, which will also determine how the global currencies and the flow of capital will also kind of move on from there.
All right. Okay, Weber, we'll leave it at that. Thank you so much for joining us here and talking to us here at NDTV Profit. Wish you the best. Well, with that, it's a wrap on this edition of India Markets Open. Up next, we have Ask Profit. Stay tuned in, and we'll be back in just a bit.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
They say fortune favors the prepared. The more prepared you are, using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
This January, the world will come together at the World Economic Forum at Davos to bridge differences because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single digit increase in cigarette taxes can be expected.
Hi, thanks so much for joining in. Happy Friday to you. This is Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vajrajani, and we'll take you through the next half an hour of trade. We've got, I'll tell you why, we've got a very important, very interesting interview lined up for you, and you'll have to stay tuned to find out what that is. We'll tell you in just a bit. For now, let's turn to how the equity markets are looking, and they're not looking too good at the end of the week. In fact, while the benchmark indices are trading with very narrow cuts of about 0.1% or thereabouts, and they have recovered from the low point of the day, the broader markets are looking a little bit weak at this juncture, and the market breadth and the texture very heavily tilted in favor of the declines at this juncture. You have the advanced decline ratio that has shifted quite dramatically from the start. And there are quite a few stocks in the mid-cap basket that are reacting to earnings that we should speak about. But of course, before we do, we should speak about the Nifty heat map. If we can, let's pull that up, because that will show you that the big underperformer is Dr. Reddy's Laboratories, which is down about 4.3%. Of course, on the other end of the spectrum, you see a few stocks that are moving, but not very substantial gains. The likes of ICICI Bank moving higher by about 0.6% ahead of its earnings. By the way, we had Parag Thakkar earlier in the day speaking about ICICI Bank and saying that it's a thumping buy at this juncture. State Bank of India was another stock that he liked, but it's down in the dumps today. It's not doing too well. Let's pull up State Bank of India as well. It's down about 0.4% or so. But the pharma pack and Dr. Reddy's Laboratories really is a big talking point at the start today. So is Syngene, interestingly, because Syngene is down over 6%. The results came in during market hours, but post-market hours you had a commentary by the management in a con call where they spoke about the outlook for current year FY25 being a little bit bleak. The entire pack under pressure. The least loss is 2%. So that's certainly something to talk about at the start today.
Absolutely, and some counters, let's start with something that's in green. V2 Retail, which is still locked in upper circuit. Good set of numbers. When the Q3 business update for the company came in, at that point of time also the stock was locked in upper circuit, I remember. For retail segment, the tier 2, tier 3 cities are really picking up, and which is why V2 Retail is benefiting. But Dr. Reddy's, like you mentioned, is taking the beat. Revenue is up 15%, but margins did slide to 27%. And net profit was hardly up 2%, and we're seeing a downtick of around 4% on that stock. Let's also pull up something like KFin Technologies. Revenue is up 32%, EBITDA up 33%. Margins have improved to 45%, and there you go, the stock is up 8%. IEX is another counter which did very well in terms of its Q3 earnings. Revenue is up 14%, margins at 85.4, slide in the margins, but net profit was up 31%, and there you go. It's currently trading near its day's lows, but it did see good gains in the start of the trade. Tejas Networks, Indus Towers are some counters which have also come out with their earnings. Emphasis, Cyient Limited. Let's pull up Cyient Limited and see what's happening there. In terms of its Q3 earnings, we saw revenues up 4%, but margins slid to 11%, down 17.8%, because net profit was also down by 32%. So, we discussed yesterday also, Alex. I mean, if the earnings are, even a tad bit miss in terms of the estimates or not aligning with respect to what the street was expecting, they are just seeing the beating, and especially when they are overvalued,
Yeah, and some of these are taking a beating even if they are more or less meeting expectations. Yeah. But I believe that the first caller that we have today is talking about a stock that did get beaten down earlier in the session. We'll put it up in just a bit, but let me introduce our guests for the day. We've got Asta Jain and Kushal Gandhi joining us this morning. Good morning to the both of you, and thanks so much for taking the time. Incidentally, Madhu is our first caller. She's calling in from Bengaluru. Madhu, thanks so much for calling us, and how can we help you today?
Sir, good morning, sir.
Oh. Okay. Hi, Madhu. Tell me.
Sir, Sir, Tejasvi Network, sir, I am purchasing for 1350, sir. 2000 shares, already 25% loss. What, sir, is fundamentally, tell me, sir, holding ourselves, sir, in the future, how, sir?
Metals, and that's a fair question, because if we can, let's pull up the scorecard for the earnings for Tejas Network. It posted a revenue of 2,642 crore rupees. That's a substantial increase versus the year ago number, and you have the margin that is coming as 14.1% in the quarter gone by. It posted a net profit of 166 crore rupees versus a loss in the comparable quarter. So what, Asta, is the problem with the stock? Because the stock is down 8%. What are the prospects? Because the viewer, the investor that is calling us, is seeing a substantial loss.
Yeah, hi. Good morning to all of you. See, I think right now, as you have also pointed out in the initial discussion, that valuations are now becoming the major concern for all the stocks, whether or not they are able to beat the expectations or surpassing the expectation. So I think that is the major concern right now. So I think till the time we are not seeing macroeconomy to be in the favor of our fundamentals, and especially the earnings outlook, these stocks can get beating up, continuous beating up. But I think there is no need to worry in the long term, because ultimately the fundamentals will play its own role. So my idea here is to stay invested in this counter. Yes, today it has given a sharp downside, but I think over the period of a time, definitely it will able to recover. So idea here is to stay invested in this counter.
All right, moving on to the next query, that is from WhatsApp. Ravi from Chennai is a long-term investor. He's bought 200 shares of LTI Mindtree, bought at 1,000 rupees a piece. And he's saying that considering the performance and valuation, I'm thinking of selling it and buying Nuvama or 361 VAM. Kindly share your input. Since he's a long-term investor, I'll come to you again, Astha. Is that the right strategy to adopt? Sell LTI Mindtree 200 shares and buy Nuvama or 361 VAM?
I think LTI Mindtree, definitely the results were not so much encouraging. And that is why we have seen the numbers. I mean, the stock prices numbers are not in the favor right now. But I think rather than going for buying Nuvama or any other counter, because right now what we are seeing that capital markets are not in good shape. So I think ultimately it will going to affect all the counters that are present or related to this sector. So rather than going with these counters, I think it's better to switch to the other counters in which Britannia has played a very, very good role. So there he can see, and in fact, one pharmaceutical counter, although it's a pharma counter and a mid-cap pharma counter, but we are positive on this counter, which is Jackson Pal Pharma. In fact, we have recommended it previously also. So Jackson Pal Pharma is looking good to us, and in the public sector bank space, UCO Bank is looking good to us. So I think these are the safe, places where one can hide right now, rather than going with any stock which is related to the capital market. Although I think right now LTI Mindtree is also not in a very good shape. But if anyone wants to switch, then we are recommending these counters.
All right, that's the view coming in on LTI Mindtree. Moving on to the next caller, Vinod Kumar from Bengaluru is calling in. Vinod, a very good morning to you. How can we help you?
Yeah, I want to know that Kotak Wabag shares, what is the target price for short term?
For short term, okay. You've looked at the charts already. I believe you're holding 300 shares.
Yes.
All right. I'll come to you, Kushal. Vatek Wabag, it's in a very interesting space. Water treatment is the space, and it's something that's really growing in a big way. In the coming years also, it's expected to grow in a big way. But how does it fare on charts?
This is a negative view on Vatek Wagba simply because the stock is topping out and it's formed like a 2B pattern, which gives you a clear indication that there's a change in potential trend reversal in the intermediate trend. And I think the stocks behave that way. The stock currently trades at a very critical levels at 200 EMA support. So my sense is that the selling pressure might sustain further once it breaches a 1300 mark. So I would recommend to sell his positions.
Your position is the call on Vatek Wabag. It's had a rough 1 month, and so have a lot of other stocks actually, particularly in the mid-cap space, also in the small-cap space. We've got Chandra who's writing in from Salem. I believe we've taken this, but I will still ask this. Tata Technologies is the name of the counter that they're looking for. Bought it at an average price of 939 rupees, and with a long-term perspective, if I remember correctly, Tata Tech took a little bit of a knock post its results. On the fundamentals though, would you hold for 3 to 5 years? What's the view, Asta?
I think that if Horizon is such a long term, then it's better to hold. But one more counter which is looking good to us in the IT space is TCS, which I really forget to tell in the earlier query also. So TCS in the IT space is looking very good to us, although it may see some sort of slow movement in the stock prices. But I think over the period of a time, it is well poised to go to the level of 4,300 to 4,400. So if anyone wants to go to any other counter, so I think TCS is also a very good choice. So rather than Tata Technology, if anyone can partially exit from this counter, then one can enter into TCS as well for the potential target of 4,400 to 4,500.
All right, so that's the view coming in on TCS. But moving on to the next counters, there are two counters that I believe Professor Prakash wants to ask about. REC is one counter and PFC is the other counter. He's holding 4,000 shares of REC bought at 126 and 900 shares of PFC bought at 300 apiece. He's a long-term investor and he's saying that he's still accumulating them. He wants to know as to what should be the next course of actions. Should he stop accumulating now? What should he do, Astha?
REC and PFC, both these counters are good for accumulation purpose. And when the budget is round the corner, then definitely these counter hold their own importance. So right now, our stance here is, yes, one can make a accumulation strategy for both these counters because we are expecting the budget to give a move to these counter. So yes, one can accumulate both the counters, that is REC and PFC. For REC, our price target is somewhere at around 480 to 490 odd levels, while for PFC, our target is around 450 odd levels.
Okay. By the way, what I was talking about at the start, if you did tune in, I said that there would be an interview that you should wait for, and that is lined up for you around 11 o'clock. You're seeing that at the bottom of your screen. In fact, Hardeep Singh Puri, who's a petroleum minister, is going to be speaking exclusively to your channel. And I think that it's an important context right now for him to be speaking. Just overnight, in case you caught the news, and we were speaking about this morning, Donald Trump making quite a few statements with regard to oil prices, and he's saying that oil prices should come down, and if it does come down, then it'll resolve quite a few geopolitical situations, particularly the war in Ukraine. Of course, oil prices did come off just a tad bit, but 77, 78 is where Brent is currently trading. It continues to trade at that level. But it'll be interesting to see what Mr. Hardeep Singh Puri has to say about India's own strategy about imports of oil and what the outlook is going forward. You can catch that interview very close to 11 o'clock. I believe we've got our next caller. We've got Suneet, who's calling us from Uttar Pradesh, and it is on gas stock. Suneet ji, namaskar. आप क्या जानना चाहते हैं? Suneet, आवाज आ रही है? Okay, he's not responding. We will go back to him at another time. We've just taken a question on REC and PFC. It is a purchase. Let's take the next one, Scient. In fact, I would like to take a fundamental and technical view on this one, just as an exception to the rule, because it's really getting battered in trade today. 18%, and this is the outlook, if I remember correctly, is not good for the current financial year. We've got Sumesh from Kerala who's bought at levels of 1,760, and so that's turning out to be elevated levels. Asa, you've probably seen the earnings snapshot and also the commentary from the management. What would you do with this?
yes, when management, first of all, the CEO resignation was there, and secondly, even the management has cut down their revenue guidance. So definitely, I mean, hammering from the all sides, and that's why we are seeing the stock declining towards the southward direction. What we believe that in such a scenario, one can in fact make a strategy. If one can want to take risk, then they can remain invested. Otherwise, partially exit is what we are recommending on this counter, because ultimately, when the cut in the guidance is there, definitely it shows that the revenue and the profitability will not be that strong in the coming quarters as well. So we are not very much positive on this counter, recommending a exit, or if anyone cannot take the risk, then partially exit. So this is what we are recommending for this counter. We are not recommending hold on this counter.
So it's a sell, unfortunately, and I'm so sorry, Sumesh. We wanted to take this yesterday, unfortunately couldn't. But then the best advice possible at this juncture, Kushal, it's a sell on the fundamentals. What's the best level? At this level, would you say is an exit?
So definitely exit. I mean, looking at the price action just from April, I mean, it confirms the distribution pattern with a breakdown today. And again, it comes with the highest volume recorded for the year. So that's quite some heavy selling pressure going on. So my sense is to just avoid exited positions at the current market price.
Okay. Apologies. We've got, okay, so clear exit on both sides, technical and fundamental. Bear that in mind if you hold Cyient right now. Zenith is calling us from Bengaluru. I love your name, Zenith. Please go ahead. What's your question?
Thank you, and good morning to everybody.
Good morning.
I'm holding Angel One share, 145 shares at the price of 2813.
Okay.
And I'd like to know whether I can keep it as a core portfolio stock, because after recent quarterly update, it went in a downward trajectory. However, all the fundamentals checks perfectly. I think it just comes second to grow in terms of active user base, which is 76 lakh and 5 crore plus downloads. Only Grow has more than this. And it has a very good rating as well of 4.4 across 14 lakh reviewers. And all the fundamentals looks good, ROC, ROE, and the management commentary also looks promising that they are going to invest more into AI to make it more robust. I know there's, due to SEBI guidelines, we see some, corrections. But how far will it go, and whether I can blindly keep it?
You shouldn't blindly
Not literally.
You shouldn't blindly
Not
keep
literally,
anything.
though.
Yeah, I got it. You shouldn't blindly keep anything. But Zenith, it's clear that you've done your research, and it's a fair question to ask. But perhaps, just like Asta was saying earlier, it's a question of valuations. Asta, you spoke about the capital market plays and the fact that some of these are taking a bit of a battering. Angel One, what Zenith's saying is absolutely right. They've made very big strides in getting customers, and they've moved to that platform fee-based model, right, or fixed fee-based model, which seems to have done particularly well for them on the fundamentals. But would you hold this in your core portfolio?
So I would like to hold it in the core portfolio, but here one should remain, very much, vigilant of the fact that 1 or 2 quarters is it's a minimum time, frame for which this counter can be kept, because we are expecting, and in fact, management has also said in its guidance that they really want to wait for 1 or 2 or more quarters. Although whatever fixed expenses this company has to take, they have already taken care. So I think 6 months down the line, definitely whatever steps they have taken, that will start yielding in the results. And on the same side, we are expecting that in fact H2 of the calendar year 25 will be a better one for the capital markets. So all in all, yes, one can keep the stock in the portfolio, but here the time frame should be more than 6 months.
That's the view coming in on Angel One. Moving on to the next caller, Vijay from Vizag is calling in. Vijay, a very good morning to you. How can we help you?
Yeah, good morning, ma'am. So, I'm Vijay from Vizag, Andhra Pradesh.
Right. Go ahead with your question. Yeah.
I'm tracking this Ratnavir PGM engineering. Yeah. So, my query is it right time to buy, or one to wait for some time?
Okay, when you say you're tracking, are you tracking it on the charts or with respect to the fundamentals of the company?
Charts and fundamental also.
Okay, so I can get you one of those views. Which one do you want? Do you want a fundamental view from Astha or a technical view from Kushal?
Fundamental and valuation I need.
All right. Asa, I'll come to you. Ratnavir Precision, if that's under your coverage and if you've tracked the company.
Yes, first of all, want to make aware that the results will be announced on the 28th January. So definitely one can wait till those, time, because I think in this kind of environment, when the results are really showing strong impact on the stock prices momentum, one should really wait for at least results to come out. So on 28th January, they will be declaring their results. In the past, the performance was extremely fine because in the past quarter, they have shown the bottom line growth of more than 50%. But we don't know how this quarter will be. So my idea here is to wait till the results and then again give a call in the same show and just take the decision.
All right, so that is the view on Ratnavir decision. Supreme Industries, Sandhya is asking, should it be...
All right, I believe that there's some issue with Alex's audio. We'll fix that. Supreme Industries is the next counter. Sandhya from Mumbai wants to know whether, what's the next course of action? Will it fall more going forward? 1 month it's fallen over 17%. Kushal, your view with respect to Supreme Industries?
In the view, I mean...
Kushal, I think you're on mute.
Oh, no, I'm not on mute. Am I audible now?
Go ahead.
Yeah, am I audible?
Yes.
Yeah, so it's just confirmed a breakdown pattern today from an inverted cup and handle. So I believe the bearish implications might persist further. So it's best to avoid, sell your positions.
All right, so that's the view coming in on Supreme Industries. Moving on to the next caller, Nirmal from Chennai is calling in. Nirmal, a very good morning to you. I believe you have a query on Bikaji Foods.
Yes, good morning to you and a very good morning to Alex as well. Good morning. So my query is on Bikaji Foods International.
Okay.
So I bought it for, my average is on 790 a piece. So my query is if it is still overvalued or if it is taking a beating because the whole market is, volatile.
Right.
And I also want to know if I can average it down now.
Okay. So, Nirmal, I just wanted to understand as to, what was the reason behind buying Bikaji Food? Like, what did you see? You saw the charts and entered the counter, or you saw the fundamentals of the company?
I think the fundamentals of the company when I bought it was pretty good. The balance sheet was looking good as well. And I heard some good expansion plans from the management as well. So I thought it was a good time to buy that stock.
All right. Asta, I'll have to come back to you again, Kushal. We'd have to keep you waiting. A lot of fundamental queries today. Bikaji Foods is the counter. How does it fare fundamentally and what is the valuation picture?
First of all, want to talk about that. On the consolidated price to earning basis, it is quoting at a price to earning multiple of 59. That is around 59 to 60, 59.86 to be very precise. So now this valuation seems to be little high when I compare it to the industry price to earning multiple, which is less than 58 or 59, at which this company is quoting right now. So yes, valuations are high. Secondly, in the last quarter, the results were good. But we really need to see how in this environment, the company is able to maintain their margins, able to show some volume growth, because what we are seeing that the other counterparts are not able to perform on those fronts. So right now, idea here is to stay invested. Let's see the results and then make any move in this counter. But it is a good long-term story to hold on. In the short run, maybe higher valuation. And if results will not come up to the mark, then definitely the stock will get a denting because of the higher valuation. So right now we have to just wait for a result. That is what we can do. Hold as a recommendation from our side.
Hold is the view on Bikaji Food. Suneet had called us earlier on the session. We couldn't get through to him. Suneet, namaskar. आपका सवाल क्या है? सुनीत, सुनाई दे रहा है?
हाँ सर।
हाँ बोलिए, क्या सवाल है आपका?
सर मेरा सवाल ये है कि मेरा गेल फंसा हुआ है, आपने देखा होगा।
238 पे लिया आपने?
हाँ सर।
तो क्या जानना चाहते हैं?
सर ये अभी होल्ड करना है कि क्या करना है, समझ में नहीं आ रहा है।
आपका टाइम फ्रेम क्या है? आपने लॉन्ग टर्म के लिए लिया था ये?
हाँ सर, लॉन्ग टर्म के लिए लिया था, लेकिन सर काफी लॉस में अभी जा रहा है ये।
जी, मैं समझ सकता हूँ। तो मैं फंडामेंटल बेसिस पे आपका सवाल पूछता हूँ। आस्था, ऑन द फंडामेंटल्स, वुड यू होल्ड ऑन टू गेल व्हिच हैज बीन बॉट एट 238 लेवल्स?
So today I'm informing more to the viewers that the result date will be 30th January. So now definitely we will wait for the results. On the fundamentals were really good when we have seen what the results were there in the last quarter. But now what we are seeing that the crude prices are not able to show that sort of a momentum, and daily we are seeing some sort of commentary coming on that commodity. So I think that is what it is making this commodity a very or this stock a very volatile one. But there is no harm to keep invested in this counter till the results come. So idea here is to stay invested in this counter. 30th January will be the date when the results will be announced. Afterwards, again, investor can give a query. Give a call in the show and have his query again.
Okay. All right. Subhavel is calling us from Tamil Nadu, and an important stock to ask about, Ujjivan Small Finance Bank. Subhavel, you're holding a very large quantity. What do you want to know?
Hi, good morning, Alex sir.
Good morning.
I've been holding this stock from the price of 40 at average. So just wanted to know if I can hold it because I got the result yesterday. So I just wanted to know Akasa's view on
whether to hold on the fundamentals. Yeah, I got it. And it's important because it's not really done well on the earnings performance, right, Subhavel? So let me ask Asta. Asta, on the fundamentals, this is a bank that is, or this is a small finance bank that is aspiring for a universal bank license, but the way things are going, fundamentals not looking very strong?
Yes, right now what we were expecting out of the numbers were not that up to the mark. So that can be one of the major reasons we have seen the stock has shown a strong beating after the result announcement. So at this point of a time, fundamentals are not in a very good shape, but I think there is no harm to keep it in the long-term holding, because going down the line, maybe 3 to 6 months is the time horizon which one can keep in the mind and stay invested in this counter. Because what we believe that during coming quarters, because whatever pain we are seeing in the number, that is the story of last 2 quarters. Coming quarter should be a better one for this counter. This is what we believe. Stay invested in this counter.
Well, I hope this answers your question. Thanks so much for calling us. And Asta and Kushal, thanks so much for joining us and answering all the questions that you did. But it's time now to slip into a very quick break. On the other side, the interview that we promised you at the start, the exclusive chat with the Oil and Gas Minister, Hardeep Singh Puri. We've got that lined up for you. Very important conversation. And he's going to be speaking about HPCL, BPCL and several other stocks that you should know about. Do stay tuned.
They say fortune favors the prepared. The more prepared you are using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the 2nd year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
I present the budget for a historic
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the Finance Minister takes up when she presents her budget for 2025.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company?
Welcome back to NDTV Profit. Now, the World Economic Forum's annual meeting is underway at Davos, and we are getting you an intensive coverage as we speak to numerous business leaders, state heads and top corporate leaders. Let's listen in to some of the important voices like Adar Poonawalla and Raghuvan among the others. Listening.
And nice to move on from COVID and talk about anything else from COVID. You know, I just want to say I really hate mosquitoes. Yeah. And they, as you know, kill more human beings than any other animal on the planet, with all the different mosquito-borne diseases, from dengue, chikungunya, yellow fever, and, you know, even malaria, of course. So with that in mind, after COVID, I sort of focused our capex and partnerships with various companies that we'll talk about to, you know, make vaccines for malaria, dengue, chikungunya, and yellow fever. Yeah. Now, those other vaccines are about two years away from launch. Right. But we have launched, as you know, as you mentioned, the malaria vaccine, which is already beginning to protect children in Africa. Right now with the Gavi's replenishment, where they need to raise billions of dollars for various vaccine programs in Africa, it is challenging to get enough funding to get, the kind of vaccine coverage to scale up the volumes to be delivered and procured.
So costing is an issue?
No, yes. So that's where we played a major role. This malaria vaccine by other manufacturers in the West was being offered at $10, $8 to $10. We have brought down that price to $4. So that's more than a 50% reduction, only with the objective of providing more access to more children who can now take it, with the budgets being strained and all of that. And of course, with the backdrop of the latest news that we've all were shocked, or maybe some people were not shocked to hear about the funding being withdrawn by the US. And I hope that's only temporary and they relook at it, because you see, multilateral organizations like the WHO play a very critical role in maintaining, sustaining global standards for medicines and vaccines, for maintaining global health systems, testing, research, surveillance. So, they need funding. And
if there is no US funding for WHO, as will be the case for at least the immediate future, how does that impact a vaccine manufacturer like you?
Well, we've been calling upon leaders and others here to step up, to bridge that gap, because there are other countries who can, $500 million is not a huge amount in the grand scheme of things for others to kind of pitch in and contribute. I'm sure that the WHO is already making plans to ensure that all their critical programs, like as you mentioned, pre-qualifying vaccines and getting them approved and maintaining the standards for vaccines and other medicines is a very critical aspect of what WHO does, because all these other countries go by their quality standards and recommendations. So the impact to vaccine and other pharmaceutical companies could be there if this area is not looked at, but I'm sure the WHO will be focusing on their key areas and priorities so that nothing takes a back step. It's still early days to say, but I don't see any major impact as of now. Yeah.
What is the efficacy of the malaria vaccine in Africa?
Well, it's 77%, which is very good. And we are working on next-gen vaccines, which will be even better over the course of the next few years.
And in India, when would you?
Well, this malaria vaccine works on the falciparum, which is the parasite prevalent and found in Africa. We have another one called Vivax in India. There's no vaccine for that at the moment. Maybe in a few years there could be some technological development. Yes.
Are you sort of part of that process?
Yes, with Oxford. That's going on still with Oxford. But, in the meanwhile, we're going to have a chikungunya vaccine in a year and a half, which is again a serious issue in India. A lot of people getting it. And also with climate change, we've seen a drastic increase in all these mosquito-borne viruses, because when you've got construction going on in development in this part of the world, you have these water bodies which become a breeding ground for mosquitoes. You've got climate change where even a few degrees difference can increase the breeding of some of these mosquito species. So this is becoming an issue globally, not just in India. So we thought we'd focus a lot on our pipeline in that respect.
What about dengue?
So that's also coming out in about 2.5 years. The trials. So that's for the globe. So it's a one-shot vaccine. That's the good thing. You don't have to take multiple doses, and that'll be for India and everywhere else, including chikungunya. It's only the malaria one which is for Africa at the moment. And of course, yellow fever also, which is a traveler's vaccine for anyone who needs to go to Africa. There aren't many manufacturers, who make these vaccines because typically they're all sold at a very low price. So it's not very commercially interesting to most pharmaceutical companies to make these vaccines. And that's where we as Serum Institute play a very key role.
Well, on to an NDTV Profit exclusive. Petroleum and Natural Gas Minister Hardeep Singh Puri is set to kick off India Energy Week on February 11th in Delhi, and my colleague Tamanna is speaking to him exclusively on NDTV Profit on the sidelines of this launch. Listen in.
We have Union Minister Hardeep
We have Union Minister Hardeep Puri with us this morning at a time when I think very clearly everyone wants to hear what he has to say. So much happening on the global stage as far as crude is concerned, India's energy needs, and of course, coming at a time of bumper numbers, quarterly numbers coming in from HPCL and BPCL. So much to unpack, sir. First of all, thank you so much for your time on NDTV Profit and speaking to us today.
Thank you for having me.
Let's start with whether, like us in newsrooms, there is now a Trump tracker. Seeing what the US president is saying, and in his latest at Davos, talking about how he wants OPEC Plus to reduce prices, sanctions on Russia. Just your views on that as at the outset.
I can share my views and try and comment on what's happening in the world. But I want to start a little differently. Okay. You know, all of us, we have minds which are wired in a particular way. My mind is always wired to smell and detect the good news. So when you talk about Trump and tracking, I can tell you when he says that the US administration, and this was talk even before the celebration of democracy there, that US is going to remove all remaining restrictions, all the temporary halts that were put on production of gas and oil, etc., will be spoken or referred to in the past tense, and that he's calling on the other players, the major stakeholders in the global system, to lower oil prices. So that to me is good news, and I can also tell you that this fits into a pattern of analysis which we have for a long time believed in. It stems essentially from the fact that there is more than enough crude oil available in the world. Today, you cannot, in fact, talk about shortages. Today, you are talking about availability. Yeah. There is a fundamental difference between availability. Now, availability was artificially reduced from 102 million barrels a day to about 97 or so. Okay? But meanwhile, what has happened after that artificial circumscribing of availability by you know who? There's more oil coming on it from the Western Hemisphere. Yeah. I mean, I hear every day reports of first Brazil, they produce 3 million barrels, another 140,000 barrels is coming on stream. Canada, Guyana, Suriname, and now the United States. No, so there's more oil than is required. Now, will that bring price down or not? My submission to you is that even without this kind of heavy intervention, price of oil has to come down, because it's ultimately a question of demand and supply. The demand is not growing up that much. Those who are on the supply side of the game will tell you, demand bahut badh raha hai, you know, you better buy now, but buy long term. I don't think, where is the demand increase taking place? If you look at the state of the global economy, if you look at the levels of saturation, say in natural gas, take Europe as a case in point. The United States wants to sell more natural gas. There's more being sold by Qatar and the United Arab Emirates. By Mozambique, gas is coming on the market. So I think insofar as natural gas is concerned, come 2026, and I'm always being a little more cautious. It could happen even in 2025 towards the end. More than enough crude available, more than enough natural gas available. And what is the president saying? One must stop calling him president-elect, but he's now in office.
He's saying drill, baby, drill.
Well, drill, baby, drill is a catchy way of messaging that if you were held back by certain concerns, I'm not saying they were not valid. I mean, if you believe that fracking has major environmental concerns, that's your lookout, all right. But he's saying whatever it is, we will produce more and we'll put more on the market. We want the international price of oil comes down, because that is a major cause of the economic woes that the world is facing. And then, you know, interest rate, taxes, all that. So to me, these are positive developments. They are positive developments because I am more than sure. I mean, I sometimes try to persuade myself that, you know, let's stop being so sure. Our consumption is going to grow up.
Yeah.
In the 3.5 years, or even not even 3.5 years exact, that I've been associated with the Petroleum and Natural Gas Ministry, Madam, our consumption of crude oil per day has gone up from 5 million to 5.5 million barrels. 500,000 barrel increase in 3 years. Now somebody asked me this question, one of the S&P, one of the financial groups asked me, when do you think India's demand will peak? And I gave an answer which in retrospect was the correct answer. I said, listen, if you look at international estimates, I didn't tell him that, I'm telling you, so I'm giving you something on that. All of them say at least for 20 years. Even the most conservative analysis say that your oil demand will continue to grow till 2040. Many say it will go on till 2050. So I saw a reading of 5 estimates yesterday, all Western estimates. Yeah. Now, if your demand is going to grow up, you need that because energy is the lifeline of an economy, and you have a situation where your demand is going up, you've got availability, your E&P is going to grow up, grow in a very big way. I think this figure. Your companies are doing very well. Yesterday, BPCL, by the way, BPCL I always take special pride in. And even if their results hadn't been so good, 20%, well, this is a company some people wanted to sell earlier.
Yeah.
And 20% profit
on
year, quarter on quarter.
So may I pose a question? And in connection with BPCL and what they overall, yes, drill baby drill, good, more supply, less prices, good for India. But specifically, as bumper as BPCL results were, no doubt about it.
HPCL is even better.
Is even better.
300% profit.
The one query that the street has is now what happens when we reduce our import of Russian crude, which came in at better margins? What happens to gross refining margins?
No, hold on. I would worry about gross refining margins. It's very legitimate. Because, look, it's, there are fascinating challenges. Yeah. Within my 4 or 5 companies, some of them are very happy when oil prices go up. They're very happy because they extract and export.
Of course.
Others have to import. So I think they've all learned that over a period of time, you rejoice in the success that you have now, but also prepare for another day. So that green transition is a very major element of them repositioning themselves. They're not the only ones doing it. The global companies are doing it too. If you look at the names have changed. Okay? Total is not Total Green. Doesn't mean that Total stops traditional fossil fuel or gas. Look, it's not just refining margins. There is also another very, very important development taking place. Your refining capacity is really growing. And growing, look at the figures. You have today about 260, 270 million metric tons per annum capacity. Madam, you're going to have 310, 320 in a short, because this is all contracted for. We're talking about a 80,000 crore investment in one of the southern states, which will have about 20 million metric tons per annum or thereabout. I'm saying your consumption is going up, your E&P is going up, your ability to navigate and access availability is on the increase because you've diversified your sources. Why have I given you this long-winded answer to your Russian thing?
Yes.
No, if I was sitting in your place and you were sitting here, I'd also be needling it. Look, the Russian imports were never a part of the Indian oil import scene. It only started in 2022.
Yes.
And why did it start in 2022? Because there was geopolitical turbulence, I'm choosing. It was followed by Russia-Ukraine, was followed by trouble in the Red Sea, the Houthis attacking people. So suddenly we found that a country which produced 13 million barrels a day decided that it was going to make energy available at some discount. Now, those discounts are also not what appears in the market, but a new source came on to being. A new source came on. Like Argentina's come on the scene as a new source.
So
Can I just complete?
Of course.
Madam, what happens is, when our people, they have diversified there from 27 to 39, now with Argentina coming, it will be 40. So when February 22 happened, they suddenly found that there was another source which was available for import of crude. This is all that happened. Why is it easier for us? It's easier because we issue tenders for import at the point of importation. The point of importation, when I want crude delivered in in Mumbai or in Dahej or in Visakhapatnam. I'm just giving you a random name. And so much quantity desired at such and such price. And people will float a tender. Now the issue is, who will respond to the tender? Somebody will quote a lesser price. Then they say, oh, hame shipping pe lag gaya, ye lag gaya. Arey bhai, they have to deliver at the point of this thing. Jisme bhi lag gaya. And I can tell you, this is my reading after 3.5 years of experience, that the world is going to fundamentally change in terms of energy. Yeah. We have a situation today, Guyana is supposed to be the big find. But what happened? You drill 16 times. By the way, drilling offshore is very expensive. I think it should cost several $100 million to drill a well offshore. They did 16, no success. 17th time, they struck gold as it were, oil and gas. I think, and I'm very confident about that, that the actual Guyana, many Guyanas are waiting to be discovered even in the Andaman Sea, number one. Number two, look, it's not as if there is a switch, right? That I walk into this room and that light of yours, which is making this conversation possible, it's switched on and off. Everything has a wind-in period and it has a wind-out period. We are today on the 24th of January. These sanctions, which you call, first of all, they don't hit all the entities. There's no sanction on no Russian oil. But these have to wind down or wind in or kick in or whatever expression you want to do by 31st March, if I remember correctly. So, my answer to your question is, no need for any panic. I would say, I wouldn't even characterize this as anxiety. This is the world we live in. You sign term contracts, which means over an extended, long, predictable period of time. You also buy spot. There's a fascinating place. Sometimes the price in one market goes higher or lower than the other. I think India is very comfortably positioned. I saw some interviews by one of my colleagues, the oil company chairman, I think it was IOCL chairman in Davos, and he's saying the right thing, that we can navigate this.
Yeah.
Now what happens? If Russian oil, let us first of all, look, there's also a bit of leveraging going on the other end, between President Trump and this thing. He wants to bring the conflict to an end. Yeah. If the conflict comes to an end, in any case, the problem is solved. If the conflict doesn't come to an end, we'll see what is happening. Who will sell?
Do you think he can end the conflict?
I'm very sure.
Yeah.
I've always said that a conflict like this cannot be frozen in time. I mean, how long can you look at the enormous damage which is being done, the cost of it.
So let me specify, and you've explained this very well, sir, that India has a lot of sources. I think, and let me laser point it, the only quote-unquote concern, if at all, is that we had a source of relatively discounted crude for a certain period of time.
Not always.
Do we now have to pay more?
No, not at all. I see the international price coming down. I mean, I don't know. I don't predict. I'm not in the oil prediction business, and a lot of the oil prediction business is also people who you try to influence within quote the oil price. I mean, if there's a news item somewhere, suddenly Brent will shoot up or something else. I am confident that there is more than enough oil available in the world, number one. New sources are coming on the market, and even the existing sources, sometimes they give you more, sometimes they give you less discount. When the 22 February started, initially there was a spurt of imports from Russia. Then the Iraqis, if I remember correctly, turned around and said, no, we can supply. So it went up and down. It said, look, on an average you buy, say, 5 million barrels a day. And my sense then, when I just joined, was that it is about 800,000 barrels a day each from Saudi Arabia, UAE, Kuwait, Iraq, and another 800,000 from the rest. Then Russia came on the scene as a new player. Today we've got other people coming on the scene as a new player. Now, can I change the term of your analysis? We have an advantage. Today you don't have many buyers like India.
That is true.
That is absolutely true.
That is
now, so what happens? You are holding stocks.
This is a buyer's market right now.
I wouldn't go to that extent as saying. I would say that if you have there are a lot of buyers who don't have liquidity, who can't pay. who like there's a lot of demand for energy available in economies which have to take loans or are borrowing for their.
We have demand and we can pay.
Absolutely, and you have a fantastic track record. They're not that LCs are being opened and then money is being paid 1 month later, then people are criving. No, you deliver at the point of importation, your payment straight away. So we have two advantages very clearly. The economic activity has shifted here. So I'll tell you, and if you know those people who are in the international business also are very conscious of this factor. Why do you think companies are, Petrobras is collaborating with Oil India in offshore, seismic surveys in the Andaman Sea? BP is helping ONGC in Bombay High into rejuvenating those wells, which are some of them are very old. Because this oil business is not a business of philanthropy or altruism.
No.
It's a money-making business. Yeah. Okay. And a country like India, which is growing well, which has confidence, today, when you have India Energy Week, and I hope you'll be there, you will find that the number of people coming in at international prices to participate, that is an opportunity. So, whether it is, first of all, conflicts don't continue forever. You've just been seeing that in the Middle East. Secondly, even if conflicts have to continue, you have to navigate around them. But I'm positive on all fronts. I think conflicts will wind down. The availability there, then you're dealing with particular grades of crude. I must compare. If you supply one grade of crude, 2-3 other people supply a grade of crude, sometimes you have to a little navigation.
So just one point of clarification, and for our understanding, because you have said that American crude is now also, an option that
we're already buying $20 billion.
Does it cost more to transport from America? Is it a pricier option? Can you just give us some clarity?
For instance, American gas is certainly cheaper, from what I can remember of it. But whoever is selling you the stuff, they will price it in such a way as to make it competitive. How is energy typically priced? There's the cost of the barrel at the point of production. You add insurance and freight. You add the exchange rate. Then you add the refining margin, dealers' commission, etc., etc. It's a very complex thing. But if you want to sell energy, you will price your source in a way that the price at the point of delivery is that. After he has to sell.
Yeah.
Now, you can have two competing philosophies. One is, I see in some of my friends who are traditional exporter, हम extract नहीं करेंगे, बेचेंगे नहीं, because ये पड़ा रहेगा, हमें पता और 20 साल इस्तेमाल होगा. That is a dangerous philosophy also.
Yeah.
Because it may so happen, and I've been telling some of the newer things, I said, your oil is coming on the market now. All right, you have tie-ups, etc. But, also be careful. In another 20 years' time or another 15 years' time, people may already be locked into long-term term deals with others. So, I would say on all fronts, whether it is what is likely to happen as a result of decisions in the United States, I certainly see, I can't predict. I have been quoted to say that in addition to the 13 million barrels a day they're producing, they'll send another 1.5 million barrels onto the market. By when they will do it, I don't know. It could be 4 months, it could be 6 months. Some of those executive orders are taking shape and with global consequences. But more and more oil is coming on the market. Right. What will happen in the case of Russia? I personally believe some form of settlement will ultimately take place. The settlement will not be energy-centric, but energy will be majorly impacted by that. If you can find an end to the major conflict, and I think it's in everybody's interest.
Yeah.
But if you don't, then what happens? You should look at that scenario. Either case, we are cushioned.
I just want to come back.
All right, that's an exclusive conversation with NDTV Profit of Mr. Hardeep Singh Puri. Now, the whole conversation will be played throughout the day and also will be available on our social media channels, so you can go there and watch the whole conversation. But with that, we're completely out of time on this edition of Ask Profit. Stay tuned to NDTV Profit, KYC on the other side.
say fortune favors the prepared. The more prepared you are using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
This January, the world will come together at the World Economic Forum at Davos to bridge differences because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
The mother of all Kumbh Melas, at a scale never seen before. Livelihood.
Hello and welcome to KYC, a brand new show at NDTV Profit. In this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of the companies they invest in. Know Your Company is a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Today, we are going to talk about PB Fintech. This is the one which is very popularly known as one which runs two platforms specifically, Policy Bazaar and Paisa Bazaar. So I'm going to very quickly take you through what each of these platforms does. So as far as Policy Bazaar is concerned, that's perhaps the more well-known website in this case. Of course, it's an insurance comparison website where you do have a lot of insurers come and all who are interested in picking up insurance, you'll be able to compare the various schemes that are available as far as that's concerned, and you have the ability to perhaps make choices there as well. It's India's largest digital insurance marketplace at the moment, and it has over 90% market share, and it looks at insurance that would include life, general, medical, and so on and so forth, including auto for that matter. Paisabazaar is the other one, which in fact provides a variety of loans and credit cards. This is again an interesting one because this is where you have the debt market come into play, and not unlike what we see in Policybazaar, Paisabazaar also partners with large banks, NBFCs and fintech lenders, and what they do is they provide a wide choice of products across personal credit categories as well. And of course, it's a digital consumer credit card marketplace, so that's something that you need to keep in mind as well. All in all, the company has also ventured into certain other newer businesses. So when it comes to its core business, about still a 2/3 of its revenues still come from core businesses, and it was FY24 in which we started to see a large chunk of the new business start to contribute as well as far as PB Fintech is concerned. But let's move on and talk about a handful of factors. And what we usually do is we take all these companies and we assess these companies through the lens of the financial statements as well as various other fundamental parameters to gauge to how the company has done so far. In this case, we'll be separating out income statements and profitability because, well, it's a platform. And of course, we'll be talking about balance sheets and cash flows as well. But moving on, of course, we talk about shareholding, how the shareholding pans out, the valuations picture as well, along with street coverage and street credentials. And for that, of course, I'm going to get in my colleague Harsh Saita to also take us through and give us a little bit more insight with respect to some of these aspects. So Harsh, welcome to the show and thanks for joining in. Let's start with what you make of profitability, rather let's start what you make of revenue and then move on to profitability.
Yeah, in fact, let's pull up those numbers, on the revenue count. If you look at the revenue over the last 3 years thereabouts, it's literally gone 4x. So from sub 900 crore, the current revenue for FY24 was roughly 3,400 odd crore. For just a couple of minutes, I'd request you to ignore the EBITDA and PAT number for now. Just look at the trajectory of revenue growth. It's been very strong in that sense. FY21 was 885 crore. New business within FY24 contributed just 1%, which is 12 crore. That new business has now become a third of the company. What are these new businesses? Some new businesses also include international operations, something like a Dubai. It also includes the agency channel, which they've started off, where you can call PB Fintech helpline numbers and book your insurance that you require basis your need. So a couple of those have really helped the top line, and that's what we are seeing growth in. So from the 12 crore number in FY21, new businesses have gone to 225 crore in FY22, which is 20x. Then 848 crore in FY23, which is 4x on top of that. And then you're at 1060 crore in FY24, which is another 25% growth. So extremely robust in that sense. And overall, the revenue number looks very, very solid. So that's a clear thumbs up with regard to the revenue number because it's gone up in such a solid fashion. The guidance for revenue as well continues to be solid at 30%. So you'll continue to grow at 30%. That's the opportunity that management is seeing, and therefore clear thumbs up where revenue is concerned. Very important for platform companies to scale revenue, but along with it, scale profitability as well. And that's our second metric, and I'll try to cover that as well. So now, if you can look at the EBITDA number, the way in which EBITDA has gone, that's a negative EBITDA number, by the way. And therefore, from 295 crore negative, it's gone to 662 negative EBITDA. And thereafter, it settled it in at around 186 crore of negative EBITDA for the full year. And therefore, what you're seeing is that you're seeing an improved trajectory where margins is concerned. If you can pull up those margin numbers, you'll see how margins have improved on a year-over-year basis. And now you're starting to see margins at a negative 5% as the company edges towards that guidance of 1,000 crore profit after tax by FY27. That's going to lead to a push with regard to where profitability is concerned. So growth will now be focused more on profitability, Agam. So growth, thumbs up, but even profitability, a thumbs up, because the manner in which they've been able to go about this underwriting more profitable growth is what really stands out.
Right, sure, fair enough. And point taken. Let's talk about the balance sheet then. And it does have a strong net worth, about 6,100 crores in terms of its equity shareholders funds. It has a debt of around 333 odd crores. It's a relatively lower amount of debt, and in terms of cash, does seem like it's cash rich. Standing at around 5,400 crores in terms of the cash that it holds, which means that the debt in this case is of less significance. Of course, I'm sure that it will require that amount of debt to perhaps run its operations to a certain extent, but it does seem like it has a fairly large chunk in terms of its cash, and that's why we're going to give the balance sheet a thumbs up. What can you tell us about cash flows, Harsh?
Yeah, it's as expected. Just how operating metrics and profitability is improving, the cash flow is also improving. But there's one big catch here. So one is you have a positive free cash flow now, but the big catch here is that you're going to invest $100 million in the hospitals business. Now this is new. They've done new initiatives in the last 2 to 3 years where margins have seen significant decline. You'll want to look out for that as to what happens with regard to the fresh deployment of cash that they're going to do, which is roughly around 1,000 crore, 900 crore odd. That's the cap they've kept as part of their board resolution. So that $100 million utilization within the hospital business, how quickly are they going to do it, and what is the impact of that on overall numbers is something we'll have to look out for. So that's point number one to look out for where cash flow is concerned. The other, therefore, out of the 5,400 crore of cash available today, you will roughly post utilization of this 900, you'll have 4,500 crore of cash. So on the cash flow front, slightly iffy because they keep utilizing cash in some of these new ventures, and therefore I'm giving this a neutral. I'd want to see a more steady state cash flow where there's more certainty to where they are deploying cash, and hence a neutral on this one. In no count bad because they've done well on the top line whenever they've done this, but a neutral nonetheless.
Sure. So now that we've covered your key, financial statements and how things have potentially panned out at the moment, let's talk about a handful of numbers beyond these. So we're going to talk about shareholding. Now, the company doesn't have promoters. It is held widely by institutions. Foreign institutions hold about 48%. And domestic institutions hold about 20.6%. I was actually looking at the quality of institutional holding to see whether or not it is well diversified. It's not that just a handful of entities hold a PB Fintech. So that's the first thing that comes into play. In terms of FIIs, you have names like Tencent, Vanguard in the past, of course, has held the company. We've had New World Fund also holding a substantial amount, but it's fairly evenly distributed across more than a handful of institutions. Even if you consider the domestic holding, and that stands at around a little over 20%, we're looking at your key AMCs like Axis AMC, Mirai AMC, something like HDFC AMC as well, along with Franklin. All of them hold a good amount of funds, or rather will have shareholding in the company. Of course, given the fact that, once again, in terms of DII holding is well diversified, it's a positive. Which is why I reckon the only issue is that nearly a third of their holding is still with the shareholders, and that perhaps is the reason why we're going to give it a neutral rating and not necessarily a thumbs up at the moment, because about 31% is still out there with the public. So we'll give it a neutral, but let's come down to perhaps
Agam, I'm just going to add one quick point to this. So for viewer perspective, Naukri holds part of PB Fintech as well, of course. And when you're looking at the founders, which is Alok Bansal as well as Yashish Dahiya. Yashish Dahiya holds around 4.3% of the company, and Alok Bansal holds around 1.4%. So Combined, that is not enough comfort, of course, as you rightly mentioned,
Right.
but Naukri also holds a stake in this one, just for viewer perspective.
Yeah,
of
so
course,
no,
you've
so
kind of covered
absolutely
most of it.
So
but
valid points
just
there. In
thought-
fact, the fact that the people who run the company also have a shareholding, of course, makes it an more important of a factor here. But yeah, I was going to come back to you on valuations, valuations, Harsh.
Yeah, this is going to be an interesting one. This was a tough one to break down, frankly, Agam, because valuations for these new age internet businesses anyway very, very hard. They keep burning money. And therefore, what I've tried to do is I've tried to build my own valuation thesis to this. 77,000 crores, the rough market cap at this point. And if I can just look at the cash balances. We spoke about 5,400 crore of cash, of which 900 crore roughly to be utilized in the hospital business. So let's currently keep the cash balance at 4,500 crore. On a standalone basis as of today, the company's market cap ex cash is around 72,500 crore. So you're roughly outside of the cash that you're getting for purchasing equity or purchasing the business, you're purchasing it at around 72,500 crore. That's market cap net of cash.
Right.
Now the company's guidance is 1,000 crore rupees of PAT by FY27. Now, with the 5,400 crore of cash, the company is generating roughly 350 to 400 crore of other income annually, which also contributes to top line. Now, which also contributes to bottom line, I beg your pardon. And therefore, I'm going to remove that from the bottom line, right? And at the lower end of the band, 350 crore is what I'm going to take. Remove that from the bottom line number of 1,000 crore in FY27, leaving us with 650 crore of core profit after tax on the basis of a market cap of 72,500 crore. I hope this explains clearly how I'm trying to value this. And therefore, you have a profit after tax of 650 crore FY27, and therefore the company trades at 110 times this adjusted profit after tax, which I have adjusted for cash, 110 times FY27 profit. But at a 30% growth clip, is this kind of valuation justified? Is a question, of course, that viewers and investors have to think of. But essentially, that's how the valuations line up. Of course, no comfort with regard to that number, and therefore have to give it a thumbs down for now. But nonetheless, you may want to really rework the numbers to FY30 and see how the numbers really change.
I mean, I don't even want to imagine what it was trading at just about a few weeks ago.
Yes.
At around the levels of around 2,100, 2,200. So, yes, point taken. Absolutely, Harsh. There's no doubt about that. Do remember, this is 2 years down the line. So, this one is certainly going to be a challenge. But I'm going to very quickly take you through street credentials. It's going to be an up because the street is positive. We have about, we have seen growth despite the recent correction, about 84% growth on a year-on-year basis. As far as street is concerned, they are largely positive, but I'm going to actually then, okay, so this is a mixed one because they're just 8 buys, 3 holds and 9 sells. So they're not completely positive, but with an upside entailing of around 3.7%. So I reckon the street at the moment is also concerned with the valuations at which PB Fintech is currently trading. And hence we're going to give the street coverage a neutral rating, not necessarily a negative one. Yeah, that should bring for you on your total score out there. And in terms of all the parameters that we've spoken about with respect to PB Fintech, well, we have an overall rating of 5.5 out of 8, if I'm not mistaken. So there you have it. We have these thumbs up, and along with that, valuation, of course, not looking that amazing. Let's pull up the total. And yep, 5.5 out of 8 is what we are looking at as far as PB Fintech is concerned. So good prospects, but it's still very expensive. But with that, Harsh also spoke to the management of the company. This is what they had to say. Listen in.
So if you look at our business, see, we do all retail lines, and the growth is sort of driven by both health insurance and life insurance business units. We don't see any reason it not to grow at the same pace in future, and we have always maintained that 30% is a very good growth rate for Policybazaar sort of businesses. There will be quarters where we will be growing faster or slower across different business lines, but overall, if you combine every business line, we hope that we are able to deliver 30% sort of a growth rates across years, and that's been the case if you look at last 5-10 years of Policybazaar sort of growth numbers as well. See, the way we look at our business, to be honest, is there is huge amount of customer need for these products. So you have to work on three parts. You have to work on product innovation with your partners. You have to work on removing all the friction from the buying process so the customer can obviously go through the transaction much easily. And you have to work on the servicing element, which includes the claim as well. If you're able to do a better job for all three, more and more customers will come to you and they will in fact transact through you. The whole promise around the claim support that we have been able to deliver, and along with that, the focus on regional languages, the focus on physical meetings, along with call center support that we have been able to achieve over the last 3 years, has resulted into a very high growth rates over the last 3 years, and touchwood that seems to continue for now, and we hope, as I said, 30% plus sort of growth rates in coming years as well.
Okay. So, sir, I'll touch upon those couple of factors that you spoke about. Those were new levers for you.
Yes.
Having a call center to answer customer questions and therefore push the insurance product out into the market, make it easier for your customers to understand the product better and understand the right product and buy it. What are the new levers that are going to come on stream which gives you the comfort that a 30% growth, maybe for the foreseeable future, it can be 3 years, it can be 5, you can put that number, but what are those levers like? Because you've unlocked a few levers in the last 2 to 3 years.
There is nothing specific like this one thing will drive the growth. I mean, if we had known that there's a single one lever, we would put more effort on that one thing, but it's a multiple thing which come together. So like if a customer wants to have a physical meeting and we are able to enable that, or if we are able to talk to people in their local native language, those are very big positives. But would that one factor determine that we grow at a particular pace? Most likely no. Similarly, the whole claim experience that we are able to deliver, today we have about 600 people who are focused on customer claims and customer support specifically. So, those are things definitely keep on adding up. It adds to your brand, it adds to better conversion. We, as I said, we don't look at one factor, we look at the full value chain and we see how do we give a better experience, a better product to customer across the whole value chain and control more and more of the customer experience. I'll give you a very simple data point. See, if we think about health insurance in India, typically health insurance is about 10-15% of GDP every country. India also is no different. About 300 billion plus minus goes into the whole healthcare industry. Includes hospitals, includes pharma, includes everything. In any developed world, you'll find that about 30 to 40% of this is paid by insurance companies. So that determines the size of the insurance sector, health insurance sector per se. So from that perspective, if we look at Indian numbers, we'll say about somewhere between 2 to 3% is paid by the insurance companies. Right? So there's a very, very big delta in terms of where we could be from health insurance perspective, where we are today. Right. Similarly, if you look at term insurance, again, very, very underpenetrated. So the scope to grow the industry, and if industry grows in these direction of protection, it definitely helps Policybazaar, because Policybazaar is sort of the first port of call for customers when they think of protection products. So we remain confident that 30% growth rates is possible till the time we keep on doing what we have been doing and become better and better at delivering the different parts of value chain.
There you have it. That's the management of PB Fintech telling us about what's in store for the company. But we are out of time on this edition of KYC. But lots more lined up on the other side. Stay tuned to NDTV Profit.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
They say fortune favors the prepared. The more prepared you are, using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhanomics on NDTV Profit at these times.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
I present the budget for a historic
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMC's compensation for LPG under recoveries might be seen. So these are Macquarie's expectation on different sectors as to how budget may come out with different changes in different sectors.
Hello and welcome to NDTV Profit. You're watching Market Central and this is Nika. By the way, up first, let's just take a quick look at how markets are faring. You have the Nifty 50 up 0.5% right now. We have 37 advances on the benchmark versus 13 declines. When you talk about what's gaining on the benchmark, you have a power grid and a JSW Steel that is up over 2%. JSW Steel is actually due to report its earnings today, later in the day. We also have some strength in Tata Steel, Eicher, HUL, all of these stocks gaining over 1.5% in trade. Something that's not doing so well is Dr. Reddy's. It's down 4% after it posted its Q3 earnings yesterday. We also have Apollo Hospitals and Trent seeing some cuts in the range of 0.5 to 1.5%. But it's the broader markets that are underperforming today. You have the Nifty Small Cap 250 down 0.8%. The Nifty Mid Cap down 0.3%. I just want to pull up the Nifty Small Cap, which is down almost 1% right now. And in terms of what's dragging is a Scient down 18%. And we'll talk about a little bit about why in just a bit. But you also have Tejas, Sterling and Wilson seeing cuts of 7% and 4% respectively. India Cements and Credit Access also under pressure. Something on the other hand that is doing well is Capri Global up over 11% on the back of its Q3 earnings. KFin Technologies, it surged over 10%. Strength in counters like Raymond, Avanti Feeds and Godfrey Phillips as well. And when you look at the sectoral indices, something that is doing very well in trade today is the Nifty IT. It's up over 1% right now, and the gains are led by Emphasis, which is up almost 4%. Your Persistent Systems and Coforge also maintaining the kind of positive movement we saw in trade yesterday on the back of their Q3 earnings. And we have only one stock that is under pressure on the Nifty IT, and that's an L&T Tech, and that's also fairly flat, just with a slight negative bias. Something that's also doing well is the Nifty Metal. We are seeing strengths in the steel counters. JSW Steel up 2% due to it's supposed to put a strong set of numbers for Q3, and you can see all of your steel players actually gaining over 1% in trade, and only NMDC, which did see a 4% uptick yesterday, is under pressure, followed by an APL Apollo Tubes. So an index that's not doing very well is the Nifty Media. It's down 1.5% right now. It's Tips Music that is dragging this index down. It's down about 2%. Dish TV, Z Entertainment, Saregama, all of these counters seeing weakness. It's only Den Networks that is seeing 1% of gains. But moving on, let's talk about KFin Technologies, which is up and about in trade today, up over 10% right now on the back of its Q3 earnings. And we have Harsh joining us to tell us what worked for the company this quarter.
Well, very strong numbers that have come through with regard to KFin Tech. Let's look at the revenue. The revenue number has come in roughly at 290 crore, which is a 32.5% growth on a YOY basis, 4% up sequentially as well. You're seeing EBITDA of roughly 131 crore, again 4% uptick QOQ, 34% uptick YOY. So that kind of engine that we've seen doesn't seem to have slowed down in any way. SIP flows continue to be strong, mutual fund flows continue to be strong, and market share maintained at 34% for KFin Tech. Look at profit after tax as well, 1% up, 34% higher on a year-on-year basis, largely matching the YOY kind of revenue growth number. So that kind of engine seems to be chugging along well. You're looking at the mutual fund segment contributing the largest chunk of the growth, 37% when you're looking at it YOY. The quarterly average AUM expanded nearly 50% YOY. Stable QOQ market share of 33.4% to be absolutely precise. Expenses growth largely in line with revenue, and therefore a very solid trickle down to PAT, which was up 34% YOY. So on the back of very, very strong numbers, and of course the stock also has corrected a fair bit, you're seeing that kind of reaction on the counter today.
For giving us those key details. While KPIN Technologies is doing well, something that's not doing well is Ascent. It's down, under pressure, down about 18.5%. Now this is on the back of their Q3 numbers and a lot of things that didn't work out. First, let's just talk about the key metrics. You have revenue that has seen an uptick, up 4.2% to over 1926 crore rupees. However, their EBIT has declined 8.4% to 211 crores, and their margins have contracted around 150 basis points to 11%, and net profit has seen the highest degrowth of 31.7%. Now, while their FY25 outlook has been given and there is expected to be some kind of growth, it's not very, very positive. They expect the DET revenue degrowth to be in the range of 2.7% year on year in constant currency terms. So they are expecting a degrowth in that segment. They also expect the Q4 FY25 exit EBIT margins on a whole to be in the range of 13.5%, and this is primarily due to the shifting of revenue trajectory that happened this year. One of the other key highlights is the CEO of the company, Karthikeyan Natarajan, has resigned, and even when you look at the segmental for the DET business, the revenue proportion, the growth is very muted in single digits. Your transportation revenue proportion is 30%, quarter on quarter constant currency growth of 3.7%. For connectivity, it's the highest at 5.7%. Sustainability, which is 29% of their revenue proportion, is down 1.3%, and the new growth areas only seeing a 2% uptick. Lastly, their total order intake for the is high. It's up 5% on a year-on-year basis to $312 million, and they have won 13 large deals in the DT business, and the total potential is at $234.5 million. But that's what we have for Cyient. But with just 7 days to go for the union budget, NDTV Profit has been on the ground asking people about their expectations. This time around, it's my colleague Haripriya who spoke to some tax consultants and retired professionals about what their expectations from the budget is in terms of taxations. Do listen in.
We're here in Bengaluru and we are talking to people of varied professions to understand the impact of taxations that they've had and what are the changes in the taxations structure that they expect. Sir, please tell us what has been the impact of taxes. What do you think the current taxation system lacks, and what are the changes that you're looking forward for?
Especially I'm seeing the field of GST. So regarding GST, amnesty scheme is very useful to 2017, 18 and 19, 20. So now little bit benefit to our tax professionals and taxpayers. So now last we are expecting more and more because of election budget in 2024, but not like that now. So we are expecting more and more. Regarding GST, MSME sectors, we need more help from the central government. Startup companies are expecting simplify the GST major issue. And then late fees already we have done 17, 18, 19, 20, but it is not included in amnesty scheme. So it is very, very big effect to the trade parties. And another one is we are already expecting the small traders simplify the taxations. That is the major issue. So this is from my side. Now this budget we are expecting more and more benefit to our taxpayers.
So what are the expectations that you have?
Yeah, government is having the direct tax, especially for salaried persons. The every time budget, the only one people, that is the middle class people crying, that is the salary class. Why they are crying means they have now made to the two income tax regimes, new regime and old regime. Old regime you can get for the ATC deductions. New regime there is no deductions. It means that 7 lakh rupees, the cost of living of the city is increased. I urge government at least they can make it 10 lakh exemption limit, they have to hike it. Then only it can be solved for. Then salaries people can spend money for the their livelihood. Again, it will turn to the economy. And one more thing is, for the company's angle, the penalty is collecting there in Minister of Corporate Affairs is very, very, very disappointing sector, because penalty should not be income for the government. The penalty is like that, just penalize the people who is not following the compliances. But recently I heard around 600 crore penalty has been collected totally by the MCA. That is ridiculous. That has to be made simplified, and common man pocket, that has to be saved, increasing the housing loan, 2 lakh rupees interest is there. Now we are paying huge interest. So that has to be also increased to the higher limit. In total, my view, for salaried class, this budget has to be taken care. They are the main middle class. Every time they are crying. I hope Madam Nirmala Sitharaman will give smile on their face.
What are your expectations?
See, as a senior citizen, I fail to understand how the tax is being paid for the pensioners. So this is an issue on which we request that for senior citizens and for pensioners, tax should not be levied.
These were the multiple issues that people have flagged here, and the request is that they've made clarifications with GST, easing of that procedure, reducing the pressure of taxation on the salaried class and the middle class of India, and for the senior citizens, the exemptions that they ask for.
Yeah. Thank you, Haripriya, so much for giving us those key details. A shift focus and here a view coming in from the Publicis Global's Nigel Vaz and Honeywell's Anand Maheshwari on the impact of Trump 2.0 and what's ahead straight from the World Economic Forum at Davos.
Very simply, AI today is going to be embedded in every single aspect of transformation, because I feel like artificial intelligence is essentially us going from human action-driven approaches to businesses moving any process forward to now more and more agentic architecture. So the simple way to think about it is you have your digital workforce and your physical workforce working together, or as we like to think about it, as companion AI. So think about Iron Man and Suit.
Right.
When you start to think about industries like, for example, hotels. When you go to a hotel, you and I travel a lot. We stay in hotel rooms all over the place. How often is it that you have to spend 10 minutes at a check-in desk explaining what kind of room you like?
Right.
Because they don't know.
No.
You want to be close to the... And even if you've got preferences there, often the logic that sits behind the decisioning to make that on a dynamic basis on the time when you get there, depending on who's checked out, takes human intervention. This is an example of something simple that AI could do very simply. And this is a simple example. We're working in fields like radiology and oncology, where you start to see things like radiologists who've had years and years of experience now being assisted by models which can accurately start to assist them, and in some cases even make the call on whether or not to refer a patient, for example, for biopsy.
That's absolutely critical. We've seen that in India as well, increasingly the diagnosis of patients using AI, essentially a second set of eyes in a sense.
I mean, if you think about medical science, right, it's all pattern recognition. And AI has got incredible pattern recognition because you've now got all of the patterns available at your fingertips. When you start to think about areas like financial services, we've always been using AI. We should be very clear. We've been using AI for years. We've had predictive AI. The big shift now is rather than looking at data and trying to predict outcomes, you've reached a stage where AI can now create, which is, I think, what's really exciting about this new wave of AI that where you have autonomous agents that can actually go on your behalf and actually execute shopping. Or they might be able to make a decision on a credit mortgage application. And all of these things in conjunction with humans, but in many instances doing things that humans don't want to do. We recently finished a very large piece of work for a very big bank managing millions and millions of dollars, or billions of dollars, I should say, in wealth. And this is essentially creating an architecture around AI, helping their teams start to basically go through the entire process. Now allowing the human to focus on the relationship with the customer as opposed to consuming a lot of research to try and produce insights that might benefit them.
The obvious question which everybody asks is job losses in AI. I know the standard answer to that is that people will reskill. But I think in economies around the world, in South Asia and in India, where I'm from, there is a sense that we're a labor-based economy at a certain level. There are traditional forms of employment as well. AI is all very well, but then people might lose jobs and we may not have the skills to replace them. So how does one look at this conundrum?
Well, I think I'll start by answering specifically with our relationship and my perspective in India.
Yeah.
I feel like India has done an incredible job in terms of building the India stack. You know, you start with essentially a country that's built a public-private partnership around payments with UPI, national identity, which has brought so many people into the fold of being able to run enterprises in the formal economy. I think now AI is only going to accelerate this because essentially when you think about job loss, you have to look at the fact that there are going to be challenges in industries where people need to be reskilled. But I also feel like the opportunities that AI is going to create. I mean, when you think about an economy like India, the amount of consumption that India is going to require in the context of energy, in the context of healthcare, in the context of financial services, every one of these things today is not going to be possible in the traditional context. I wrote a book on digital business transformation, and that's the work Sapient, our company, practices. And what we've observed over years of doing this is right now we're at the stage where you can think about the early advent of the internet. You know, we built some of the first online banks back then, some of the first online retail businesses. And the conversation today in AI is like that. It's like, well, if the browsers are here, what's going to happen with travel?
So AI is the new internet, in a sense.
Not really. I feel like AI is going to take us significantly further. I feel like the internet reimagined a lot of jobs in the context of using a different technology to do it. I think AI is going to create so many more jobs because I think we're just barely scratching the surface of things like personalized medicine, things like education, where now you have the ability to tutor a kid individually, right? I mean, all of those things are available to a very small segment of the population now. So our view on this is industries, for example, like my own industry, the tech industry, I think has to take a long, hard look at itself and say, look, you know, where we've built in markets like India, companies have built large workforces doing lower skilled IT jobs on the basis of cost arbitrage. We've got to start to really think about how will these jobs move to more value creation. But I think the opportunity is going to be pretty significant because I feel like over the next 5 to 10 years, you're going to require a significantly larger number of tech literate entrepreneurial workers and an economy which is even more knowledge based than today.
I'm just trying to understand, in the past, software was a service, and now you've got services
as a
which
software.
So just for a larger audience, explain the shift that's taken place.
You know, a few years ago, I think Mark Andreessen articulated this: software is eating the world, right? And this concept was that everything that could be done by a piece of software will start to get coded into software. I think what you're now seeing with services as software is the transition of the fact that software is now able to start to create opportunities in a space like the services space, where you are exponentially able to produce outcomes that you just weren't able to do. So you have large sectors of the services industry, which historically were simply providing people in the context of creating software. Now what you have is a lot of companies like ours building platforms and AI platforms that are creating software from those platforms that have been created. So effectively you've gone from just companies taking products, which are software products, and deploying them, to companies basically saying we can now start to create that software on these platforms that will continue to evolve on an incremental basis, on a real-time basis, depending on what you're trying to accomplish, which is a really significant.
We are a US headquartered company, therefore US is very native for us, and therefore looking at all the countries outside of the United States, which is roughly half our business, is very important because the dynamics are very different by country. It is very different by geography. Some are very high growth, still bullish economies. They are still in the investment cycle. Some are very high scale, established economies, and really looking at how to take care of existing investments and still drive growth for for their geographies. Now, context of WEF over the last 3 days, as you asked the question, it's always fascinating to come in at the start of the year and hear all these different voices, both from the different industry verticals, different types of companies, both large and small, different industry groups, and the governments. I think it's very good to see that mix and have conversations. In general, I think I'm going away optimistic and positive from a lot that is happening. I was told yesterday by somebody, hey, we're living in a very turbulent world, but I think it's a matter of context. We feel it is turbulent given where we are coming from, but I would say if you take the context of the world over the last 100 years, now is not so bad in terms of turbulence.
Actually, you think so? Okay, interesting. Because the word that came up to me was that if there is one certainty in 2025, that's uncertainty, partly due to, of course, the Donald Trump 2.0 era and the man that he is. But the feeling that because he's a businessman, he will not disrupt businesses. And yes, he might keep America first, which a lot of people might. But what implications does it have for the other countries? And therefore, this question is right up your alley, right? When you look at all the other regions for Honeywell, what's the kind of business impact do you think the nature of tariffs, as you hypothesize, they might be of the nature of, and the impact thereof on the other?
So I don't think I'm qualified to speak about the politics because...
No, there are, but let's assume there are tariffs.
Yeah,
what impact does it have?
I can speak from the perspective of our businesses and give you a sense of how we are geared for it, how we think about it. So we are a large company with presence in a large number of countries, nearly 70 plus countries we would have very strong presence in. And we operate as a local company in most of these geographies because we have our people there in many of these countries. We have our manufacturing presence. So we are local in terms of the products and the supply chain. We also have engineering presence across the world. So we are innovating across the world. At the end of the day, we are an innovations and an engineering company. Right. And therefore, staying at the cutting edge of technology in the future of aviation, in the automation space, and in energy transition, that's our core. Now, if I take that scope of future of aviation, you would imagine that every part of the world is right now in an upcycle of really trying to travel and see a lot more of each other. Initially, it was thought it's just a post-pandemic side of surge, but it's becoming even more. If the world, as you say, is uncertain, people want to meet a lot more and find certainty in that world. And then it's also personal drive for a lot of people to travel. So I think the future of aviation is quite positive. You come from India and you see a lot of growth in the aviation sector in India. It is one of the largest investment cycles in aviation that you would see on the planet today. So India is very good on future of aviation. Energy transition is very relevant for every country, and especially so for India, because I think in this world it's even more important to think about energy security. And how you therefore think about energy security gives you all the other implications of trade and how do you manage that for the country. And finally, automation. I think India is at the heart of it because a lot of the engineering talent that the automation world is using globally is coming from India. We have a very large presence of engineering in India, in Bangalore, in Madurai, in Hyderabad, and in Gurgaon. So we truly understand the power of the talent that India has in terms of supporting this mechanism.
is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
They say fortune favors the prepared. The more prepared you are using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you then.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution
schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme, as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the finance minister takes up when she presents her budget for 2025.
Do you really know the company you invest in?
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hiral Datia, and with me is Anushi Vakaria. Anushi, an interesting day of trade is what we are watching out for. Because if you see what's happening with the markets, you did see a position that's being built ahead of the budget, and that's the reason why you're seeing some bit of positive momentum that's creeping in from the second half of the trading session yesterday and today as well. We're sustaining above those 24,300 levels, almost near the day's highest levels of 23,347. Apart from that, if you see where is the accumulation happening, cement is the sector where we did see a lot of accumulation in the second half of the trading day in yesterday's session. Let's just pull up all the cement names: ACC, Ambuja, Ultratech Cement, Sanghi, Ramco, all of them that have been seeing some buying interest over yesterday's session. Today, it's the power sector that has been in focus as well. Metal sector is showing some buying interest. So if you see the sectoral heat map, that will give you a picture of where the strengths are. There you go. Media, pharma, real estate, energy, auto, and MNCs that are trading are beating. IT, the top gaining sector. It's mainly the mid-cap IT which is coming to the rescue since yesterday with the kind of earnings and the commentary that has been absolutely important, taking the spends going into Q4 and FY26 into consideration. Metals are seeing strength, FMCG, banks, and the consumption story is starting to buzz ahead of the budget. Let's just quickly also pull up individual stocks and see, where is that uptick coming in. If we can have the heat map of Nifty 50, that will give us a better picture, because now you have 32 advances versus 18 declines. The trend was absolutely opposite when we started off the day of trade today. But in today's session, now we have Grasim, Tata Consumers, Eicher Motors, Power Grid, and a Tata Steel. These are the ones which are the top gaining stocks. What's losing? On the back of earnings, you have a Dr. Reddy's, which is trading under pressure. Tata Motors and Trent continues the downward trend. Apollo Hospitals is down in trade. Cipla is also trading under pressure. In fact, the pharma pack is taking some bit of a beating and a breather as we speak. But clearly, buying interest ahead of the budget that is emerging, at least in terms of the large caps. Are you seeing a similar trend with regards to broader markets as well? Because it's been absolutely stock specific.
Yeah, Hira, that's what I was going to say. If you look at the action today in trade, it's all a lot of earnings. The lot of movements that we are seeing is back on the earnings that we are looking at, especially the small cap index. Now, if you are looking at the current levels, then we are seeing currently are trading at the day's lows. We have stocks in focus in the mid cap space, which we see Syngene International seeing about a 6% of a drop. This is after the revised revenue guidance, which was there. Oil India taking a beating in the session today with about 5% of a cuts. Nippon Life, Uno Minda in pressure, 3 to 4% of losses here as well. Some other stocks like Sona BLW also seeing about 3% of cuts. But what's leading to still what is there as a chance of in the green as well, if we can pull out that as well, let's check that out. So we have Emphasis, the IT mid cap pack is doing considerably well. We have Emphasis, which is doing considerably well. Then even Persistent, yesterday also it was up in trade on the back of the Q3 earnings. Similarly, we are looking at that. Torrent Power up over 4% and Coforge seeing about 2% of gains as well. Now coming to the small cap, small cap, we are looking at currently trading at the day's low. Let's pull out some of the constituents which are there over here. We have the stocks like Syngene again, which is in focus, Hitachi Energy taking a beating, signed there about 19% down in trade today. So a lot of stock specific action taking place in session today.
Absolutely, stock specific action. So you have a clear underperformance that's coming in from the broader markets vis-a-vis what's happening in the benchmarks, because a good recovery. And you know what fund managers are indicating so far is that this is the time to bet on large caps, where the gyrations with regards to reaction on the back of earnings could be slightly lower versus the broader markets, which are seeing a very high reaction in terms of the stock price performance, even on the slightest bit of the negative news in terms of earnings. But that's what the market setup is looking like. But let's shift focus to the themes of the show. First up, an exclusive chat with Petroleum and Natural Gas Minister. We've spoken to Hardeep Singh Puri, where he's clearly indicated that the intent is to bring gas under GST and ensure affordability for gas. We will get you a detailed conversation. And on number 2, you have DRL and Syngene that are in focus on the back of pharma earnings. IT earnings, Cyient and Emphasis that is in focus.
Now, if you take the next themes of the day, telecom is another stock, another sector which is in focus. Tejas Networks and Indus Towers reporting its numbers yesterday. Other than that, we have the FMCG pack again in focus. V2 Retail, United Spirits reporting its Q3 numbers. Now, a couple of counters which are buzzing on the back of the revised FY25 guidance. We have the likes of Elecon Engineering seeing a downtick today. Amber Enterprises and Syngene International in focus as well over here. So these are the key themes that we are looking at here. Let's see what the first theme is like.
Right, thanks Anushi for all of this. But let me also welcome in Lancelot Dicuna, CIO at ValueX Wealth Connect LLP. Welcome to the show, Lancelot. But before we come across to you with, how are you reading the markets? First, let's quickly begin with a mega exclusive of the day. My colleague Tamanna spoke to Petroleum and Natural Gas Minister Hardeep Singh Puri. They spoke over a broad range of topics like India's dependency on Russian oil imports, cost of importing oil from US, and impact of 2.0 on Indian OMCs. Let's get you a slice of that conversation.
If I remember correctly, I think a year or two ago, the companies ran a loss of about 28,000 crores. They came to us and we negotiated so-and-so. Ultimately, we were able to compensate them for 22,000 crores out of 28,000 crores. Secondly, and this is more interesting, there was also some under-recovery on petrol. We even got some provisioning, I think about 15,000 crores. Yeah. But by the way, they were doing so well, they forgot about it and we also forgot about it. So don't remind them through your show. So that 15,000. So whenever there is an under-recovery, yeah, sure, we are there.
You can catch this entire conversation at 1:30 p.m. today on NDTV Profit and on all our social media channels. And that's going to be an interesting conversation as well. We're talking about how the sector the intent is to get it under GST. Secondly, to make gas affordable to all. So two important aspects from a consumer perspective that you can hear about as well. But moving on, let's look at this entire space. You have HPCL and BPCL that are in focus. In fact, HPCL itself is on a tear today. Almost 4 to 5% is the kind of gains that we're seeing on this counter on the back of earnings. But now you've seen some bit of correction. There you go. 0.4% lower in terms of HPCL. Let's just pull up a BPCL on the screens as well. IOC is also interesting to watch out for. We did speak to the management yesterday at Davos, so that was an interesting conversation that Neeraj had. But Lancelot, very quickly, your view with regards to OMCs, because I was having an interesting conversation with one of the researchers who tracked the sector closely, where in spite of all the gyrations that we see, in terms of all these OMCs, the end of the year in terms of calendar year is always a positive one for all of these counters. What is it that works, and what would you advise investors to do with them at the start of the year now?
I think a lot of the companies have got some good news that the US is looking to lower oil prices mainly to reduce inflation in the US. But as a fallout of that, if that reduces the crude basket for India's import in terms of value, then that would be helpful for the oil marketing companies to maintain their margins. And the other bit of news that can have an impact on their profitability is the introduction of GST on the on petrol and diesel products. Bringing those products under GST would mean that the prices could get a bit more rationalized. The markup that is there would be a little bit lower, and hence their profit margins could be maintained. However, all these initiatives are going to take a long time for them to get implemented. It is not something that can happen overnight. It might happen over the next 3-4 months. And given that background, at this point in time, there is always this probable benefit of a lower crude price can get offset through the increase in the value of the rupee. Now the dollar, basically the dollar strengthening against the rupee, that can again have an impact. So I think to some extent it will get offset a bit. And finally, it is still going to be a little bit difficult for the oil marketing companies to pass on the increases to the customer, because in India also we do not want inflation to keep rising, and petroleum products being a large portion of the inflation index, that would be something to watch out for, that how they would manage to keep inflation low.
Right, so that's with regards to HPCL and BPCL. In fact, when it comes to BPCL as well, clearly when we spoke to Hardeep Singh Puri, clearly indicated that he does take special pride in BPCL with a 20% jump in terms of profit, which is good for the company that people wanted to sell before. So OMCs have learned to prepare for volatile landscapes. In fact, you can catch the full conversation with Hardeep Singh Puri at 1:30 p.m. today on NDTV Profit and all our social media channels as well. But going back to the pharma space, Anushi, that's going to be a sector that you're looking at as well pretty closely.
Right, a lot of earnings in focus, in fact. So we have a slew of pharma companies that have reported their Q3 earnings. Let's bring in Varsha to tell us more about the likes of Dr. Reddy, Syngene, Tech and more. Varsha, a lot more misses that we are looking than the hits. What can you tell us about these results?
Absolutely, Anushi. Let's start with the misses then first. You have Dr. Reddy's lab, which is under pressure. Now this is on the back of weak earnings that the company has posted. But the double-digit revenue growth that you're seeing is on the back of a one-time milestone payment from the US FDA of rupees 120 crore and also the government grant. The growth was also led by newly acquired their NRT business, and excluding that business, if you see, the growth was only 7.5%. The EBITDA margin contraction that you are seeing is led by the lower Revlimid, that is a cancer product contribution, and of course the increase in selling and distribution expenses. India growth was led by vaccine portfolio from Sanofi, new launches and price increases, but there was weak US business also. If I were to talk about what the brokerages are saying, Jefferies actually has maintained underperform. They've cut their target price, and according to them, Q3 was a mess, and weak US and core India was offset by strong performance in Russia and UK. While Nuvama has retained buy with target price of 1,533, they say the current valuation is attractive, and the key product approvals remain critical for the company. Next on my list is Mankind Pharma, wherein again weak set of numbers. If you see the double-digit revenue growth that you are seeing was driven by outperformance in chronic, then strong recovery in the over-the-counter segment, and consolidation of the Bharat Serum and vaccines that they acquired. EBITDA margin expansion was led by improved product mix, but the decrease in net profit was led by increase in finance costs. The finance cost increased 24 times due to acquisition of BSV. A lot of analysts are actually saying the BSV portfolio is actually not that margin accretive for the company. Next on my list is Thyrocare Tech, wherein a quite good set of numbers. The revenue increase was led by pathology, which grew 24%, and radiology, which grew 23%. The EBITDA improvement was led by operating leverage for the company. Lastly on my list is Syngene International, which is actually under pressure on the back of company said in the con call that they have lowered FY25 revenue guidance. They are expecting now single-digit growth with flat profit. Now, do remember that company was actually expecting high single-digit to double-digit growth in FY25, but this the lowering of guidance was due to 8 to 12 week delay in demand recovery, and the US biotech funding delays in Q3 FY25 has impacted market stabilization and revenue expectations, though EBITDA guidance remains steady and the capital expenditure of $60 million is on track. Lastly, if you see, the biologics manufacturing utilization remains a concern for the company with the newly acquired unit which is not yet operational, but they expect a margin recovery in Q4 as well.
Okay, well, thanks for that, Varsha. Lance, now coming to you, a weak set of Q3 earnings that we are looking at in terms of where the pharma space is concerned. What are your views in Syngene? We've seen a cut in the revenue guidance. Dr. Reddy's also, it was a miss in terms of where the performance is. What are your views on some of these key results which have come?
I think, based on the results, the performances have been a little muted, especially sales growth. And I think on the back of what there were some expectations that the US market will contribute significantly, going forward, but that doesn't seem to have, kicked in immediately. And because of which, the profitability has got impacted both for Mankind Pharma and Dr. Reddy's. And that is, that means there'll be a re-rating in terms of the price earning multiple, because one would give a higher price multiple if there is a clear growth strategy, going forward. But given that earnings are actually looking lower going forward, then the multiple which was there in expectation of this increase now needs to get rated on the downside. So I think we are seeing that happen, and maybe that will continue for a while till the next quarter results come out and based on that. But if you take pharma from a little longer term perspective, if you look at it, that what is likely to pan out over the next 2 to 3 years, I think you will still find some value in this space at lower levels, because over the next 2 to 3 years, I think there is going to be significant demand coming in from the US markets, because they are in a position to try and improve their, the healthcare system and focus on providing cheaper drugs and reducing the healthcare costs in the US, which will force the US companies and the healthcare system to bring in from offshore various drugs that are available at cheaper prices. That will mean a good amount of business for Indian companies. So as that opportunity unfolds, I think you will see many of these pharma companies generating good returns and sales from the US markets. So I would think that one should look at this decline more from an opportunity to accumulate some of these stocks, because over the next 2 to 3 years, you would see significant growth, and that would lead to significant upside as well.
Right, so that's with regards to where the pharma pack goes and Lancelot's view in terms of Syngene. But moving on, IT earnings have been hogging a limelight. Though you have a Cyient, which is seeing a free fall, and this is only on the back of higher costs, which have actually impacted profitability, I beg your pardon. The stock is down almost 20%. Emphasis and Fintech are seeing some smart moves. Rucha joins us. Rucha, massive sell-off in terms of Cyient, whereas the other two are pretty much on the positive side. What are you picking up?
For sure, he also Cyient is down on the back of its 3Q numbers, but numbers might seem decent. However, what is leading to this free fall is the cut in FY25 guidance and also the key management resigning. Now, let me bring you the details. Revenue up about 4.5%, margin came at 11% versus 12.5% on a quarter-on-quarter basis. Net profit down about 32%. In terms of guidance, well, the company expects the DET, that is digital engineering and tech revenue, to degrow for FY25 in the range of around 2.7%. Now, this is revised from a previous flattish kind of growth that they were expecting over here, and all of this in constant currency YOY terms. In terms of EBIT margin, the company expects the exit EBIT margin for FY25 to remain around 13.5%. All this is primarily because of shift of revenue trajectory within the year, that is FY25. And the thing about management is that the CEO, Mr. Natarajan, has resigned from the company with immediate effect. So this is why Cyient is actually falling in trade. If you look at a 1 year share price performance, down about 32%, and over the last 6 months, down about 25%. So not really healthy returns is what Cyient has given. But moving on to Emphasis. Well, decent set of results over here. Revenue up about 0.7%. Margin came in at about 15.3%. Net profit up about 1.1%. However, the stock is this stock is actually reacting because of the commentary over here. Emphasis, as we look, it is up around 4.5%. At the start of the trade, it was actually down because the numbers had come, but now it is up because of the strong commentary. The call was held today at around 11 o'clock, wherein the management mentioned a pretty healthy set of outlook going forward, and they also expect to exit at a higher margin than the current levels. The direct revenue which came in for third quarter grew about 0.2%, so largely flattish kind of growth over here. In terms of order book, the new TCV of 351 million was in direct business, out of which 48% were in new gen services. So largely decent set of numbers, but strong deal wins and also strong commentary as we looked at 11 o'clock today is what is making the stock rise up in trade by about 4%.
Right, thanks, Rucha. But stay with us before we come to you with regards to telecom. Lancelot, your views with regards to mid-cap IT, the performance vis-a-vis their commentary. Would you say this would be the right time to invest in terms of IT? And if yes, which would your top picks be?
Well, I think, we had seen quite a rally in the mid-cap IT segment, over the last 2 years, and valuations really had gone up tremendously. But now with global issues coming to the fore and the probability of, visa restrictions impacting the companies, I think you are going to see a little bit more volatility in the earnings that we've seen, as well as in the profits that these companies are likely to generate. And then accordingly, many of these companies are getting re-rated according to the volatility. Like we saw Cyient, for example, their earnings were down 16%. Profit was about 122 crores this quarter, and that's and the outlook is also pretty difficult going forward. So, given the market is sort of punishing companies like that, so I think one has to be a little careful when investing in the mid-cap IT space, because valuations are still expensive. Most of these stocks are trading between 25 to 30 times or 35 times earnings. And these can be extremely volatile because with the smaller companies, their ability to withstand a difficult environment becomes a lot more, difficult for them to manage. And during this period, you may see huge dips in revenue and profitability, and those negative surprises could result in multiples going back down below 20s. So I would actually wait for a while, at least for another quarter, before one can decide whether this is a right time to buy into the mid-cap IT space.
Okay, so a more cautious approach for the mid-cap IT companies because of the expensive valuations that are there. But let's just focus on the telecom earnings as well. Now, we have the likes of Tejas Networks and this tower. Richa, thanks for staying with us. What more can you provide on these two earnings that are there?
Definitely, Anushi, I'll move on to telecom, but before that, I would want to highlight KFin, since Hiral asked me specifically about this one, and this one is now up about 10% in trade. This is again on the back of third quarter earnings. Revenue from operation is up 32% on a YOY basis, and margins actually largely flat at around 45%, but profits grew healthy at 34 times. Now, if we have a look at the share price, well, we'll see that over the last 6 months, well, the company has given returns of 62%. The share has given returns of 62%. Over the last 1 year, 119%. So that is really healthy returns over here. But yes, as you rightly mentioned, telecom is also buzzing in trade. We have the likes of Indus Towers on the back of its third quarter numbers. Revenue up about 5%. Margin came in at 92% versus 50% same time last year. But mind you, this contains one-offs, and which is on the back of reversal of quite a few provisions. One of them is provision for Vodafone Idea, because Vodafone Idea has largely paid around 90% of the dues to Indus Towers. So this is very much positive for Indus Towers, and as we can see, the stock is why up about 1.5% in trade as we speak. The company has also highlighted that it plans to foray into EV charging infrastructure infrastructure sector. So all in all, a decent set of numbers, but good recovery from Vodafone Idea is what is surprising the street positively, and therefore many brokerages also believe that this can reinstate dividend payments by Indus Towers to its shareholders, which was largely halted over the last 2 financial years. So this is one thing that investors would be looking out for. Now let me move on to Tejas Networks. Well, Tejas Networks is actually down in trade because again of its third quarter numbers as we have right now. But if we pull up the share price, we'll also see that Tejas Networks has not really done well in the trade. If we talk about the numbers, well, we have revenue which is not that great. It has missed estimate up about 2,642 crore rupees. Margin largely flat at 14.1%. But in terms of 9-month basis, the government business, which accounts for around 3% of the revenue, has declined 40% on a YOY basis. And even if you look at a quarter-on-quarter basis, the numbers for Tejas Networks were not really good. So third quarter numbers is what is making Tejas Networks tank in trade today.
Okay, well, thanks for that, Richa. Lancelot, coming to you, the telecom sector has been a focus in this past month. There have been a lot of reports from the government side as well, AGR consideration. What is your take on something like Indus Towers, Vodafone, Tejas Networks, and along with that, Richa also spoke about Fintech. Are you constructive on that one?
So I think if you look at Fintech, the business model is good and that has been growing, but the valuations are extremely high because it's trading almost 70 times its earnings, and that is a bit of a stretch for a company, even though there is good growth potential. I think if one pays such a high valuation when you acquire the price, you're always subject to some negative surprises coming up in the upcoming quarters, and that could result in further pain. So given valuations are expensive, one can look at maybe waiting for a significant decline in the share price, and then one can look at entry in something like a Fintech. As far as Indus Towers is concerned, the business is a low margin volume business. You have 3 players who are there as a virtual. The customer base is restricted to the present telecom companies. And yes, there may be a lot of growth, and they are one of the larger, the largest player in the space. But obviously, with 3 customers, the profitability can be restricted. So one cannot pay a high multiple, although even at these levels, it's trading at about 13 or 14 times earnings. It will be a steady business, and with the with Vodafone getting into a situation where there'll be ability to pay off their dues becomes better. I think Indus Towers should be maybe reasonably out of the woods in terms of its dues from Vodafone, so that should be good for the stock. But then would you pay such a high value? One could probably wait for a correction below 300 and then look at accumulating the stock. And I think if you look at the telecom space, the major beneficiaries are going to be Bharti Airtel and Reliance Jio. So they are adding customers, they are actually providing new services, and they have the ability to expand their 5G network rapidly across the country. So which should be the next big revenue as well as profit driver for these companies. So yes, I look at the telecom companies a bit more favorably, but I would stay with the Reliance Jio and with Bharti Airtel as the best companies to invest in the space.
The Airtel and Reliance Jio, the preferable play in the telecom space. But with that, it's time for a quick break. But important update, NDTV Profit is bringing you something special with a live telethon, which is Budget 2025 Investors Guide. And trust me, you don't want to miss it. We are bringing you the chance to get expert insights from market experts like Ramesh Damani, Saurabh Mukreja, Gautam Shah, and many more. Going live this Saturday, we will be giving you the perfect chance to soak up insights without the market noise. Plus, there's an interactive Q&A where you can ask the experts your burning questions. All you need to do is record your questions and send it to the number flashing on your screens right now. Tune in on January 25th at 11 a.m. only on NDTV Profit, TV and digital platforms. And also, you can also watch the entire conversation with Petroleum Minister Hardeep Singh Puri at 1:30 p.m. today on NDTV Profit and all our social media channels.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
They say fortune favors the prepared. The more prepared you are using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
This January, the world will come together at the World Economic Forum at Davos to bridge differences because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
I present the budget for a historic
the mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Hey everyone, with Budget 2025 right around the corner, there is one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it made a comeback in 2018 at 40,000, and since then it has been climbing steadily.
Welcome back. You're watching Profit Buzzers. The next theme that we're focusing on in today is the consumption pack. Let's just pull up a V2 retail on the screens and see what that counter is doing in trade on the back of earnings. And you have a United Spirits that is in focus as well. Both these counters, 5% is what V2 retail is locked in upper circuit. And if you talk about a United Spirits, that's down almost 1%. First, let me get in Mahima to tell us more in terms of what has worked and what has not worked for both these companies. Mahima, over to you.
Right, so I'll start with V2 retail. V2 retail has set the tone for the other retailers that are working in tier 2, tier 3 cities like V-Mart and Vishal Mega Mart. The revenue was up 58%, EBITDA was up 83%, margin at 18.9 versus that of 6.3, and net profit is up 117%. Now, in terms of the key operational metrics, the same-store sales growth was up at 25%. The per square feet sales was at 1219. They've added 21 stores this quarter. And average selling price went up to 343 versus that of 291. The average bill value went up to 924 versus that of 855. Now, what's worked for this? Basically, it's focusing on penetrating the underserved rural market. Rural consumption, as we've seen in other FMCG staples as well, is growing. And this is clearly benefiting companies like V2 Retail. They've also shown robust growth despite weak consumer sentiment in retail. In the con call also just recently, they've raised their revenue guidance, and what they've said is that most of their revenue uptick came from volumes and not value, which is kind of a very good thing for a retail company like V2 Retail. Now, in terms of the second counter, that is United Spirits, decent set of numbers but not very impressive. Revenue was up around 11%, EBITDA up 17%, margins slightly did see an uptick of around 30 basis points, and net profit however was down 4.3, but this net profit was down 4.3 with respect to a one-off that was an exceptional item of 65 crore, which was an expense towards surveillance costs relating to a closed unit. In terms of net sales value, it grew by around 14%, volumes were up 11%. Prestige and above category was expected to be better than what it was. It grew at around 11% because premium category is what's auguring growth for all of these alcobev companies. But now we've seen a trend as to last year also we've seen that on account of a higher base as well, we're not seeing as much as a growth in the premium segment as we were seeing in the in FY24. The popular segment grew by hardly 6%, which is why the stock is kind of seeing a beating in trade today.
Right, so that's with regards to both the counters. Lancelot, two stocks, United Spirits and V2 Retail. How are you looking at both these names?
So I think V2 Retail did come out with good numbers this quarter. But I think that's also been in anticipation because the stock has been rising consistently over the last 6 months and valuations have become a little expensive. So given that, yes, we are seeing an improvement in rural consumption and tier 2 cities consumption has improved. And probably the economic data that has come out has shown that there is a lag effect. Maybe the consumption in metropolitan and cities is actually had slowed down and looks like it might remain slow for another quarter or so. So definitely the opportunity would be to look at some of the beaten down companies in the metropolitan and cities space and look at valuations there, because valuations have become attractive. So some of those can be accumulated at this stage. However, if you compare the consumer discretionary companies as well as the staples companies, I think discretionary companies are better off because recovery is much faster there. So while you saw in the case of United Spirits that it is down at the moment and the results were relatively flat, but we are expecting to see that with consumption improving in cities and in metropolitan areas, you should see an improvement in the performance going forward. So United Spirits now has corrected a bit, and you are seeing some amount of further correction. So any opportunity to in a decline, this would be a good opportunity to accumulate this stock, because over the next year or so, you will see consumer discretionary, especially with demand growing from the domestic, the cities, that will again bring up the sales in this business.
Right, that's United Spirits and V2 Retail. In fact, let me welcome in Akshay Bhagwat from JM Financial as well. Akshay, good afternoon and welcome to the show. What are charts indicating for both these stocks?
Good afternoon. So first of all, United Spirits is in a very strong uptrend. It's just that the last few trading sessions has been a rather choppy directionalist move for the stock. So broadly, the view is it is in a positive zone. 1350 is a very important support. If you are having the stock, I would advise to hold it. Even opportunities on slight dips around 1450 or 1425, you can consider buying it. Overall, this range bound journey can see a retest of 1700 on the upside in the next 1.5 to 2 months time frame. The other stock is V2 Retail. I believe it's on circuit. So really, the only advice here would be to continue to hold because it's in a very strong uptrend. But if you're looking at levels to take your profits from a short-term perspective, somewhere around 1925 to 1950 is the level where you can consider taking your short-term profits in this counter.
Right, so that's with regards to the retail space, but let's just quickly address the markets right now. Almost a 150 to 170 point cut that we are seeing from the day's highs in terms of Nifty 50. Bank Nifty as well, almost a 300 points cut from the day's high. Little over 500 points is the kind of cuts that you're seeing on the Sensex as well. Pull up Nifty and the mid cap and the small cap index. The cuts are slightly deeper there, and we are now again trying to inch towards the day's lows as well. Still a little away from there, but it's going to be interesting in the second half of the trading session because the FI activity is going to become crucial as to how the strategy should be panned out from here on, because they have remained sellers so far. Their buying needs to come in as well to start supporting the pre-budget buying that we are seeing by DII so far. So that's what it's looking like in terms of the markets. But staying with the consumption pack, there has been a prolonged urban slowdown, and that is actually prompting FMCG makers of daily essentials to roll out smaller, lower priced packs of premium products, and this they are doing only to boost the demand across categories from soaps, shampoos, snacks and frozen foods. In fact, what's interesting to see is that all of these small packs are only volume drivers. The value actually comes in from bigger packs. The key question over here is going to be, if this is the strategy that they are going to adopt, how big an impact will it be on their margins? But first, let me head across to Sesa with more details on the same. Sesa, over to you.
The prolonged slowdown in urban consumption is posing a unique challenge to FMCG companies as their premium consumer base shrinks. Now, while consumers mainly in cities are still purchasing premium products, they are opting for smaller versions of such products to manage their budgets amid inflation. Now, HUL has recently highlighted that this shift to smaller packs is a trend breaker, something that they did not observe even in the previous quarter. The company considered a barometer of FMCG consumption, stated that this behavior is offsetting the typical uplift that companies experience when premium products grow faster than rest of the business. Like HUL, several other companies such as Godrej Consumer, Colgate, ITC and Britannia have rolled out mini packs of their premium offerings to boost demand. However, with urban demand showing no signs of improvement and large packs continuing to grow at a slower pace, companies risk a delay in their growth revival.
Okay, so urban consumption, clearly we're looking at a slowdown as per what the HUL commentary also was like. But let's look at some other stocks as well, which are in focus on the back of the revision in the FY25 guidance. The first one being Elecon Engineering. The stock is down today after the company revised its revenue guidance of 15%, saying that it may miss this by 3% or so in FY25. However, they've maintained the EBITDA margins of 24% despite the revised guidance of 12% that we are looking at. The revision is mainly on the account of challenges they are seeing in the macro picture and in some other sectors as well. Order inflows have also delayed in division due to the external macroeconomic challenges which are taking place. Now, coming to Syngene International, this is another stock in focus. We talked about the earnings picture, but let's look at the revenue guidance. Now, they've lowered their FY25 revenue guidance to single-digit growth with flat profit expecting. Now, the company was expecting this high single-digit to low double-digit growth in FY25, but due to the demand, due to the 8 to 12 week delay in demand recovery in US biotech funding, the Q3 was impacted. So Syngene International also looking at the cuts of around 3-4% in trade. Looking at the cuts of 6% in trade today. And lastly, we have Amber Enterprises, which came with a very good set of numbers. In fact, the company also revised their revenue growth guidance to 55% from 45%, with the intention of maintaining this guidance of doubling revenue in the railway and defense segment. Lancelot, let me come across to you 3 interesting counters wherein we are looking at the guidance revision. What is your take on some of these counters?
Yeah, I think, some of the counters which you mentioned, with urban consumption slowing down definitely has seen an impact in their business, as well as, where you are seeing some amount of discretionary spending, falling because of the pressure of inflation in urban areas. That is also driving down sales growth for a couple of these companies, and that is again getting reflected in terms of the re-rating in the earnings spectrum. So, but if you have to look at it from a little longer perspective, while this may continue for a quarter or two, at the end of the day, you will see incomes even in urban areas rising, and that could again bring back urban demand, especially in the discretionary and in the consumer staple space. So it's important to look at the valuations at which you're accumulating some of these stocks, because if the valuations drip a little further, then they become attractive plays, and one can then accumulate the stock over time. And whenever the cycle turns, then you will turn, they will get re-rated on the upside, and that's when you will make significant profits. So it's worthwhile looking at valuations in all these stocks which are correcting now, because at some point in time they will become attractive options to accumulate.
That's the fundamental view. But Akshay, coming to you, what is your technical check indicating for the 3 of these counters which are there? That's Elecon Engineering, Syngene International.
Well, for Helicon Engineering, it's been more of a range-bound price structure, as I see in the last couple of months. The key level which you need to note if you're a short-term trader is 520, 520. So till the level of 520 is defended by the bulls, I believe there is no reason to kind of trigger your stop losses in your buy positions. But yes, if 520 breaks, then that can be a possible trigger for a short-term momentum trigger on the downside, in which case you might see levels till 460. So we are at 540. Keep a strict stop loss. Would not advise to buy, but keep a stop loss below 520 is the advice for Helicon Engineering. As far as Syngene goes, I believe post the results, there has been a sharp downtick, a sharp sell-off, and this can kind of get arrested around 760. So there is a temporary momentum downside which I see in the stock, and 760 can be the possible downside. So a negative view for Syngene for short term, and a 520 level based stop loss on Helicon Engineering is the suggestion to hold.
Right, so that's the view coming in on the three stocks that are in focus on the back of revision that we've seen in terms of the guidance. But looking at order wins, HFCL and NBCC, let's just pull up both these counters on the screens and see what they're doing in trade. Advanced purchase order of little over 2,100 odd crores is what HFCL has got, and this is from RVNL. The stock not doing much, under pressure to the tune of almost 1%. And additionally, if you see, this is a 10-year annual maintenance order also. The execution period overall is for 3 years, but the maintenance order is for 10 years. In terms of NBCC, a 230 crore order is what they have got. Their order book stands at around 84,400 odd crores. So that's with NBCC. Again, that stock is also pretty much on the borderline. Akshay, let me come to you first on this. NBCC, if you see in terms of the charts as well, on a 1 year basis, the stock has been volatile, but a 31-32% upside is what we've seen on the counter. What are charts indicating on this one? And if you see in terms of HFCL as well, in the last 1 year, not done really much, hit a peak of nearly around 160 and again cooled off now. What would you recommend?
First on NBCC, I think the last week was a pretty good week for the stock. There was a strong momentum pickup from 80 to 95. This week we are seeing a slight cool off, and overall, I think this is more a stock where you kind of buy and hold with a minimum 2.5 to 3 month perspective, because the medium to longer term charts are still pretty strong. It is just that the zone which we are dealing with is 85 to 90 is a choppy zone that is valid for short term. So consider this stock from a slightly medium-term horizon. The recommendation is to hold with a stop loss of 75. If this support range holds on, then you can anticipate a pullback right up till 115. That's the point where you need to take your profits in this stock. Now, moving to HFCL, the trend here is clearly negative, and I believe there can be one more lower low or a lower swing low of 85, which can be tested in the days to come. So till the stock trades below 110, that's an important resistance to keep a watch on. The view is negative with a possible down test of 85 likely in HFCL.
That's with regards to where HFCL goes, but we're completely out of time. Thank you, Lancelot. Thank you, Akshay, for joining us on the show and sharing the views. It's going to be an interesting second half of trade today to understand the trends from here on. With that, it's a wrap on this edition of Profit Buzzers. Please stay tuned to NDTV Profit. Up next is a conversation with Hardeep Singh Puri.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
They say fortune favors the prepared. The more prepared you are, using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
The mother of all Kumbh Melas, at a scale never seen before. Livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMC's compensation for LPG under recoveries might be seen. So these are Macquarie's expectation on different sectors as to how budget may come out with different changes in different sectors and how it may impact these sectors.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday.
We have Union Minister Hardeep Puri with us this morning at a time when I think very clearly everyone wants to hear what he has to say. So much happening on the global stage as far as crude is concerned, India's energy needs, and of course, coming at a time of bumper numbers, quarterly numbers coming in from HPCL and BPCL. So much to unpack, sir. First of all, thank you so much for your time on NDTV Profit and speaking to us today.
Thank you for having me.
Let's start with whether, like us in newsrooms, there is now a Trump tracker. Seeing what the US president is saying, and in his latest at Davos, talking about how he wants OPEC Plus to reduce prices, sanctions on Russia. Just your views on that as at the outset.
I can share my views and try and comment on what's happening in the world. But I want to start a little differently. You know, all of us, we have minds which are wired in a particular way. My mind is always wired to smell and detect the good news. So when you talk about Trump and tracking, I can tell you when he says that the US administration, and this was talk even before the celebration of democracy there, that US is going to remove all remaining restrictions, all the temporary halts that were put on production of gas and oil, etc., will be spoken or referred to in the past tense, and that he's calling on the other players, the major stakeholders in the global system, to lower oil prices. So that to me is good news. And I can also tell you that this fits into a pattern of analysis which we have for a long time believed in. It stems essentially from the fact that there is more than enough crude oil available in the world. Today, you cannot, in fact, talk about shortages. Today, you are talking about availability. There is a fundamental difference between availability. Now, availability was artificially reduced from 102 million barrels a day to about 97 or so. Okay? But meanwhile, what has happened after that artificial circumscribing of availability by you-know-who? There's more oil coming on it from the Western Hemisphere. Yeah. I mean, I hear every day reports of first Brazil, they produce 3 million barrels, another 140,000 barrels is coming on stream. Canada, Guyana, Suriname, and now the United States.
No,
so there's more oil than is required. Now, will that bring price down or not? My submission to you is that even without this kind of heavy intervention, price of oil has to come down, because it's ultimately a question of demand and supply. The demand is not growing up that much. Those who are on the supply side of the game will tell you, demand bahut badh raha hai, you know, you better buy now, but buy long term. I don't think, where is the demand increase taking place? If you look at the state of the global economy, if you look at the levels of saturation, say in natural gas, take Europe as a case in point. United States wants to sell more natural gas, There's more being sold by Qatar and the United Arab Emirates. By Mozambique, gas is coming on the market. So I think insofar as natural gas is concerned, come 2026, and I'm always being a little more cautious. It could happen even in 2025 towards the end. More than enough crude available, more than enough natural gas available. And what is the president saying? One must stop calling him president-elect, but he's now in office.
He's saying drill, baby, drill.
Well, drill, baby, drill is a catchy way of messaging that if you were held back by certain concerns, I'm not saying they were not valid. I mean, if you believe that fracking has major environmental concerns, that's your lookout, all right. But he's saying, whatever it is, we will produce more and we'll put more on the market. We want the international price of oil comes down because that is a major cause of the economic woes that the world is facing. And then, interest rate, taxes, all that. So to me, these are positive developments. They are positive developments because I am more than sure. I mean, I sometimes try to persuade myself that, let's stop being so sure. Our consumption is going to grow up. In the 3.5 years, or even not even 3.5 years exact, that I've been associated with the Petroleum and Natural Gas Ministry, Madam, our consumption of crude oil per day has gone up from 5 million to 5.5 million barrels. 500,000 barrel increase in 3 years. Now somebody asked me this question, one of the S&P, one of the financial groups asked me, when do you think India's demand will peak? And I gave an answer which in retrospect was the correct answer. I said, listen, if you look at international estimates, I didn't tell him that, I'm telling you, so I'm giving you something on my, all of them say at least for 20 years. Even the most conservative analysis say that your oil demand will continue to grow till 2040. Many say it will go until 2050. So I saw a reading of 5 estimates yesterday, all Western estimates. Yeah. Now, if your demand is going to grow up, you need that because energy is the lifeline of an economy, and you have a situation where your demand is going up, you've got availability, your E&P is going to grow in a very big way. I think these figures. Your companies are doing very well. Yesterday, BPCL, by the way, BPCL I always take special pride in. And even if their results hadn't been so good, 20%, well, this is a company some people wanted to sell earlier. Yeah. And 20% profit on year, quarter on quarter.
So may I pose a question? And in connection with BPCL and what they overall, yes, drill baby drill, good, more supply, less prices, good for India. But specifically, as bumper as BPCL results were, no doubt about it.
HPCL is even better. Is 300% profit.
The one query that the street has is now what happens when we reduce our import of Russian crude, which came in at better margins? What happens to gross refining margins?
No, hold on. I would worry about gross refining margins. It's very legitimate. Because, look, it's, there are fascinating challenges. Within my 4 or 5 companies, some of them are very happy when oil prices go up. They're very happy because they extract and export.
Of course.
Others have to import. So I think they've all learned that over a period of time, you rejoice in the success that you have now, but also prepare for another day. So that green transition is a very major element of them repositioning themselves. They're not the only ones doing it. The global companies are doing it too. If you look at the names have changed. Okay? Total is not Total Green. Doesn't mean that Total stops traditional fossil fuel or gas. Look, it's not just refining margins. There is also another very, very important development taking place. Your refining capacity is really growing. And growing, look at the figures. You have today about 260, 270 million metric tons per annum capacity. Madam, you're going to have 310, 320 in a short, because this is all contracted for. We're talking about a 80,000 crore investment in one of the southern states, which will have about 20 million metric tons per annum or thereabout. I'm saying your consumption is going up, your E&P is going up, your ability to navigate and access availability is on the increase because you've diversified your sources. Why have I given you this long-winded answer to your Russian
Yes.
No, if I was sitting in your place and you were sitting here, I'd also be needling. Look, the Russian imports were never a part of the Indian oil import scene. It only started in 2022.
Yes.
And why did it start in 2022? Because there was geopolitical turbulence, I'm choosing. It was followed by Russia-Ukraine, was followed by trouble in the Red Sea, the Houthis attacking people. So suddenly we found that a country which produced 13 million barrels a day decided that it was going to make energy available at some discount. Now those discounts are also not what appears in the market, but a new source came on to being. A new source came on. Like Argentina's come on the scene as a new source.
So can I just complete? Of course, of course.
Madam, what happens is when our people, they have diversified there from 27 to 39. Now with Argentina coming, it will be 40. So when February 22 happened, they suddenly found that there was another source which was available for import of crude. This is all that happened. Why is it easier for us? It's easier because we issue tenders for import at the point of importation. The point of importation, when I want crude delivered in Mumbai or in Dahej or in Visakhapatnam. I'm just giving you a random name. And so much quantity desired at such and such price. And people will float a tender. Now the issue is, who will respond to the tender? Somebody will quote a lesser price. Then they say, oh, hame shipping pe lag gaya, ye lag gaya. Arey bhai, they have to deliver at the point of this thing. Jis pe bhi lag gaya. And I can tell you, this is my reading after 3.5 years of experience, that the world is going to fundamentally change in terms of energy. We have a situation today, Guyana is supposed to be the big find. But what happened? You drill 16 times. By the way, drilling offshore is very expensive. I think it should cost several $100 million to drill a well offshore. They did 16, no success. 17th time, they struck gold as it were, oil and gas. I think, and I'm very confident about that the actual Guyana, many Guyanas are waiting to be discovered even in the Andaman Sea, number one. Number two, look, it's not as if there is a switch, right? That I walk into this room and that light of yours, which is making this conversation possible, it's switched on and off. Everything has a wind-in period and it has a wind-out period. We are today on the 24th of January. These sanctions, which you call, first of all, they don't hit all the entities. There's no sanction on no Russian oil. But these have to wind down or wind in or kick in or whatever expression you want to do by 31st March, if I remember correctly. So, my answer to your question is, no need for any panic. I would say, I wouldn't even characterize this as anxiety. This is the world we live in. You sign term contracts, which means over an extended, long, predictable period of time. You also buy spot. This is a fascinating place. Sometimes the price in one market goes higher or lower than the other. I think India is very comfortably positioned. I saw some interviews by one of my colleagues, the oil company chairman, I think it was IOCL chairman in Davos, and he's saying the right thing, that we can navigate this.
Yeah.
Now what happens? If Russian oil, let us first of all, look, there's also a bit of leveraging going on the other end, between President Trump and this thing. He wants to bring the conflict to an end.
Yeah.
If the conflict comes to an end, in any case, the problem is solved. If the conflict doesn't come to an end, we'll see what is happening. Who will sell?
Do you think he can end the conflict?
Oh, I am very sure.
Yeah?
I've always said that a conflict like this cannot be frozen in time. I mean, how long can you look at the enormous damage which is being done, the cost of it.
So let me specify, and you've explained this very well, sir, that India has a lot of sources. I think, and let me laser point it, the only quote-unquote concern, if at all, is that we had a source of relatively discounted crude for a certain period of time.
Not always.
Do we now have to pay more?
No, not at all. I see the international price coming down. I mean, I don't know. I don't predict. I'm not in the oil prediction business, and a lot of the oil prediction business is also people who you try to influence within quotes the oil price. I mean, if there's a news item somewhere, suddenly Brent will shoot up or something else will shoot up. I am confident that there is more than enough oil available in the world, number one. New sources are coming on the market, and even the existing sources, sometimes they give you more, sometimes they give you less discount. When the 22 February started, initially there was a spurt of imports from Russia. Then the Iraqis, if I remember correctly, turned around and said, no, we can supply. So it went up and down. It said, look, on an average you buy, say, 5 million barrels a day. And my sense then, when I just joined, was that it is about 800,000 barrels a day each from Saudi Arabia, UAE, Kuwait, Iraq, and about another 800,000 from the rest. Then Russia came on the scene as a new player. Today we've got other people coming on the scene as a new player. Now, can I change the term of your analysis? We have an advantage. Today you don't have many buyers like India.
That is true.
That is absolutely true.
That is
now, so what happened? You are holding stocks.
This is a buyer's market.
It is. I wouldn't go to that extent as saying. I would say that if you have there are a lot of buyers who don't have liquidity, who can't pay. Who like there's a lot of demand for energy available in economies which have to take loans or are borrowing for their.
We have demand and we can pay.
Absolutely, and you have a fantastic track record. Not that LCs are being opened and then money is being paid 1 month later, then people are cribbing. No, you deliver at the point of importation, your payment straight away. So we have two advantages very clearly. The economic activity has shifted here. So I'll tell you, and if you know those people who are in the international business also are very conscious of this factor. Why do you think companies are, Petrobras is collaborating with Oil India in offshore seismic surveys in the Andaman Sea. BP is helping ONGC in Bombay High into rejuvenating those wells, which are some of them are very old. Because this oil business is not a business of philanthropy or altruism. No. It's a money-making business, okay? And a country like India, which is growing well, which has confidence, today, when you have India Energy Week, and I hope you'll be there, you will find that the number of people coming in at international prices to participate, that is an opportunity. So, whether it is, first of all, conflicts don't continue forever. You've just seen that in the Middle East. Secondly, even if conflicts have to continue, you have to navigate around them. But I'm positive on all fronts. I think conflicts will wind down. The availability there, then you're dealing with particular grades of crude. I must compare. If you supply one grade of crude, 2-3 other people supply a grade of crude, sometimes you have to a little navigation.
So just one point of clarification, and for our understanding, because you have said that American crude is now also, an option that...
We're already buying $20 billion.
Does it cost more to transport from America? Is it a pricier option? Can you just give us some clarity?
For instance, American gas is certainly cheaper, from what I can remember of it. But whoever is selling you the stuff, they will price it in such a way as to make it competitive. How is energy typically priced? There's a cost of the barrel at the point of production. You add insurance and freight, you add the exchange rate, then you add the refining margin, dealers' commission, etc., etc. It's a very complex thing. But if you want to sell energy, you will price your source in a way that the price at the point of delivery is that. After all, he has to sell. Now, you can have two competing philosophies. One is, I see in some of my friends who are traditional exporter, हम एक्सट्रैक्ट नहीं करेंगे, बेचेंगे नहीं, because ये पड़ा रहेगा, हमें पता और 20 साल इस्तेमाल होगा. That is a dangerous philosophy also. Because it may so happen, and I've been telling some of the newer things, I said, your oil is coming on the market now. All right, you have tie-ups, etc. But, also be careful in another 20 years' time or another 15 years' time. People may already be locked into long-term term deals with others. So, I would say on all fronts, whether it is what is likely to happen as a result of decisions in the United States? I certainly see, I can't predict. I have been quoted to say that in addition to the 13 million barrels a day they're producing, they'll send another 1.5 million barrels onto the market. By when they will do it, I don't know. It could be 4 months, it could be 6 months. Some of those executive orders are taking shape and with global consequences. But more and more oil is coming on the market. Right. What will happen in the case of Russia? I personally believe some form of settlement will ultimately take place. The settlement will not be energy centric, but energy will be majorly impacted by that. If you can find an end to the major conflict, and I think it's in everybody's interest. But if you don't, then what happens? You should look at that scenario. Either case, we are cushioned.
I just want to come back, sir, to HPCL and BPCL, because like you said, and right now we're speaking live in the middle of markets as well. One query which is there is what happens to the LPG subsidies and the under-recovery is there for all of these companies.
No, thank you. I'm glad you pointed this out. First of all, you see these profits in spite of the under-recovery. That's one. Secondly, if you look at I mentioned to you BPCL, 20% quarter on quarter and year on year. In the case of HPCL, it's even higher. It's about 300%. I think, depending on whether you look at the consolidated or everything, so these are very good results. Look, when you are dealing with the profitability of companies like this, you will always have to factor in sometimes things like you're carrying inventory. For instance, I want to go away from LPG for a minute, and I'll then come to LPG. The issue is that if you acquire the raw material at 80 and tomorrow the price goes to 70, then your books will reflect that negative differential. Okay. Insofar as LPG is concerned, look, the fact of the matter is we are supplying clean cooking gas to the entire population now. We had 14 crore connections in 2014. Today we have 33 crore connections. If you say that one connection is one family, and let's say the family size is 4, then you have a situation that the 1.4 crore are covered. If 1.4 billion are covered, okay? In addition to that, from within that, you've got this Ujjwala scheme, which is 10.16%. What is happening? Today you are supplying clean cooking gas to a family of beneficiaries or labharthis for as little as 5 rupees in a day. The cylinder costs 500 rupees. That's a commendable achievement. There are large parts of the world, including some countries which are very rich in energy, where they are still using, at least for 30% of their rural population, they are still using firewood, coal for their domestic cooking, resulting in all kinds of health hazards and so on. Yes, there is a government intervention, and this government intervention is for a good cause. And I say full marks to my boss, the Modi era, amongst many other things, that it is, it has its achievements inscribed in gold. This clean cooking gas, it's a worldwide phenomenon. For instance, and we are now also going one step further. This is LPG, which is a product of refineries, okay? But we're also laying pipelines. I think the whole country has been 100% saturated on pipelines. It's not effective. Some sections of the pipeline I'm having to agonize. Where the natural gas supplied would be 25% cheaper than that. Just imagine what a revolutionary change this is. Now, this has happened in the past. If I remember correctly, I think a year or two ago, the companies ran a loss of about 28,000 crores. They came to us and we negotiated so-and-so. Ultimately, we were able to compensate them for 22,000 crores out of 28,000 crores. Secondly, and this is more interesting, there was also some under-recovery on petrol. We offered We even got some provisioning, I think about 15,000 crores. Yeah. But by the way, they were doing so well, they forgot about it, and we also forgot about it. So don't remind them through your show. So that 15,000. So whenever there is an under recovery, yeah, sure, we are there because it's for a good cause. It's not that somebody's getting rich as a result.
No, obviously, but this under recovery, do you see this being solved sooner than later?
The country is going to become rich, Viksit Bharat, then you won't need to give this kind
subsidies.
of support. Yeah.
And I suppose it would be fair to say that windfall taxes are now a thing of the past?
I don't think it's there anymore. If I went long
Last
back,
2 months is gone.
No, that's precisely the point. And look, I can share with you something on your channel. There was a lot of agonizing when it was imposed. Yeah. I mean, a small group of people, ministers, you will guess. And one of us said that, the problem with these things is once you impose it, it stays forever. It entrenches itself, if I can use such a term. But the point is, those are very special circumstances you are facing. There's complete turbulence. It was a situation where some people were, raking it in, and others were suffering. And those guys who were raking it in sometimes were not even making the basics available to the other. So then they turned around and say that, look, we have to do it because it was the imperative of the time, but we'll get rid of it. And I think that is the beauty of the Modi government decision making, that they imposed a windfall tax and slowly got wound down, became a little, now it's gone. And so let's not talk too much about it, but tomorrow there's turbulence. I don't want somebody coming around and saying, windfall tax. I don't think it should be done. Okay.
Just one point I wanted to get on, because you talked about piped gas, and that's important as well, the work that city gas distributors are doing. Now the tweaks on allocation of APM gas, administered price gas to them, and the cutting down of those allocations has...
Cutting down and restoring also. I think if you had this discussion 2 months ago, it was cutting down. In the last round, we restored some also.
Restored some. So just wanted to get your sense of the direction there.
You will always, in a system which is characterized by competing demands. By competing demands, I mean the consumer through the CGD network. Some core sectors like fertilizer, XYZ, power and so on. The government will have to step in. But again, I think this is a transient issue. There's more and more gas coming onto the market. I have been actively encouraging my oil companies, jahan se long term milta, sign karo. Qatar के साथ हमारी डील कितनी 28 साल के लिए or something? No, 28 के लिए, it's for 20 years or even beyond. So we already have the deal in 28 and more. I see wherever I go travel, which is not very often, I talk to people and people are wanting to give you gas. And there's a lot of interest from the United States to give us gas. This is a business where if you have the capacity or you can give them the confidence that over a period of time you will be a steady buyer, they can even make fresh investments to get you the gas. But there's more gas being produced even in Africa and other places. I also think that some of the issues that you are influenced by will be resolved. And I think there's an intent and a decision to go down that road, bring this under GST.
That was actually, you've led me perfectly, sir, to my next question.
Well, I anticipate, I can read where your inquisitioning is going, so I can quite happily, I'd have offered it up front. Yeah.
No, but it was also, now, do we see this segment under GST? Until that happens, do we see an excise duty cut?
No, wait a minute. You got both. Let me just first tell you, in order to ensure affordability, three, availability, we spoke. To ensure affordability, if I remember correctly, there were 3 occasions. One is November 2021, and the other was May 2022, and then in between. The November 21 and May 22 decisions resulted in 13 and 16 rupees cut, lowering, because of excise duty cuts. And the BJP states, of course, also added. Insofar as other factors are concerned, look, they will come.
Can we hope for more excise duty cuts?
I can't. GST decisions are taken by the
excise duty
states.
Cuts, sir.
But the central government, I think, most important thing is my senior colleague Nirmala ji is on board. But I cannot sit here in an interview with NDTV Profit and say GST. The GST Council's decision making is unanimous. But I see movement in that direction.
नहीं sir, excise duty cut होना चाहिए कि नहीं?
तो हमने तो कर दिया already. But I can't say that. Excise
More is required. Prices have come off since then.
Come where?
Come off since then.
Oh, wait a minute. They also went up. I mean, the last excise duty cut was, I think, May 2022. After that, prices have gone up. Look, somebody else has to agonize about that and worry about it. As far as I'm concerned, being the line minister, what I look at is how much is there availability? There's no shortage. Is it affordable? It's cheaper than anywhere in the world. It's the only country in the world where it's come down. Is the green transitioning taking place? Absolutely, it's taking place. Biofuels, green hydrogen and everything.
So a lot to unpack there. Thank you so much for your time, Mr. Puri. And I think that one big message, there is nothing really to worry about Russian imports coming down. There are enough sources as far as India is concerned. This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
They say fortune favors the prepared. The more prepared you are, using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why?
Well,
welcome. This is India Market Close. We're taking a look at how things are faring as far as markets are concerned. It's turning out to be yet another Friday where there isn't as much encouragement, at least in terms of those who are bullish in the markets. It's been largely flat, marginally in the red for the Nifty 50. There was expectation of some sort of short covering to come through, but that hasn't really played out. And the Bank Nifty is more or less moving in tandem with the Nifty 50. It's been a tough couple of days, even while we haven't seen further correction in benchmark indices. It's been a week in which there's been painful consolidation through and through for the benchmark indices, with the expectation of some sort of direction at some point in time that hasn't come through. And in fact, we remain range bound. The Nifty continues to move within the mark of 23,000 on the lower end and 23,500 on the higher end. So that 500 point range that we have been consistently been working around with. But let's talk about the heat map for the Nifty 50. Let's see how things are faring in today's day of trade. So firstly, very evenly poised between gainers and losers as far as the Nifty is concerned. We are looking at weakness in Dr. Reddy's. We're going to talk about this in our show today. Trent, Cipla and Apollo Hospitals along with M&M also weighing down on the indices. We also have advances for HUL, Eicher Motors, Britannia, but the advances aren't exactly making up for the kind of losses that we are seeing on the benchmark indices. Before I hand it over to Mahima, let me very quickly take a look at the advance decline ratio as well and see how things are faring. And throughout the day, consistently, we have seen more losers as compared to advances, and this is a complete reversal of what we have been used to over the past few days. So today we just have one advance for maybe 4 and little over 4 declines. So not a very encouraging day, and it remains to be seen whether or not the upcoming week and the earnings in the upcoming week perhaps change the direction of the market. But of course, there's a lot to be said about the upcoming union budget as well, this coming Saturday, not tomorrow, but the one following that. And that could, after that, we could potentially start seeing some sort of direction. I'd reckon at least in the meantime, we're likely to see consolidation as far as the benchmarks are concerned, even as volatility climbs to rise in the run-up to that big event. But Mahima, what are you spotting as far as broader markets go?
Right. So Agam, the pain in the broader end of spectrum is more as compared to the benchmarks. Let's pull up the mid cap 150. There you go. It's down around 1.3%. The small cap 250 is also feeling the heat, and it's down about 1.7%. Let's first pull up the sectoral heat map and see how that's faring. Let's see which of these sectors are in green and which of these sectors are in red. There you go. It's the Nifty FMCG which leading the pack. Nifty IT slightly in green, about 0.6% up. But all the other counters in red. Nifty Pharma down by 2%. A lot of pharma results, came in yesterday post markets. Dr. Reddy, Mankind Pharma, Syngene, all of these weighing down on that counter. Nifty Media down by around 2%. Nifty Realty also facing the heat, down by about 1.5%. But some of the counters which are really seeing the pain. Cyient is one of them. The numbers were not very impressive. Net profit down by about 31%, and the commentary coming in is also not on the positive front, which is why the stock is seeing a downtick of 20%. Throughout the day, the stock has fallen. There's no uptick seen in the stock throughout the day. Let's also pull up something like Amber Enterprises. The stock is doing well in trade, not in the direction of where the market is headed today. It's up about 4%. The management has revised the revenue guidance. They've said that the revenue will grow at 55% rather than 45%. Let's also pull up something like Dr. Reddy's, Mankind Pharma, all of these pharma counters which are not doing very well. Dr. Reddy's down by around 5%. KFin Technology though, decent set of numbers, revenue up 32%, EBITDA up 33%. We'll also speak to the management today. It's up around 9% as we speak. V2 Retail is another counter which is doing well. It's a retailer in the tier 2, tier 3 cities, and rural consumption is picking up, which is why the counter is benefiting. We'll also speak to management of V2 Retail in the show today. It's locked in upper circuits since the start of the trade, and it's up 5%. IEX is one of the counters which is also in the green. Revenue up 14%, net profit up 31%, which off from its day's highs. It's up around 3% as we speak, about 3% as we speak. But with that, let's welcome in our guests on the show today. Deepan Mehta, founder director at Auxiliary Equities, joining us now, and Ruchit Jain, VP Equity Tech Research Wealth Management at Motilal Oswal, joins us now. Welcome to both of you, gentlemen. Ruchit, I'll come to you first. How are you reading the markets right now, and what should one do in this day of red?
Yeah, hi, very good afternoon. No, we are of the opinion to take some counter calls in this falling market at current levels. So primarily the reason is, if you look at the recent correction from the month of October, that was primarily led by 2 or 3 reasons. One of them was the dollar index, which bottomed around 100 levels during the end of September, and even the US 10-year bond yield, which bottomed around during the same time. So as the both dollar index and US 10-year bond yields rallied from the month of October, our markets have corrected since then, and there's clear and inverse correlation between both of them. Now, both the dollar index as well as bond yield has seen some correction in last 6 or 7 trading sessions. The dollar index, after hitting a high of around 110, it's now sub 108 levels. So I think this cool off in dollar index and the bond yields is somewhat positive for the equity markets. And so if you look at the other factors, then markets technically are also trading around that support of 23,000 to 22,800 levels. And FIs have short heavy positions with about 83% of positions still on the short side. So the room to form fresh short positions is not there by FIs in the index future segment at least. So considering that these global factors are turning positive, I think going ahead, as we approach the expiry, some of these positions of the short positions would get covered, and we would witness a pullback move or a relief rally in the markets in the coming week. I think from here on, downside seems to be limited for the index. So we are advising to look for some contra trades, maybe 23,000, 22,900 is the good support range. We don't expect markets to go immediately below that. A pullback move could take the markets back towards 23,500 before the budget itself.
Sure. Deepan, good afternoon to you as well. We're not exactly halfway through the earnings season, but a significant amount of important companies have reported numbers. What have you made for the season so far? And are you tempering your earnings estimates even further here on?
Yeah, good afternoon, and thank you for having me on your show. I think by and large, this earnings season, like the last one, has been very disappointing. And clearly, growth rates have come off for a lot of large cap companies or mid cap companies as well. And that's reflected in the sharp correction which we have seen over the past few trading sessions or so. And normally in earnings season, we see the good news come in the beginning and the bad news come later on. So if this is the good news sort of phase of the earnings season, I don't know what's going to happen towards the end. But by and large, I think apart from pharma and a select stocks here and there, maybe in solar energy related businesses, the numbers so far have been very disappointing. There are a few bright spots, no doubt, but on the whole, we are seeing that across the board, there's a slowdown, call it base effect, call it cyclical, slowdown, whatever you may, but I think that we are in for a sort of a longer challenging period going forward.
But based on that, are there any opportunities at the moment, Deepan? I know that the sentiment is not great, but some may argue that it is this exact time when all the bulls have thrown in their towels. Perhaps you could see some amount of a leeway or an opportunity here. Your take, or do you think that you'd still like to see a little bit more correction before you start seeing prices which are a little bit more tempting?
First of all, I'm not sure that everybody is bearish. In fact, the bears who are talking a bit cautious like me are still in the minority, and still many professional investors, mutual fund managers are very positive on the market for their own reasons. But that's what creates a market. So I'm not that optimistic still. I think correction has some way to go. What I've learned in 30 years is that markets are slaves of earnings. And until we don't see a broad-based revival in the earnings, we cannot say that the worst is over and that's the time to buy. So I think we need to have that very, very clear as a fundamental analyst and fund manager that we are certainly not done with the corrective phase, according to me. And secondly, I don't know why we should be all the time trying to do bottom fishing. In fact, the question that investors should be asking is that suppose they want to raise cash levels, then what strategy they should follow.
And according to me, I think wherever the P multiples are very high and earnings are disappointed, those are clear sell signals. And you could, trim positions over there and go slightly into liquid cash because I think the market may trade even lower than this, and valuations are still not reasonable for decent size, good quality businesses. So rather than try and figuring out, where the value has emerged just now and what to buy, I think it's important to have each one to look at their portfolio and see how much cash they still have on their portfolio.
All right, Ruchit, how are you reading Bank Nifty right now?
We have seen that Bank Nifty has been a bit laggard, and Nifty has been more getting support from a bit of defensive sectors such as maybe IT or FMCG over here. So I think Bank Nifty still has no signs of any significant uptrend coming in. But 49,500 is the immediate resistance levels that we are watching for. So 49,500 to 48,500 is a broad 1,000 rupees range since what we have seen in last few trading sessions, it has been consolidating in. So once we see a breakout from either side of this range, then we expect next leg of trended move to fold out.
All right, and your top picks for the day?
So I have a couple of recommendations, both from a short-term perspective, but primarily we are looking for such names, which in such kind of volatile markets can see a relative outperformance. So one of them is Bajaj Finance. We can clearly see a relative outperformance in Bajaj Finance over the last few weeks, where in spite of the market corrections, the stock has not seen any price-wise corrective phase. In fact, the price up moves in between has been supported by very good volume. So high top, high bottom structure is also there. So I think Bajaj Finance is a good buy over here. One can go long with stop below 72.50 for potential targets around 7800. And Britannia is another name which technically is looking positive. After the recent correction, the momentum readings were quite oversold. And in fact, not only Britannia, if you look at the FMCG index also, and there is a clear positive divergence along with the RSI in the Nifty FMCG index, which indicates that a relative outperformance could be seen in selective FMCG stocks. So within that, Britannia looks positive, which one can go long with stop below 4950 for potential near-term targets of 5350.
Okay, that's as far as Ruchit's picks are concerned. Before we move on, Naima, a quick look at the Nifty, and of course from there on we can move move forward with the show.
Right. Just let's pull up. There you go. It's down around 0.2% as we speak. So we're seeing that it's coming off its days highs by quite a significant quantum. And Ruchit, I also wanted to understand with respect to the Nifty Realty. We've seen that Nifty Realty has taken a significant amount of beating in the past few days. How much more of a downside are you seeing on the Nifty Realty?
So definitely the trend for the index still remains negative. Even during some of the market pullback moves, we have not seen realty stocks participating much. So I think this down move could continue for a while. And on the index front, if you look at the retracement supports, then they are coming in the range of 820 to 800. Clearly until we see any kind of signs of reversals coming in from the large cap realty stocks, one should tend to stay away from this sector.
All right. Thank you so much for that, Ruchit. Also, a quick take on the Nifty Pharma before we go on to Rucha for Cyient, which is our top stock of the day. How are you reading the Nifty Pharma chart?
No signs of reversals there too. Since last 5 or 6 days, we have seen some sideways action in the Nifty Pharma index, but the important resistance is around 22,500, which has not been taken out. In fact, if you look at yesterday's high, it was around 22,250, and today there is no follow-up positive move over there. So I believe that until 22,500 is taken out, Pharma would rather see some consolidation or relative underperformance.
From there on, let's talk about Cyient, because that's the top stock of our day. It's taking a knock of 21% right now. We have Rucha joining us to tell us why. Rucha.
So yes, Cyient is the top stock of the day, and this one has fallen more than 20% in today's trade, and this is because of its third quarter earnings. Well, let's talk about the numbers first. Revenue up about 4.5% over here to 1926 crore. Margins at 11%, which is a tad lower than last quarter, which was at around 12.5%. Net profit down about 32% in the third quarter. Although third quarter numbers are not that bad, to justify the 20% downfall, but what is actually buzzing for the stock is its FY25 guidance. Well, the company has cut its guidance for the second straight time from a flattish kind of growth in FY25 to a degrowth of negative 2.7%. And they also expect the EBIT margin for FY25 to stay in the range of 13.5% over here. And all of this is primarily due to shifting of revenue trajectory within 1 year. Now, remember that many of the IT companies have called out for how next year will be better than this year, but nothing seems to have been called out by Cyient in the earnings conference call. Let's talk about the segmental DET business, which is the digital engineering and technology business. Transportation grew about 3.5%, but sustainability, from which the company earns 30% of the revenue, degrew by 1.3%. Another piece of news over here is that the management, that is the CEO of the company, Mr. Natarajan, has resigned from the company with immediate effect, as I have mentioned over here. And guidance and the CEO change over here has caused the stock to tank more than 20% as we speak right now. But in terms of order book, well, the order book was healthy. Total order intake of about 312 million, up 5% YOY, of which around of which 234 million were the DAT business with the total contract value. They've also won 13 large deals. So order intake is also healthy. Numbers are decent, but cut in guidance and resignation of CEO are the two major points which is causing the stock tank in trade today.
Okay, thank you so much, Rucha, for joining us and taking us through why we've seen such a sharp knock on Cyient. But let's move on and talk about KFin Technologies. Now, this is one of those companies which came out with earnings. It was a strong set of numbers, and we're actually looking at a sharp up move there as well. Do remember that when it comes to KFin Technologies, that has also corrected to a certain extent along with the rest of the markets. But it does seem like there is a handful of investors who are back buying into this particular company. To talk to us about the quarter gone by, we're in conversation with Vivek Mathur. He's the Chief Financial Officer at KFin Technologies. Vivek, good afternoon, and thank you so much for joining in. Well, sure. So can you tell us about what's worked for you in this particular quarter? I reckon that a lot of the the processes that you brought together over the past 3 to 4 quarters of are coming together and paying off at the moment. The question really is that as you see this momentum build up, can you also expect this to sustain over the next few quarters with the kind of growth rate that you have shown so far?
Yeah, thanks, Agam. See, we have been witnessing growth in the domestic mutual fund AUM, and off late, you see little choppy waters in terms of AUM shaving off, but the net inflows continue to remain positive. That's about 70% of our revenue. And we believe as long as the net inflows continue to remain positive, as we have seen in this quarter, which actually outweighs the reduction in the mark-to-market correction. And if it continues to flow in coming quarters, domestic mutual fund AUM and revenue will continue to grow. But this is not the only line of business that we see the growth in. AIF and private wealth management is something that is seeing a humongous growth in terms of revenue and penetration and setup of new funds in the Indian market. And that is where we see almost 80% growth year on year. And that is what is resulting in international and other investor solutions growth, which is exceptionally high and which is sustainable, because as the new asset class of 10 lakhs and above in terms of PMS is getting launched, we do expect this category to pick up. We have recently launched a private wealth management platform, and it's not just RTA, but we are increasing our penetration into other businesses, whether it is IT value-added services, which value-added services now contribute 7% of our total revenue. And international other investor solutions is 11% of our total revenue. So we believe that these are, growth engines for us, and we are looking at international fund accounting penetration with the tie-up with the BlackRock Adani, which is the front end, and we are the back-end service providers, where we will be able to service the fund managers at an affordable cost. We are actively looking up setting up an office in Thailand and winning more clients in Thailand. And as we expand our international journey, we believe that getting into Singapore and Dubai and getting relevant approvals to set up subsidiaries there is the way forward for us to grow the international business. So we will be looking at all engine growth and not one single engine growth, while it continues to remain 70% of revenue over a period of time as other businesses grow. In the next 3 to 5 years, the dependence on the domestic mutual fund business as a overall contribution to total revenue will keep coming down to in the range of about 55% from current 70%.
Right. Vivek, the other question is that with the way your business is moving forward, maybe 3 or 4 quarters down the line, do you expect the mix in which the contribution comes through from different avenues of your revenues to change? And if so, what are the slightly higher growth areas in comparison to what you have been used to so far?
Yeah. So as I mentioned, domestic mutual fund business, which is currently 70% of revenue, should in the next year or so, if you look at that, really depends on how the AUM moves, because that's dependent on how our AMC clients perform in terms of new fund offers, in terms of garnering more inflows, and how the mark to market behaves in terms of the international political scenario and the overall Indian economy overall performance going forward. But having said that, the growth engine, new growth engines for us is AIF, fund accounting, and NPS. NPS, just to mention that, the industry is growing at 13% CAGR. We are growing at 35% CAGR to acquire new permanent retirement account number subscribers. We have almost 3,000 corporate clients now and 15 lakh brand holders now. And the AIFs, we are servicing more than 535 fund houses now, with private wealth management platform getting launched and our expansion into international area. Fund accounting remains a key focus area of growth for us in future. And we believe that, the current growth rate, which is more than 50% quarter on quarter, will fuel up further in terms of the overall growth when the international market comes. While our margins or the yields in the domestic AIF business is in the range of about 3.5. In the international market, the base is 5 bips and it goes up to 20 bips. So the opportunity is huge for us. It's a matter of go to market, how fast we are able to set up shop, or we acquire a small to mid-size fund accounting firm, which will give us segue into multi-countries. So we are working on it as a parallel workflow to see whichever happens first, organic expansion or inorganic. But we are determined that we will be disrupting the international market to offer competitive, cost competitive solutions to the fund managers.
Vivek, I'm not asking you for a revenue guidance or anything, but would it be safe to assume that we'd probably see the same growth in FY26 to the tune of what we have seen so far in the 9 months of FY25, notwithstanding, of course, the fourth quarter?
Yeah, so we do expect steady growth of 18 to 20% CAGR growth on revenue. However, when the markets are good, you have witnessed 33% growth, in terms of quarterly jump as compared to last year. So depends on the market on the mutual fund, but other businesses, certainly huge promising growth, which we have witnessed continuously in the last 4 to 5 quarters on the fund accounting and NPS, and the issuer solutions business with the large number of IPOs coming. There has been a opening up of new demat accounts and therefore large number of folio growth for that we have witnessed. Some of the large IPOs that we have handled after the LIC IPO is Hyundai, and we are looking at and the Bajaj Housing Finance, and now we are looking at LG, and there are many more in the pipeline. So we do expect that non-MF business will contribute higher growth factors in times to come if the domestic equity markets are choppy.
Ability of your operating margins to enhance as well?
Operating margins, EBITDA margins will remain in the range of 40 to 45% because, that is something, if the market is good, we have witnessed Q3 at 45% and YTD at 44%. We do believe that, if there is stress on the AUM, then the margins may come down to 40%. But we'll be able to contain our cost, which we are effectively have been able to demonstrate, in the last 2 years, that when the markets are not so good, we are able to defer some of the decisions in terms of spends, in terms of development, and including, some of the employee cost deferments for increments that we have taken tough calls to manage our costs. And we do believe that in times to come, we'll be able to protect 40% EBITDA margins.
All right, Vivek, we leave it at that. Thank you so much for joining us and taking us through the outlook for the company. Wish you the best.
Thank you so much.
Well, we move on, and in an exclusive conversation with NDTV Profit's Tamanna Inamdar, Oil Minister Hardeep Singh Puri says there is an intent to bring gas under GST. He also spoke about making oil and gas affordable for common man and more. Listen in as we slip into a short break.
Whenever I go travel, which is not very often, I talk to people and people are wanting to give you gas. And there's a lot of interest from the United States to give us gas. You know, this is a business where if you have the capacity or you can give them the confidence that over a period of time you will be a steady buyer, they can even make fresh investments to get you the gas. Some of the issues that you are influenced by will be resolved. And I think there's an intent and a decision to go down that road, bring this under GST. If I remember correctly, I think a year or two ago, the companies ran a loss of about 28,000 crores. They came to us and we negotiated so-and-so. Ultimately, we were able to compensate them for 22,000 crores out of 28,000 crores. Secondly, and this is more interesting, there was also some under-recovery on petrol. We even got some provisioning, I think about 15,000 crores. Yeah. But by the way, they were doing so well, they forgot about it and we also forgot about it. So don't remind them through your show. So that 15,000. So whenever there is an under-recovery, yeah, sure, we are there. Because it's for a good cause. It's not that somebody's getting rich as a result.
No, obviously. But this under-recovery, do you see this being solved sooner than later?
The country is going to become rich. Viksit Bharat. In order to ensure affordability, three, availability, we spoke, to ensure affordability, if I remember correctly, there were three occasions. One is November 2021, and the other was May 2022, and then in between. The November 21 and May 22 decisions resulted in 13 and 16 rupees cut, lowering, because of excise duty cuts. And the BJP states, of course, also added. Insofar as other factors are concerned, look, they will come.
Can we hope for?
No, I can't make that. I can't. GST decisions are taken by the states, but the central government. I think most important thing is my senior colleague Nirmala ji is on board. But I cannot sit here in an interview with NDTV Profit and say GST. The GST Council decision making is unanimous, but I see movement in that direction.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
They say fortune favors the prepared. The more prepared you are using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMC's compensation for LPG under recoveries might be seen. So these are Macquarie's expectation on different sectors as to how budget may come out with different changes in different sectors and how Welcome back. You're watching India Market Close. Let's take a quick look at how the markets are faring. Let's pull up the Nifty 50 and the Sensex. Well, it's again a day of red. Nifty 50 is down by about 0.23%. The Sensex is also down by about 0.3%. But the pain is in the broader end of spectrum. Let's pull up the mid cap 150 and the small cap 250. The mid cap 150 is down by about 1.6%. The small cap 250 is down by about 1.9%. Some counters which are really feeling the heat and pressure on the back of earnings. Cyan DLM is one of them, down by about 20% Let's pull up Cyan DLM and see if it's still down by about 20% There you go. I'm sorry, it's not Cyan DLM, it's Cyient which is seeing the pressure today on the back of earnings, down by about 22%. We started the trade when it was down by about 20%, but there's no stopping to that, I believe, and it's down by about 22%. Dr. Reddy's is also feeling the heat, down by about 4%. Let's also pull up Amber Enterprises, something that's trading in green, where management did revise its guidance for revenue. They said that they'll do 45% growth, but now they've revised the guidance and said that they will now be doing a 55% growth. It's up on the back of that 3%. V2 Retail, let's also pull up that. Performing well in the tier 2, tier 3 cities. It's locked in upper circuit since the start of the trade and up around 5%. Let's also pull up the breadth of the market and see how advanced decline ratio looks like. The advance is decline ratio is highly skewed towards the selling side today, and there you go, 1700 odd declines versus 400 odd advances. Let's also pull up the heat map of the Nifty 50 and see what are the counters that are doing well. It's the Nifty FMCG pack which is kind of in the green and doing well. HUL, Britannia, Grasip, all of these counters doing well, but Dr. Reddy's again on the back of earnings doing not very well. Also Trent not doing very well. But moving on and onto our new segment, Heard on the Street. We all know there's always a lot of chatter in the dealing room about what's buzzing and why. NDTV Profit brings you all that and more. Let's first head across to Hiral. Hiral, what are you picking up?
So it's interesting to see what's happening with our markets right now and what the dealer room checks are indicating. Clearly, they've been waiting for this 230 move to understand where the FI action actually takes us and get us more clarity on that front. But overall, positions have been starting to build ahead of the budget. That is the indication that we are seeing so far. There has been accumulation right now that's happening with regards to where the cement space goes, and that was in yesterday's session. Today, power is where the accumulation is happening as per dealer room checks, and the metal sector is also showing you some signs of buying strength. What the dealers are indicating right now is that the price damage that we were expected to see so far, that has happened, and there is a possibility of a short covering rally that could be triggered as well, but this is only once Nifty will start trading above those 23,600 to 23,700 levels, and the budget accumulation can be done as major global events have got discounted by the market so far. So overall, no Trump impact that the dealer room is indicating so far. It's mainly going to be accumulation ahead of the budget so far in terms of the broader market mood check.
Right. We have Somit also joining in. Somit, what are you picking up?
Well, stock-specific action, one stock that has picked up much focus is Trent. If you look at the chart also of Trent, in just 1 month's time, from 7,500, the share prices have come down to around 5,500, 2,000 rupees fall that we have seen for Trent. Now, this fall, what we understand after speaking to multiple dealers is was triggered by a selling action that has been happening on an FI desk. A large FI has been continuously selling this counter, but what we now understand is that this selling is most likely over, should get over today or maximum by Monday. That is what dealers are indicating. The share prices have fallen by nearly 2,000 rupees for this counter. Another counter that is in focus is AU Small Finance Bank. Now, ahead of the numbers, we are seeing some selling that is happening at higher levels on the HNI desk on this counter. Now, the concerns that we are seeing for this, that is AU Small Finance Bank, is on credit cost front and also on the growth going forward. And lastly, it's Samman Capital. Now, a few days back, the company had opened their QIP, and we understand that the QIP has been successfully closed. They have received bids for around 2,200 to 2,400, which means that it was oversubscribed. They were looking to raise close to 1,700 crore rupees, and what we understand is most likely large FIs have placed bids and they will be getting allotment in this. There are a few hedge funds also, and a large HNI could also get allotment in Samman Capital's QIP. That is what we are picking up so far.
Okay, so some very interesting insights coming in from our dealing room checks. But on that note, Somit, Hiral, thank you so much for joining us and taking us through that. Let's get in, the experts for the hour now. We have Kunal Shah, Senior Technical and Derivatives Analyst at Mirae Sher Khan, and we also have Aditya Shah. He's the founder of Hercules Advisors. Good afternoon to both of you, and thanks for joining in. Actually, let's start off with the technical check. We have Kunal Shah here with us. Kunal, your view on the benchmark indices to start with?
Good afternoon, everyone. I think the view continues to remain on the sell on rise mode. We have not been able to surpass 23,400. Whatever bounces what we have got that has been sold into. So clearly the broader market is in the pressure. You will find some hiding space in IT, but I think overall the trend continues to remain on the sell on rise mode. So for me, Nifty today again closing around that 23,100 mark, a very critical zone. Tomorrow I think we have ICICI Bank results, so Monday could be a volatile day for the Bank Nifty index as well. So the approach remains as a sell-on rise mode for the indices. I am expecting 22,800, 22,700 could be touched on the downside for the Nifty index. So till the time we are trading below 23,400, whatever bounces you get, utilize that to sell. 22,800 is what I'm looking on the downside for the Nifty index. Talking about Bank Nifty here, Bank Nifty has been stuck in a broad range between 48,000 and 49,000. Even we are heading towards the monthly expiry. So now if you look at the monthly data as well, for the open interest, 49,000 continues to be the strike price where the highest open interest is built up, and 48,000 put writers are there on the downside. I think once we take out 48,000, then the fall could be steeper. We can go towards 47,600 and even 47,200 on the downside for the Bank Nifty index. So even Bank Nifty looks weak, sell on rise mode. 49,000 is a very strong resistance on an immediate basis for the Bank Nifty index. For the Nifty as well, 23,300 and 23,400 call writers have added significant amount of open interest from the call side. FII are still on the net on the short side. So clear cut, we have not seen major changes by the FII as well. They continue to hold on to their short positions. The volatility will be there. That is what India VIX is also suggesting. 16.83 is where we are currently trading. This could again inch up towards 17-18 mark on the high level. So the next week is going to be extremely volatile for the markets heading towards the budget, but the approach remains as a sell on rise mode for both the indices.
All right, Kunal, your picks for the day?
See, I think I have two calls, one on the sell side and one on the buy side. First, I'll discuss the sell side call. That is CG Power. The stock has already has broken down critical support zone, has faced resistance as well as the 200 DMA, and it has been forming low to low on the technical chart. So here the selling pressure could aggravate. So that's a sell for me. My suggestion would be to sell the February futures and not the Jan futures. So go short 623.5, 624 is where it is trading. So one can go short at current levels, keep a stop loss of 640 on the downside, and look for targets of 600 to 590 on the downside for CG Power. That's the first call that is there on the sell side. Second, if you want to go on a conservative side, I think IT still looks strong. So here is a hiding place for the markets. 1876, 1877, it's where it's trading currently. One can go long, keep a stop loss of 1850 on the downside. Look for targets of 1900 to 1920 on the upside.
All right. Well, let's get Aditya into the conversation as well. Afternoon to you, Aditya. It's not turning out to be a great week, at least in terms of earnings. I want to talk about the mid-cap IT space specifically because I reckon that, that's clearly been what's been at the fore, at least in the past few days. What are you making of this particular area, even with respect to some of your large cap frontline names? What's the way forward here?
Agar, good afternoon. So we are seeing that a mixed set of results from all the IT companies. Companies like Persistent Systems, they reported a good set of numbers. Companies like Cyient, companies like L&T Technology, L&T Infotech, Mindtree did not report very good set of numbers. However, all of these things are backdated now. Now the new administration in the US has come in, and I believe that cost of doing business in the US is going to go up. It is going to go up because Trump is going to lash out heavily on the H-1B visas, and this is going to be a negative for all of these IT companies. On the flip side of it, Trump will force the US Federal Reserve to slash down interest rates quickly, and demand will come about faster than expected within the whole of IT space. So it's a mix and match. Right now, I will wait and watch how Trump behaves over the period of 3 to 6 months. The entire IT sector is right now in avoid. As Trump's policies pan out, then you need to really see what really happens. For that matter, within the mid-cap IT space, we really like L&T Infotech, Mindtree. The stock has taken a time correction for a lot of time now, about 6 to 12 months, and we feel that the future ahead is really very strong. So that is a stock that that we are really interested in. The other stock that we would really want to look at is KPIT. That company is also poised to do pretty well over the next 2 to 3 years. So in the shorter term, be very cautious. In the longer term, you can start to nibble into all of these ideas.
All right. With that, moving on to the consumption space, V2 Retail came out with its number. It's been locked in upper circuit since the start of the trade. Revenue was up around 58%. EBITDA was up 83%. Margins have improved from 16.3 to 18.9. And net profit was more than doubled to around 51 odd crores. To discuss as to how the quarter has panned out for the company and what future looks like, we're joined by Akash Agrawal, whole-time director of V2 Retail, who's joining us now. Welcome to the show, Akash. My first question to you is, in an overall subdued environment, we're seeing that retail has not picked up in the past 2 quarters. This being the festive season, you've seen a significant uptick in terms of volumes. First of all, I just want to understand as to how much of this revenue growth has come from volumes as well as how much of it has come from value.
So about 43% of the growth is through volumes. And there has been a 12-13% increase in the ASP also. But I would say we have been consistently showing this kind of good performance and stellar performance for the past few quarters. Even Q1 and Q2, we had a very healthy high double-digit SSG number. And we've just continued the momentum into Q3 and hopefully in the coming quarters.
All right. Akash, right now you have around 160 odd stores. You added 21 stores this quarter. What is the kind of guidance with respect to store additions going forward? Let's say by the end of FY26?
So we're going to open another 25 stores in the current quarter, that is Q4 of FY25. And next year we're going to open 100 stores. So we should close FY26 at around 290 stores.
And considering that, all of these stores being added, do you think that the same store sales growth that came on, in 9 months FY25, which was around 31%, will that be maintained throughout? Or this was because of the festive season? Or where do you expect, the same store sales growth range to be like?
Oh, that would be the best case scenario if we can continue that same SSG. But now that the base has increased, I think it's unrealistic to expect the same kind of growth numbers. But for next year, we are targeting an SSSG of a double-digit SSSG is good and healthy for the business. So that's what we're targeting for the next financial year.
Akash, as we move into FY26, is the plan for consolidation in the markets that you guys are already in? Or are you looking to expand your footprint in terms of geographies?
So about 80% of the stores that we are opening, the new stores, they will be in existing geographies, existing cities or states that we operate in. But we did enter new markets. So we opened our first store in Rajasthan. We opened our first store in Andhra Pradesh. So about 20% of the stores will be in new markets or, neighboring states of where we are present in. Because our plan for the next 3 to 4 years is to be a national level retailer. So we would have to test waters in new markets and, get a lot of learnings in terms of data and assortment from those regions so that we can expand in those new regions in the future.
Akash, in FY24, you'd done a revenue of over 1100 odd crores. We are 9 months into FY25 and you've already crossed that 1100 crore mark. Where does FY25 end in terms of revenue, margins as well as bottom line?
So the revenue should be between 1800 to 1900 crores for the whole year, which is good growth. I think more than 50% growth from last year. And the margin, so we always talk about pre-Ind AS EBITDA margins. So pre-Ind AS EBITDA margins was around 6.8% last year, and this year it should be around 8%.
Okay. Finally, in terms of the products that you actually deal in, do you think that there's a likelihood of change in that mix as we move into the next few quarters as well? Or are you looking to continue to focus on your current product lines?
So apparel has always been our strength historically. That is why we have increased the contribution of apparel from last year. And hence the ASP is also a bit favorable because the general merchandise contribution has decreased. So I think the product mix should be very similar where menswear is around 40% and women's wear and kids wear is 25% each. And about 5-7% is general merchandise. So this product mix should continue, 1-2% here and there.
Akash, thank you so much, for giving us those details and all the best for the future ahead. And thank you so much for taking our time and speaking with us at NDTV Profit.
Thank you so much.
Right. Aditya, before I move on to the AU small finance numbers, which are just flashing on your screen right now, net profit, there you go, is down by around 7.5 odd %. If you've had the chance to read the numbers, they've just come in. The gross NPA at 2.3% for the bank. Any read through of the numbers already?
AU small finance bank?
Yeah. Yes.
So I've not been able to read through the numbers per se, but this is a really bad time for the micro lenders.
Right.
NPAs are rising left, right, and center, and I believe you will also see a spike up in NPAs. Ujjivan reported its numbers yesterday. Spandana Spurti reported its numbers yesterday, and they are pretty horrible. So you need to be very careful on the micro lenders. I need to go through the asset quality per se, but I would say the micro lending space is a complete void right now. As you can see on the screen, the gross NPA has risen to about 2.31% from 1.98%. So it is still better than other micro lenders, but overall not a good scenario for the entire industry.
Actually, I want to take the point forward on Fintech and see if Kunal has a point of view on it. Kunal, what we've seen is Fintech correcting from marks of around 1,600 rupees per share all the way down. I believe it didn't test 1,000, but it was somewhere around there. We've seen a little bit of recovery after a very strong set of earnings. My question is, technically, would you buy into this bounce, or would you want to wait for more data before you actually do?
So I think as we spoke that the markets could be volatile over here, so you might get better opportunity, but the support for the stock is placed at 1120, 1130 zone. So 1173 is where it is currently trading. In the volatile market, if you get any dip towards the support zone of 1130, that would be an ideal place to again go long into, where your stop loss then will be placed on the downside around 1070, and again one can look for targets of 1250 on the upside. So yes, it is showing some buying action, but not at the current market price. Wait for a 30 to 40 point dip. That would be an ideal opportunity to buy.
All right. Now, shifting focus to the pharma space, a lot of pharma earnings came in post-market hours yesterday. Dr. Reddy especially is in focus. It's down by about 5%. And this is after it missed the third quarter profit estimates. And, to discuss as to what has happened and also a bull versus bear case of Dr. Reddy's, Varsha is joining in with more details on that. Varsha.
Thank you, Mahima. So, yes, the numbers were actually not good. There was a weak set of numbers, but let's look out what are the good things and bad things about Dr. Reddy's. When you see the revenue growth, so there was a revenue and EBITDA growth, though revenue grew by 15% while EBITDA was up 12%. But this revenue growth was led by a one-time milestone payment by US FDA of rupees 120 crore and government also, and the PLI scheme of rupees 80 crore. So, and the other reason why the revenue grew was because of the NRT business, that the Dr. Reddy's which has acquired the NRT business. These are the two reasons why we are seeing a double-digit revenue growth. But if you see the EBITDA margins did contract due to lower Revlimid sales and higher selling and general and administrative expenses that the company had. Moving on, the good thing about Dr. Reddy is the semaglutide, which is a diabetes portfolio which every pharma company is actually betting on. So semaglutide and biosimilars offers a high value opportunity for Dr. Reddy's lab, and they're doing capex when it comes to the GLP-1 products, that is diabetes portfolio, and biosimilars, which they're pegging a lot of growth from these products. But there's a concern of decline of Revlimid contributions for the Dr. Reddy's portfolio, and this is one of the reasons why their US business did not do well, because of the lower Revlimid contribution. Now, why this is important? Because Revlimid actually contributed almost 40% to their FY24 EBITDA. So your high margin product is actually will be going off the contribution from the high value product will be lower in FY26, because the patent will expire in FY26. So this is one of the concerns that Dr. Reddy has. Moving on, if the other good thing, if I were to talk about Dr. Reddy's, they are expanding into the CDMO business via one of their subsidiary, that is Origin. So CDMO is actually growing in a double-digit growth, and Dr. Reddy will enhance its portfolio by expanding into CDMO business. But there's a limited pipeline visibility with high-value products when it comes to Dr. Reddy. So there are many products which Dr. Reddy is actually going on, but they are not that high value or high margin product. So this is one of the concern that the company has. Moving on, if I were to talk about the capex, so a company is actually doing almost 2,500 crores of capex, which will support growth in capacity and the API manufacturing. But pricing erosion in US and approval delays will affect margin for the company, and also the revenue per product for Dr. Reddy's has actually declined. So it has declined from $10 million to $5.8 million. So this is one of the concerns that Dr. Reddy has, and of course the pricing erosion and declining revenue per product and your delays in approvals are some of the key risks that Dr. Reddy's has.
Okay, well, Varsha, thank you so much for getting us that update, those insights into Dr. Reddy's and how we can go about it. But I'm going to stay on with the healthcare space. We slip into a short break, but before that, another stock which has been buzzing today is Syngene International, and that's also on the back of its earnings, even as we see the company lower its guidance. We caught up with the MD and CEO of the company, Jonathan Hunt, on the quarter gone by. Listen in.
Yeah, I think we will. We're on track for our margin guidance. And you can see the driver of that in the revenue performance actually in the third quarter. Well, as you know, we had a little bit of a slower start to the year. Quarter one, quarter two, both were flat to declining. We came in about -2% in each quarter. And we predicted that in the second half of the year, we would start to see a return to growth, building some momentum. And that's exactly how it panned out in the third quarter. So 11% reported revenue growth in the quarter. That's 8% underlying if you do the constant currency. There's a bit of a currency boost in there. And that then feeds through into the margin performance.
Mr. Hanna, we're seeing, some recovery in kind of the biotech funding in this particular time frame, and it's coming to, considerably in comparison to the pre-pandemic levels as well. That's something that's been missing, especially for late-stage programs. Would you concur with this view and any kind of outlook that you have for the next year?
Yeah, I mean, I use the word stabilization rather than recovery, because I think it was declining. They've had a tough time over the last 18 months in terms of the funding environment for innovative US biotechs raising new capital. They're now back and stable around that pre-pandemic level. And you can start to see that just filter through into our expenditure. And again, that was another reason why we saw that return to growth in the third quarter, was the beginning of the capital raising filtering through into expenditure. I mean, if I'm candid about it, I think it took a little bit longer than we'd expected. When I crafted our guidance outlook at the beginning of the year, I was hoping it would be, 8-12 weeks sooner in the year that you would see that recovery. So a little bit delayed, but directionally, I think we got it right. Timing a little bit off for the market recovery and therefore the expenditure recovery, but it happened in the third quarter, and that got us back into growth. So directionally right, and I think a more stable environment than we've experienced over 18 months.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
They say fortune favors the prepared. The more prepared you are, using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
This January, the world will come together at the World Economic Forum at Davos to bridge differences because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are
back. You're watching India Market Close. Laurus Labs has just posted the numbers. Let's take a look. Revenue is up by 18 odd percent from 1195 to 1415. EBITDA has grown from 181 to 285, which is an uptick of 57%. Margins at 20.15% from 15%. But what you're seeing on the flashes on your screen is that management's expectation was 25%, but it's come at 20%, which is why we're not seeing a lot of uptick in the stock. It's up hardly 1%. The net profit, however, grew by almost 300%, and that's from 23 to 92. Aditya, I'll come to you. If you have had the chance to look at the numbers, how are you reading them?
They're not spectacular as such. We need to understand from the management how their API business as well as the FDF business is facing the pricing pressure and has it eased out, and how is the new capex going on. So for the moment, I will say very steady set of results. Nothing to get excited about. Management commentary is something that I will watch out.
Okay, let's talk about some other stocks as well, which have been in focus of late. And in general, we are also taking stock of how things are faring in the benchmarks right now. What we're seeing, in fact, is today's top gainer is Hindustan Unilever, followed by Britannia. So Aditya, my question then is that with respect to FMCG, I reckon that you still want to stay away because results have been lackluster so far and there's no indication of any recovery whatsoever, at least in the near term.
If you look at the micro industry, it is pointing out to a slowdown in the rural economy. Similarly, for the FMCG sector as well, stocks are extremely expensive and there's no fillip to the economy. The government must use the budget to entirely revitalize the economy per se. So right now, I believe in the wait and watch mode to see if the government takes any steps on revitalizing the economy. Until then, the FMCG sector would be a clear avoid.
Right, so it's a clear avoid on HUL. Kalyan Jewellers, there's a business update that's come in for Kalyan Jewellers, and it says they've started. It's a new subsidiary, I believe, in the UK. Before I pull up that, Kunal, Kalyan Jewellers is down again 4%. It's a positive news flow that's coming in for the company, but there's no uptick in the stock seen so far. How much more of a downtake for Kalyan Jewellers?
I think the structure has been on the downtrend, and I think no need to catch a falling knife at the current levels. So I think still a downside is possible in the stock. If I look at the weekly chart, on the downside, the next support what I see for the stock on the downside is around the mark of 420, 415 zone. So 460 is where it is currently trading. So still $40 left on the downside. So I think even if you get any bounce, utilize that to sell. No need to do bottom fishing at the current levels.
Okay, we do have earnings of Shriram Finance, but why we have those numbers on for you on your screen, I do want to address Kalyan Jewellers for just a tad bit longer. The stock has fallen from the mark of nearly 800 rupees per share all the way to well below 500. At the moment, it is at 460. In the middle, you had clarifications from the management that all the untoward rumors were not true. In fact, in the quarterly update, they had also suggested that they are looking at over 40% revenue growth. And still, you've seen the sharp cut on huge volumes, specifically over the last 3 to 4 sessions. And the thing is that every time since I would say the first week of January, every time you see a little bit of recovery in Kalyan, you see that followed by even more selling. That's how things have panned out for Kalyan Jewellers. So no matter what the good news is for this particular company, there has been no remorse. The question really is that when it does come out with its final quarterly earnings, can we see about a short covering? That's going to be a wait and watch. But in the meantime, let's also address Shriram Finance. Now we have the numbers for you on your screen, and its net profit has risen around 73%. So at least in terms of profitability, it looks like a good number. I know we tend to not look at the total income for NBFCs, even like Shriram Finance. We'll wait for the net interest income because that'll give you a better picture of how your overall interest income has panned out. Bottom line, it does seem like it's a fairly positive one. Also keeping an eye on some of your key NPA ratios along with how provisioning has stood for Shriram Finance, because that'll give you a much better idea in terms of asset quality and how things have panned out. But like I said, Profit does see a sharp 73% growth, and it does seem like a very strong number, at least from the PAT point of view, but it's the operational metrics that we are still waiting for to keep an eye on. In the meantime, is there anything else that you're spotting, Mahima?
Yeah, the board has also approved a 2.5 rupees interim dividend is what we see. I think we have our banking expert with us. Let's before I address some other stock. Aditya, if you've had the chance again to see the numbers of Shriram Finance, how are you reading them?
They have a decent set of numbers. I will wait for the NPA numbers to come out. Profit numbers are all inconsequent as of now. I believe they will also report some sort of a slowdown and some bit of rise in NPAs. So I'm just waiting for the NPA and the slippages number, which I have not been able to see for the moment.
Critical for Shriram Finance because if we do in fact get a better idea of that particular aspect, and if we have those now. Okay, so the net interest income is out for you now, and that's seen a growth of around 14%. So 14% net interest income, clearly there's going to be something which is one-off potentially, because we're seeing a sharp 73% rise in your profitability. I'm more or less certain there isn't a decline in provisioning. There may not be an increase, but I don't think there's a decline in provisioning, because otherwise you would not have that profit number will rise by that much. So there is this most likely provisioning has possibly been, okay, so there's a one-time gain of around 1,554 crores. So that explains your up move, your sharp up move in your bottom line. Again, keeping an eye on your NNPA ratios, and I think I'm trying to open the release in front of my screen as well to see how your gross NPA ratio and your net NPA ratios have panned out. It will certainly give you a better idea in terms of asset quality, and we do know that in general, for Shriram Finance, things have remained fairly stable. So at the moment, what I am also keeping an eye on in terms of your other aspects, so we don't have too much going on in terms of provisioning right now, at least at the moment. We don't have any updates yet. But again, taxation has been slightly on the higher end. So despite that, we're actually looking at that sharp up move around 73%. Again, we should have Vishwanath soon joining us to give us a finer print of all the details that we have right now. There is also, and the finance costs. Okay, so that clearly is a part of the part of your net interest income that is panned out. It does seem like Shriram Finance in the meantime has wilted under pressure and has gone into the red right now after a sharp spike. So there you have it. That's how things are panning out. Okay, so I believe we do have Vishy joining us now. Vishy, how are you reading in the numbers right now?
So broadly, okay. There's about a 1,500 crore, exceptional gain because of the sale of the Shriram Housing Finance unit, which the company sold to Warburg, during the quarter. That's pushing up the profit number. But overall, on the asset quality bit, Agam, when we were talking earlier, there's about a 6 basis point increase in gross NPA, and an increase on the net NPA front as well, right. Which is a bit of a worrying factor, considering that Shriram Finance has been pushing towards a retailization of its book, trying and growing more in the personal finance and secured retail products. So the spike in NPA is a problem. Remember that they have a very large commercial vehicle book as well, so that may also be adding to the asset quality worries there. Overall, if you look at the profit growth, if you take the 1,500 crore out of the 3,300 crore odd, I think, profit number that exists at this point in time, you will see that the profit growth is actually not that much. 1,800 odd crore net profit last year, compared to that close to around that 1,900 crore profit this year as well. So the profit growth has been not that sharp, and asset quality has worsened. So that's what you're seeing on the stock, with the impact coming in on the stock. Numbers are not as good as one would have expected.
So what is the other income component? Any idea about that?
the other income component, well, the other income hasn't really moved much. The exceptional item, if you're talking about.
The exceptional item.
Yeah, so as I said, the Shriram Housing Finance sale that happened during the quarter, that's what's adding to the profit number and making it look better than what it was last year.
Right, fair enough. No, that makes perfect sense. And that was perhaps what I missed out in terms of understanding. But Vishy, thank you so much for getting us that quick update with respect to Shriram Finance. And of course, as Vishy has mentioned, there is a ever so slight uptick in terms of some asset quality concerns, but not too much otherwise. Okay, so I think we can go back to Aditya now if he's taking a closer look. Aditya, your view on the Shriram Finance numbers now that we have numbers on gross NPAs and net NPAs as well?
Remember, Shriram Transport has a larger book on the CV side of it, and if the gross NPAs are stacking up there as well, so lenders now don't really have any hiding place. Micro industry is blowing up, credit cards are blowing up, and now the CV cycle, as the economy continues to slow down, the lenders are facing pinch. So ideally, it is not a great scenario for lenders per se. And these results, according to me, I expected the gross NPAs to move up, and they definitely have. So nothing surprising per se. A negative outlook on all lenders per se. Particularly sticking to the larger NBFCs and the larger banks per se will be the strategy now from here on as the economy continues to face the wrath of NBFCs.
Okay. All right. Now, shifting focus to the Adani stocks on the brokerage radar, Investec bullish on Adani Green and Adani Energy, while Adani Power is on Ventura's watch list. Mika joins us with more details on that.
We actually had Adani Green Energy and Adani Energy Solutions post their net profit results yesterday, and we've gotten the Investec notes post that. Up first is Investec on Adani Energy Solutions. They maintained the buy rating at a target price of 1,352 rupees, which implies a 66.9% potential upside. Revenue was driven from newly commissioned projects as well as higher energy sales. The EBITDA growth was on strong revenue growth, treasury income, and steady regulated EBITDA, and the distribution loss at AEML has also been improving consistently, and the under construction pipeline stands strong at 54,761 crores due to the boost has come up after 5 new project wins during the year. On Investec on Adani Green Energy, they've maintained a buy rating. Target price is at 1,030 rupees, which implies a 114% potential upside. Now, the muted revenue growth that we've seen this quarter was because of lower EPC revenue sales that offset the higher energy sales. EBITDA, however, is up 9.5% due to better operating performance, and profits were aided by 24% lower interest costs and lower tax expenses. The company added a total of 425 megawatts of capacity in Q3, and the renewable energy capacity now stands at 11.6 gigawatts. And the key milestone that has been mentioned by Investec is the PPA signing with MSEDCL to supply 5 gigawatts of solar power for a total of 25 years. And then lastly, we have Adani Power. Ventura has maintained its buy rating with a 24-month target of 806, which implies a potential upside of 55%. Now, enhanced coal availability and business expansion is what's fueling growth for the company, and Ventura notes how the company is committed to future growth via continued investments in thermal capacity. It is not shying away from this area of power generation despite the focus on renewable energy, and it is strategically positioned for robust capacity expansions to address the growing demand needs. And it's also mentioned that the company has manageable net debt of 30,985 crores, which supports Adani Power's balance sheet strength.
All right, Mika, thank you so much for breaking that down for us. Godrej Consumer also, since the FMCG, Nifty FMCG is in green, Godrej Consumer is set to have its numbers today. It mostly come post-market hours. But in terms of the estimates, it's not expected to, post a good set of numbers. The Q3 business updates were also, a disappointment. The management said that the surge in palm oil and derivative prices have will kind of impact the margins as well, and they anticipate temporary downward breach of normative margins this quarter. International business, however, will continue to do a tad bit better. In terms of the key things to watch out for, we'll have to see as to how much of a urban consumption slowdown is taking place, how much of a margin pressure will they face, and how much of an ad spending will they do, and how much that ad spending will kind of weigh down on the margins. And smaller packs is something which is kind of seen picking up trend. HUL also said that since the people don't have enough money in their hands, enough money in their pockets. They're shifting towards the smaller packs, which is an adverse product mix, which is kind of hampering the margins as well. So this is the a small preview with respect to what can happen with Godrej Consumer. But Kunal, how does Godrej Consumer look to you on the charts?
Godrej Consumer, if I look at the chart again looks very weak. Again, lower top, lower bottom formations on the chart, trading below the short-term moving averages, and it's in fact on the verge of a breakdown as well. So I think if 1120 is again taken out on the downside, the fall could be steeper. It can again go towards 1080, 1060 levels on the downside. So my view is that have a bearish view. If you are already holding, you can exit even at the current levels. And if you want to go short, this could be another opportunity to go on the short side.
We have earnings from Atul Limited as well. This is a very well-known chemicals company, and it looks like a very strong set of numbers, and yet the stock has taken a tumble. So revenue has grown nearly 25% year on year. We have seen your EBITDA margins expand considerably, in fact 250 basis points expansion in your EBITDA margins at around 15.8%. And your net profit has grown 53% year on year. So it seems like, at least prima facie, nothing's wrong with the numbers. Atul Limited, which has corrected all the way from the mark of over 8,000 to currently at 6,500, and well, it's yet another day where it's the numbers apparently have not helped keep the company higher. So we're seeing a look. We're looking at a further selling. But it doesn't look like, at least in prima facie, there is any issue with the numbers. But is there anything else that we want to mark at the moment?
I think just to add on to what you said, it's a common trend that at least I have observed this earnings season, is that if the valuations are not cheap, and even if the earnings are in line with the estimates, the stock is not seeing the kind of uptick that we've seen in the past as well. For example, Atul Limited roughly trading at a P of around 51 odd times, versus that of an SRF or Deepak Nitrate, which is around 40 times. Although even 40 times is not cheap, but comparatively it's slightly expensive as compared to its peers, which is why probably we are seeing that downtick in the stock. Although numbers prima facie look extremely strong. But Godrej Consumer is that one counter which is going to come with its result. But circling back to the consumption space, a prolonged urban slowdown is prompting makers of daily essentials to roll out smaller, lower price packs of premium, as I mentioned earlier. And this is this is to boost demand across categories, from soaps and shampoos to snacks and frozen foods. Sesa Sen joins us with more details on that.
The prolonged slowdown in urban consumption is posing a unique challenge to FMCG companies as their premium consumer base shrinks. Now, while consumers mainly in cities are still purchasing premium products, they are opting for smaller versions of such products to manage their budgets amid inflation. Now, HUL has recently highlighted that this shift to smaller packs is a trend breaker, something that they did not observe even in the previous quarter. The company, considered a barometer of FMCG consumption, stated that this behavior is offsetting the typical uplift that companies experience when premium products grow faster than rest of the business. Like HUL, several other companies such as Godrej Consumer, Colgate, ITC and Britannia have rolled out mini packs of their premium offerings to boost demand. However, with urban demand showing no signs of improvement and large packs continuing to grow at a slower pace, companies risk a delay in their growth revival.
All right, Sesha, thank you for getting us all those updates. Kunal, back to you on buy today, sell tomorrow ideas.
Yeah, I think again the undertone for the market continues to be on the weaker side. Out here, I will have two ideas: one on the buy side, one on the sell side. The buy side, I think Laurus Lab looks strong. It has broken out of the resistance zone and sustaining at higher levels. So this could be a good case of a BTST from the current levels. 609, 6010 is where it is currently trading. If you get a little bit of dip towards 605, 606, even that would be a better opportunity. But it's a buy at the current levels as well, keeping a stop loss of 590 on the downside and look for targets of 620 to 635 on the year ahead. So that's on the first side, that's on the buy side. On the sell side, we have seen stocks like Exide Industries again having low top, low bottom formations intact. So here it continues to be on the sell side for me. Again, 368 to 369 where it is trading. Keep a stop loss of 374 on the upside and look for targets of 361 to 357 on the downside.
Okay, so hold that thought. We want to very quickly address what's flashing for you on your screen. It does seem like we have a retaliation from Ukraine now. Ukraine has confirmed that it has in fact attacked Russia with drones overnight. This is a Bloomberg report. This to and fro has continued to come through from both ends. And it does seem like a lot of world leaders have suggested that they want to bring an end to this conflict. There, at least so far, there hasn't been much influence as far as this particular region is concerned. In fact, in the latest, we also understand that President Donald Trump did want this war to end. And in fact, he called this one of Biden's war. But it does seem like for now, we don't have any resolution or any remediation to this particular conflict. We'll continue to give you updates, as and when we see more to come through. But Mahima, what are we watching out for as we move into over the weekend?
Right. To start with, Indian forex reserves, then US PMI data will come out. China PMI data is something, that's there on the radar to watch out for. A few important earnings to watch out for include Balakrishna Industries, ICICI Bank, IDFC First Bank, JK Cement, Macrotech Developers, NTPC Green Energy, Yes Bank, 361 WAM, ACC, Adani Total Gas, Adani Wilmar, Bajaj Housing Finance, Coal India, IOCL and Tata Steel. Now, a few shares that will see an exit in the lock-in period: Ventive Hospitality 2%, Unimec Aerospace 2%, Cenuris Pharma 7%, Caro India 5%, Sanstar 27%, Netweb Tech around 20%, and EPAC Durables of around 12%. So all of these counters will see an exit in lock-in period. And lastly, corporate actions to watch out for will include KEI Industries, the record date of interim dividend, as well as Tanla Platforms record date of interim dividend as well, which is at 6 rupees. We're nearing to market close. Before I move on to Agam to see as to how the markets will close, at the end of this week, Aditya, I'll come to you. Just a last quick question with respect to which sector right now is looking attractive to you?
To me, I will break it down into the large caps and the mid caps and the small caps. Large caps continue to look really very attractive to me. Something like an HDFC Bank or an ICICI Bank, something like a Reliance, where the stocks have already beaten down and are trading at a record low valuations, is something that I will be looking at. As you correctly pointed out, stocks which are trading at around 60, 70, 80 times multiple, even if the results are decent, the market is in a move to beat those stocks really up. So stocks where the valuation multiples are above 40, 50, 60 are the stocks that you should be really cautious on. Large caps are the theme that I think in 2025 will play out, at least for the first half, until the market does not get clarity on how US policies are going to turn out and how export-oriented companies are going to suffer if US president puts up some tariffs on them. So large caps is the place to.
Okay, well, we just have about a minute and a half left for closing. So I'm going to thank both Aditya and Kunal for joining us and taking us through their views on the markets and the many questions that we had for you as far as the viewers are concerned. But we're going to quickly take a look at how Friday has panned out. Not encouraging at all. We are looking at a 0.5% cut for the Nifty 50 and the Sensex also looking at as much in terms of declines. We were earlier talking about a fairly evenly poised advanced decline ratio for the Nifty 50, and in terms of the heat map, of course, it's just worsened, but I was talking about the Nifty heat map too. So the market breadth has certainly worsened, but even the Nifty heat map now has 20 gainers and 30 losers. So that's not very encouraging either. HUL Shaw looking at about a short covering along with Britannia and Eicher Motors. But we continue to see a lot of weakness in Adani Enterprises, BPCL, M&M, Trent and Dr. Reddy's. Dr. Reddy's, as we addressed, was for a good reason, the clear
loser on the Nifty 50 at the moment. But Mahima, how are broader markets looking right now?
Right. Let's pull up. It's the same case of broader markets as well, and the pressure is even weaker there.
Yeah.
We're closing at around 1.7% lower on the mid cap 150 and over 2% on the small cap 250. Let's pull up this sectoral heat map as well. It's the Nifty IT and Nifty FMCG that continue to be in green. But the real pressure is in Nifty Realty. Nifty Realty, if we can pull up the weekly chart also, we'll have to see as to how much it is. Yesterday it was in the green, but today it's down by about 2.5%. And there you go. This week it's been down around 10%. If we can also pull up the contributors on the Nifty Realty and see, as to how much each stock on the Nifty Realty has fallen. There you go. Prestige with around 7.6% down. Sobha by 7.5%. Overall Realty 3.5%. And there is something that's in green is Raymond Realty, which is recently it's not even listed actually. Raymond Realty is not listed. It still has two different businesses. It's up around 3%. Macrotech up around 1%. But yeah, that's where the real pain is. Let's pull up the BSE 500 and see as to how the stocks are panning out at the broader end of spectrum. Cyient closing by around 22.5% lower. Tejas is also down by about 10 odd %. Sobha, Prestige, all of these counters from the real estate. Syngene International again on the back of results. India Cement is still in pressure after its results yesterday. Capri Global on the other hand is seeing the uptick. It's up around 8.6%. Laurus Labs, in the past half an hour it's picked up on the back of earnings. 5-star, Emphasis, all of these counters in green. So, this is with respect to how the BSE 500 stocks are faring.
Yeah. Well, so an interesting day of trade, but not the most encouraging. Again, we're going to keep an eye on how things pan out eventually down the line. This week, of course, we've also seen the Nifty, not too much, but that was also an expected line. So it's not just this week, it's the last 10 sessions. Again, it's going to be about the upcoming budget, and until then, we're likely to see consolidation, but also a lot of volatility, at least in terms of the India Volatility Index. But on that note, it's a wrap on this edition of India Markets Close. Thanks so much for watching, and we'll be back. Don't go anywhere. You're watching NDTV Profit.
The day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
say fortune favors the prepared. The more prepared you are using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
I present the budget for a historic
the mother of all Kumbh Melas. At a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
This January, the world will come together at the World Economic Forum at Davos to bridge differences because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it made a comeback in 2018 at 40,000, and since then it has been climbing steadily. Now economists have a big ask for budget.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. Viewers, benchmarks extend losses in the last 2 hours to snap 2-day gains. The Nifty ends above 23,000 mark, whereas the Sensex ends above 76,200 mark. Broader market rout deepens. The mid-cap index declines over 1.7%, whereas the small-cap index falls over 2%. Cyient drags the small-cap index on weak earnings. All sectoral indices barring FMCG and IT end with cuts. Media, pharma and realty crack over 2%, followed by financials. As we count days to the budget 2025, the defense sector has come out with its list of expectations. It has asked for increased capital allocation. The theme this year will be indigenization and domestic procurement. And initiatives will be designed to boost defense exports. A higher order are expected from larger programs in 2025. Syngene International stock cracks after the company lowers its FY25 revenue guidance. It expects single-digit growth with flat profit. The company's initial guidance was in high single-digit to low double-digit growth in FY25. Lowers the growth outlook on the back of 8 to 12-week delay in demand recovery. V2 retail surges over 5% after a robust set of numbers in Q3 earnings. The company continues to focus on penetrating undeserved rural market. This vertical has been benefiting from rural demand because it targets the mass. The company reports robust growth despite weak consumer sentiment in the retail. Now, another stock reacting to numbers is Emphasis. Rises after it reports in line revenue and profits. Margins move above estimates and deal wins rise. The company reports new total contract value wins of $351 million in Q3 in direct business, with 48% of the deal wins being in Newgen services. Selling in Aarti Industries shares. Foreign institutional investors, that is the FIIs, have steadily reduced their holdings in around 143 stocks, Aarti Industries being one of them. Additionally, the company completes capacity enhancement of ethylation unit at Dahej, says Gujarat. The facility allows scaling up production volumes for nitrotoluene chain products. Port Capital's Parag Thakkar expects the government to push housing in the upcoming budget 2025. Reveals SBI, ICICI Bank, TVS Motor among his top stock picks. Dr. Reddy stock in pain after the pharma giant's Q3 results miss estimates. The quarter, however, sees a milestone payment of 120 crore rupees and growth was led by newly acquired NRT business, but the EBITDA margin contraction was led by lower Revlimid contribution. Paytm share prices crack on reports that the company's 7 other payment gateways have come under the Enforcement Directorate. Scanner for alleged involvement in a cryptocurrency scam. Arvind Smart Spaces Inc.'s pact for developing 92-acre land and parcel in Khopoli. The company signs an agreement for large horizontal multi-use project in Mumbai metropolitan region. The project's total estimated area is 92 acre and a top-line potential of 1,500 crore rupees. Amber Enterprises stock surges after company's Q3 results beat estimates. Room air conditioner segment grows 17%, but the non-RAC segment jumps 43%. The 17% rise in room ACs and conversion of customers aided growth. The company revises revenue growth forecast from 45% to 55%. BPCL stock falls despite a Q3 net profit rise. The company is planning to invest $121 million to develop oil and gas block. Bank of America upgrades the stock to a buy from underperform, says the refining marketing efficiency will drive outperformance. The company's capex will accelerate, whereas the Russian crude imports could decline. Kalpatru project stock sees some selling despite the company bagging contracts worth over 2,000 crore rupees. The orders are across multiple sectors, including transmission and distribution projects in India and overseas. The firm's continuous order inflows have strengthened its T&D order book and improved its competitive position in key markets. Axis Capital maintains ad on Indus Towers, says a decent Q3 top line, largely in line on higher tower additions. A reduced capex intensity, reversal of provisions helps the cash flow. The company stops paying dividends since FY23, says higher cash flow could reinstate dividends. US Nuvama maintains hold on Cyient with a target price of 1660 rupees. The brokerage firm believes that weak exit rate can also impact growth prospects for the next financial year. It remains negative on the company despite expensive valuations limiting downside potential. Ventura maintains buy stance on Adani Power and expects a potential upside of 55%. Ventura believes that enhanced coal availability and business expansion is fueling growth. Committed to future growth through continued investments in thermal power capacity, the company is strategically positioned with robust capacity expansion to address critical demand. Suzlon Energy and Torrent Power secures a 486 megawatt wind power project in Gujarat. The deal value has not been disclosed yet. Following the order win, Suzlon Group and Torrent Power both have achieved the milestone of 1 gigawatt of wind energy portfolio across Gujarat and Karnataka. Now, its earnings call after Q3 numbers emphasis say that it expects to maintain margins in the range of 14 to 16%, which will help beat industry growth. The company saw 2% impact of furloughs in Q3. Now, viewers, the Indonesian president is in India to attend the Republic Day parade as the chief guest. The visit aims to review bilateral ties and address regional and global issues of mutual interest. MOUs are expected to be signed covering areas such as food security, energy security, and healthcare. Discussions may also include Indonesia's need for medical professionals and potential collaborations in digital mapping for agriculture and renewable energy. The Reserve Bank of India asks all commercial banks to share impact of liquidity coverage ratio norms ahead of implementation. The RBI will assess potential impact of draft LCR norms on the banks. Bankers expect RBI to consider feedback on LCR norms or defer it. Remember, in July 2024, RBI had introduced draft LCR guidelines which will come into effect on April 1. The intent is to bring gas under GST, is the word coming in from Hardeep Singh Puri, the Union Petroleum Minister. In an exclusive conversation with NDTV Profit, he says that whenever there is under recovery in LPG and petroleum, government is there to compensate for it. He has special pride in BPCL that reported 20% jump in profit for a company that people wanted to sell before. Exicom Telesystems shares hit upper circuit after securing a 1,412 crore rupees order from Rail Vikas Nigam Limited. The advance purchase order is for the supply of telecom equipment. The RVNL order includes the supply of power systems and racks for 3 years. The order also includes maintenance of the telecom equipment for a period of 10 years. Cupid pre-qualifies for its brown caramel female condom variant from the UNFPA. This pre-qualification makes Cupid eligible to supply 100% of the contract for female condoms in the upcoming South African government tender, which for a duration of 5 years with bids closing on 31st January. Earlier, Cupid had been eligible to supply 75% of the contract for female condoms in previous tenders, which were up for shorter durations of 3 years at a time. The world's second largest sportswear maker announces job cuts. Adidas CEO plans to cut up to 500 jobs at the German sport retailer's headquarters in Germany, as per a Reuters report. Now, the eye care services provider Dr. Agarwal's Healthcare, the parent of listed firm Dr. Agarwal's Eye Hospital, is planning to launch its initial public offer. The IPO will be launched between January 29 to January 31st. The price band is set at 382 to 402 per share. Bid for issue to open on January 29 and close on January 31st. Z Entertainment Enterprises has counter-claimed $8.06 million plus interest from Star India Private Limited in a broadcasting rights dispute for International Cricket Council's men's tournament over 4 years. As per Z's regulatory filing from Thursday, two entities had entered into an alliance agreement in August 2022 regarding the ICC rights. Now, the Berman family announces Reddy takeover dates. The takeover offer will be open from January 27 to February 7th. The issue will be of up to 9 crore 42,541 equity shares, according to an exchange filing. Remember, Berman's open offer for Reddy stake got RBI nod in December 2024. Now, NBCC shares jump on orders worth 230 crore for construction works and project. The company's order book of December 24 stands at 84,400 crore. Now, the finance minister will take part in the Halwa ceremony marking the final stage of preparing the union budget, which is to be presented on February 1st. Sweet dishes hold a strong cultural significance in India and are considered auspicious for any event. Every year before the budget, the traditional sweet dish halwa is prepared in large kadhai at the North Block in Delhi and is ritualistically stirred by the finance minister. It is then served to officials and staff members of the ministry involved in the budget making process. In order to target price-sensitive consumers, FMCG companies like Colgate, HUL, GCPL, Britannia, ITC launches mini packs. Company says that small packs outpace large packs in cities. Now, viewers, with that, it's a wrap on this edition of Market Express. But stay tuned to NDTV Profit for more news and updates.
Well, thanks for tuning in. Day 4 of the REF, and we're starting off the conversations with a global voice. The CEO of Global Regions at Honeywell, Anand Maheshwari, joins us right now on the sidelines of the World Economic Forum. Anand, great having you. Thanks for joining in.
Thank you for having me here.
Well, so it's great to speak to somebody who looks at all the key regions for a large global giant, except for US, of course, because everybody's talking about US exceptionalism, and it's great to get a voice on everything else that's happening around the world. So tell us how the first 3 days of the WEF have been in terms of conversations, client confidence, if you will. And of course, I would want some views from you around India as well, but that's a bit later on.
No, thank you so much, and just to bring that context of the geographical play that you mentioned, we are a US headquartered company, therefore US is very native for us, and therefore looking at all the countries outside of the United States, which is roughly half our business, is very important because the dynamics are very different by country, it is very different by geography. Some are very high growth, still bullish economies, they are still in the investment cycle. Some are very high scale established economies, and really looking at how to take care of existing investments and still drive growth for their geographies. Now, context of WEF over the last 3 days, as you asked the question, it's always fascinating to come in at the start of the year and hear all these different voices, both from the different industry verticals, different types of companies, both large and small, different industry groups, and the governments. I think it's very good to see that mix and have conversations. In general, I think I'm going away optimistic and positive from a lot that is happening. I was told yesterday by somebody, hey, we're living in a very turbulent world, but I think it's a matter of context. We feel it is turbulent given where we are coming from, but I would say if you take the context of the world over the last 100 years, now is not so bad in terms of turbulence.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
say fortune favors the prepared. The more prepared you are using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
This January, the world will come together at the World Economic Forum at Davos to bridge differences because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they're expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single-digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and
Benchmark snapped 2-day gains to end lower. Nifty falls for third week in a row, barring IT and FMCG. All sectors end in the red this week, with realty plunging over 9% and falling for the fourth week in a row. Shriram Finance dips on Q3 results. Net profit jumps over 70% on a one-time exceptional gain of 1,554 crore rupees due to sale of Shriram Housing Finance. Oil Minister Hardeep Singh Puri says that government's intent is to bring gas under GST. In an exclusive conversation, he adds that the government will compensate every time there is under-recovery. As the nation gears up for Union Budget 2025, the customary Halwa ceremony will take place today at 5 p.m. The ceremony will be led by Finance Minister in the presence of Union Minister of State for Finance and Secretaries. FMCG makers prompted to roll out smaller, lower-priced packs of premium products to boost demand across categories, from soaps and shampoo to snacks and frozen foods. It's the last day of the World Economic Forum 2025 in Davos. NDTV Network consistently brings you a stellar lineup from top global economists to key industry leaders to discussions on the role of AI and tech and India's potential. Meet the family behind 95% of the tents and temporary accommodation at the Mahakumbh. The Lalluji family is at the core of the largest religious congregation in the world. With 7 days left for Budget 2025, what should you expect? How should you trade? And how can you profit from Budget 2025? Your questions will be answered by a panel of top market experts at NDTV Profit's Investor Camp tomorrow. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, the market has ended its two-day rally as Nifty has closed below 23,100 levels, with Sensex losing 300 points today. Except for FMCG and IT, all sectors closed in red. Mahima joins in with more details.
Well, we're seeing that the earnings are kind of weighing down on the markets. Let's pull up the benchmark indices, where it's a disappointment on a Friday, day's end. The markets, the Nifty 50 closed 0.5% lower, the Nifty Bank closed around 0.5 lower, and the Sensex also closed around 0.4% lower. Let's pull up the broader markets because the pain is actually on the broader end of the spectrum. The mid-cap 150 closed 1.7% lower, and the small cap 250 closed by around 2.15% lower. Let's pull up the Nifty 50 contributor and see which were the counters that kind of ended in red and green. There you go. There's ICICI Bank, HUL, Infosys, Bharti Airtel, some of the counters in green, but HDFC Bank, Reliance, M&M, Trent ending in the red. Let's pull up the heat map as well, of the Nifty 50. There you go. The FMCG counters doing well. Short covering seen in HUL, Britannia, Grasim, Tata Consumer. But Dr. Reddy's, since the start of the day, was under pressure and ended 4%, almost 5% lower. Trent closed around 4% lower. BPCL also 3% lower. Let's pull up the breadth of the market and see how advanced decline ratio fared. The advanced decline ratio widened throughout the day, and there were 1,800 odd advances versus that of 360 odd declines. So the ratio is quietly and strongly skewed towards the sellers market today. Let's pull up the BSE 500 quickly before we move on to the sectoral indices and see what are the counters saw green and red in the markets. The Cyient was down by 22% on the back of earnings. Syngene on the back of earnings. Tejas also down by 9% on the back of earnings. Capri Global was something that was in the green, up around 8.6%. Laurus Lab in last half an hour of the trade was up around 4.6% on the back of earnings. Let's pull up the sectoral heat map and see how the sectors have fared. Nifty IT and Nifty FMCG were the two counters that have ended in green. Nifty FMCG with gains of about 0.5%, but the Nifty Media, Nifty Realty, Nifty Oil and Gas, all these counters saw pressure of over 2%, and Nifty Pharma and Nifty Healthcare also down by about 2%. So that's a wrap on how the markets fared in trade today, but we'll have to wait and watch as to how the markets fared on Monday.
Thanks, Mahima, for that market wrap. Now, weighing in on the IT sector, Parag Thakkar believes that there are issues with valuations. Hear from the conversation to understand why he thinks markets are bottoming out.
See, I believe in cycles. And one thing is that because of the Trump trade, that upside is captured in IT. Because everybody has believed, and rightfully so, that Trump will focus on US growth. Yesterday, Trump has commented, I think, on Davos that he wants lower interest rates globally, right? Which is good for IT. He is going to cut corporate taxes in US, which is good for IT spending. So I would say that things are looking good. There is no problem in IT. But the point is valuations, right? While on the other hand, on the domestic side, because we had a very bad 9 months because of lack of government spending and also urban consumption suffering due to higher inflation, things are bottoming out. I am a believer of cycles, and that's why I am more bullish on domestic cyclicals today, if you ask me, from risk-reward perspective.
Viewers, Shriram Finance dipped nearly 1% after they reported their Q3 results, with profits surging over 70% on an exceptional one-time gain. Vishwanath joins in with a breakdown of these numbers.
Shriram Finance saw its net profit rise by about 73%, but the stock ended about 1.1% lower. What is actually happening? Well, essentially there was a one-time gain that was reported in the Shriram Finance's profit and loss account for this quarter, where the sale of Shriram Housing Finance Limited was recorded. The company got about 1,555 crore for its stake in Shriram Housing Finance, which of course boosted that profit. But adjusting for that one-time gain, you would have seen the net profit fall by close to 10%, and that's why the stock was trading lower. Not only that, you've also seen the gross NPA ratio rise up by about 6 basis points, as well as the net NPA ratio rise up marginally. This indicates that stress on the portfolio for Shriram Finance is not done yet. Provisioning costs were higher, and that's probably why the one-time adjusted net profit is not that much higher than what it was last year. Last year, about 1,874 crore worth of net profit, and after removing the one-time adjustment, the net profit this quarter would have been close to 1,700 crore. So that's why you're seeing the stock not perform that well once the results have come out. We still need to hear from the management what exactly they saw this quarter and whether this was only a one-time sort of a blip and things will likely improve. Because remember that assets under management for Shriram Finance have improved about 19% and have risen to 2.54 lakh crore. So that's a positive sign, but asset quality is still a concern.
Thanks, Vishy, for that. Now, in an exclusive conversation with NDTV Profit's Tamanna Inamdar, Oil Minister Hardeep Singh Puri says that there is an intent to bring gas under GST. While he also highlights there is under recovery, the government is there to compensate. Let's hear him.
Wherever I go travel, which is not very often, I talk to people and people are wanting to give you gas. And there's a lot of interest from the United States to give us gas. You know, this is a business where if you have the capacity or you can give them the confidence that over a period of time you will be a steady buyer, they can even make fresh investments to get you the gas. Some of the issues that you are influenced by will be resolved, and I think there's an intent and a decision to go down that road, bring this under GST. if I remember correctly, I think a year or two ago, the companies ran a loss of about 28,000 crores. They came to us and we negotiated so and so. Ultimately, we were able to compensate them for 22,000 crores out of 28,000 crores. Secondly, and this is more interesting, there was also some under recovery on petrol. We even got some provisioning, I think about 15,000 crores. Yeah. But by the way, they were doing so well, they forgot about it, and we also forgot about it. So don't remind them through your show. So that 15,000. So whenever there is an under recovery, yeah, sure, we are there because it's for a good cause. It's not that somebody's getting rich as a result.
No, obviously, but this under recovery, do you see this being solved sooner than later? The
country is going to become rich. Viksit Bharat.
Well, viewers, the Reserve Bank of India has asked commercial banks to give information on the impact of proposed liquidity coverage norms following a pushback from the lenders against stricter rules. Subhana Sheikh joins in with more details.
Now, in a bid to understand the impact of the liquidity coverage ratio norms by the Reserve Bank of India that they had announced last year, the central bank has been asking all commercial banks to share data or information, to the central bank. Now, they're calling it a separate exercise, and because they want to understand the actual impact of these norms, and they're also asking the ALM team to share the data. Now, this is important because these LCR norms are set to kick in from the new financial year starting April 1, and banks are telling us that they have provided a couple of feedbacks such as deferment of these norms and also alternative mechanisms to cope with these LCR norms at a time when banks' resources are drained and liquidity is dried out and the economy is going through a slowdown. Now, in July 2024, the RBI had actually announced, these draft guidelines on LCR norms, which basically asks banks to maintain, HQLAs, which is high liquidity, high quality liquid assets, which includes government securities. So, a couple of rating agencies are expecting banks to actually increase, government securities in their HQLA portfolio.
Thanks, Subhana, for that. Now, a prolonged urban slowdown is prompting makers of daily essentials to roll out smaller, lower-priced packs of premium products to boost demand across categories from soaps and shampoo to snacks and frozen foods. Sesha Sen joins in with more details on this.
The prolonged slowdown in urban consumption is posing a unique challenge to FMCG companies as their premium consumer base shrinks. Now, while consumers mainly in cities are still purchasing premium products, they are opting for smaller versions of such products to manage their budgets amid inflation. Now, HUL has recently highlighted that this shift to smaller packs is a trend breaker, something that they did not observe even in the previous quarter. The company considered a barometer of FMCG consumption, stated that this behavior is offsetting the typical uplift that companies experience when premium products grow faster than rest of the business. Like HUL, several other companies such as Godrej Consumer, Colgate, ITC and Britannia have rolled out mini packs of their premium offerings to boost demand. However, with urban demand showing no signs of improvement and large packs continuing to grow at a slower pace, companies risk a delay in their growth revival.
Viewers, the Halwa ceremony scheduled to take place today ahead of the Union Budget's presentation on 1st of February. This annual tradition marks the end of budget preparations and the start of the lock-in period. As part of the ceremony, a large kadhai is used to prepare halwa at the North Block. It is served to everyone involved in the budget-making process, with the Finance Minister stirring the kadhai. This ceremony is a key tradition which signals the beginning of a lockdown process at the Finance Ministry. Now, in this segment of Your Budget, Your Voice, Uma Sudhir spoke to students ahead of the budget on February 1st. They shared their expectations for the upcoming budget. Take a look.
India is among the youngest nations globally, with a median age of 29 years and more than 65% of the population under 35 years of age, and half the population under 25. That's the category I have here with me. We are here at St. Mary's College in Yusufgura, Hyderabad. What is your ask from Union Finance Minister Nirmala Sitharaman for the young of the country?
First of all, good afternoon. My name is Om Dhanraj. There are a few suggestions I would like to give. I won't have much time. So there are two things I would like her to focus on. The one is inspired from Project Stargate, which Trump recently signed, which allocated 2% of federal budget of United States to build AI infrastructure over the course of next 4 years. And he spent over $500 billion on it. In my opinion, India owns the industry in terms of IT as of now, but we should step into AI and computer science infrastructure, and I think government should spare a bit of money there. And
so get future ready, because we can't fall behind now, because we are talking about the next century or the next 30 years as something that India must dominate. What is your ask?
My ask is to reduce the income tax gain on you can increase the tax bracket to a higher income, especially in trading. Right now in trading, retail investors are taxed more, I guess, comparatively.
So saving is not an incentive because you are getting taxed so high. So you're saying if there is more incentive for saving, more people would save, and therefore?
Yes. My ask would be to restructure the HEFA allocation of funds to the universities. For in India, forget about the private universities. Even now we can see government universities, maybe the IITs, you see a 200% increase in the fees which they are demanding. And this, I believe, will be detrimental to especially the people who are facing discrimination, SC and ST. And you can see a huge dropout rate in these IITs also. So I don't expect a complete budget allocation. I hope for a restructuring of how you divide funds to the universities. But
so that encourage higher education and also be more inclusive in terms of the more vulnerable sections.
Yeah, not just in reservations, but how you take care of the colleges also should be inclusive, not just through reservations.
What is your ask?
What I would like the government to focus more on is making financial literacy happen in the nation, because a lot of people right now, because of the taxes and the income being a bit lower than it is because the taxes are so high, they are tending to focus more on their purchases from loans, and this puts them in this vicious debt cycle that doesn't end. Maybe more knowledge about what they can invest.
Viewers, as the D-Day for Union Budget is around the corner, NDTV Profit brings you the coverage on what specific sector expects from the Budget 2025. Anushi joins in to tell us what railways expect from the budget.
Here are the key expectations from railway sector in Union Budget 2025. Indian Railways remains a key infrastructure player due to its massive role in economic progress as well as improvement in a citizen's daily life. Higher emphasis on modernization and expansion has remained at the forefront of the sector. Thus, expectations on what the upcoming budget brings in terms of this sector is something we should keep focusing on. Here at NDTV Profit, we will highlight some of the key expectations that can be beneficial for us from now on. The number one expectation is higher capex allocation as compared to last year is a key monitorable for the upcoming budget. If we go back to last year and check the key announcements in the railway sector, the sector hardly found a mention in the budget speech 24. This is starkly different to the picture before 2017 when the railway budget used to be presented separately few days ahead of the union budget. In FY25, total capex for railways in budget estimate 24-25 stood at Rs 2.65 lakh crore, while gross budgetary support stood at Rs 2.52 lakh crore, representing a 5.8% growth versus 24. However, the gross budgetary support reported a 51% and 36% growth in FY24 and FY23 budgets respectively. So far in this fiscal, the government has spent 76% of its budgetary outlay at Rs 1.92 lakh crore by December 24. This includes spending Rs 40,367 crore, which is 79% of the budget allocated for rolling stock. In safety-related works, out of budgetary allocation of Rs 34,412 crore, the amount spent is Rs 28,281 crore, which is 82% of the allocated amount. Media reports indicate a 18% increase in allocation for railways in budget allocation this year. So higher growth coming back versus last year should be definitely on cards this time, with focus now also tilting towards any announcements around long gestation, large value projects such as additional dedicated freight corridors. Second is a total of 136 Vande Bharat train services are running across Indian Railways network. During calendar year 24, Indian Railways introduced 62 Vande Bharat services. Continued rollout of Vande Bharat trains for better connectivity warrants announcement of additional Vande Bharat services as well. Reports also highlight on expectations of increased funding alongside for bullet train project. Third expectation is higher focus on India's Kavach train protection system for better safety. Project for equipping 10,000 locomotives has been finalized, and bids for track side works of Kavach for approximately 15,000 route kilometer have been invited. Kavach aids the loco pilot in running of train within specified speed limits by automatic application of brakes in case loco pilot fails to do so, and also helps the train to run safely during adverse weather conditions. In June-July, several media reports suggested Indian Railways aims to deploy the Kavach system on 44,000 kilometers of tracks within the next 5 years to avoid train accidents in the future. Thus, fast-tracking progress on this field remains critical. In other announcements, what we can also look forward to is integration of AI into operations, focus shifting back to rail infrastructure versus rolling stock. Now, talking about what has happened in calendar year 2024, here are some key highlights. Indian Railways introduced 62 Vande Bharat services and first Namo Bharat Rapid Rail. 6,200 track kilometer rails have been renewed with new rails. Loaded 1,473 MT of freight in 2024, achieving 3.86% of growth. 10,000 locos being equipped with Kavach, bids invited for 15,000 route kilometer as stated earlier. Total of 58 projects of 34 projects sanctioned across 3 economic corridors. 3,210 route kilometers has been electrified during calendar year 2024. Work started on 1,198 stations out of 1,337 stations under Amrit Bharat Station Scheme. So here are the key highlights and what we can look forward to for railway sector in upcoming budget 2025.
Viewers, on to some national news now. At least 8 Fiji coaching centers across North India have abruptly shut over the past week, leaving hundreds of students and parents fuming ahead of board and entrance examination. This came after several teachers at the institute quit in mass due to unpaid salaries. Anushka Garg from NDTV brings in more details.
Right now we're at Sector 62 in Noida, where there was an operational Fiji center, but it has stopped abruptly, leading to outrageous reactions from the parents whose children were in fact studying in this college. Let's go straight to them. Sir, आपका नाम क्या है?
सत्संग कुमार।
आपके बच्चे यहाँ पे पढ़ रहे थे?
बिल्कुल।
कितने पैसे आपको रिफंड कुछ मिला?
नहीं, जीरो रिफंड।
आपको कुछ बताया गया था कि ये बंद होने वाला है?
नहीं, कोई इन्फॉर्मेशन नहीं।
अब अब्रप्टली बंद कर दिया गया?
अब्रप्टली, ऑल ऑफ अ सडन। इनफैक्ट एक दिन पहले तक शाम के 5 बजे तक क्लासेस था, बच्चे 4 बजे तक टेस्ट दे रहे थे उस दिन, और अचानक ऑल ऑफ अ सडन 4 बजे टीचर आते हैं और कहते हैं कि आप लोग घर जाओ। तो विदाउट टेस्ट भी कंप्लीट नहीं दे पाए और बच्चों को ऐसे अब्रप्टली भेज दिया गया वापस टू देयर होम।
आपका नाम क्या है सर?
राहुल त्रिपाठी।
आपके भी बच्चे यहाँ पढ़ रहे हैं?
हाँ, यहाँ पे पढ़ रहा था, और इनफैक्ट 2 दिन पहले ही संजीव झा से आकर के कंफर्म किया था, क्योंकि गाजियाबाद का इनका सेंटर बंद हुआ था। उसके बाद हम लोगों ने आकर के कंफर्म किया कि इस सेंटर में तो ऐसी कोई प्रॉब्लम नहीं है। हम लोग को एश्योरेंसेस दिया गया कि कोई ऐसी प्रॉब्लम नहीं है इस सेंटर में, ये प्रॉफिटेबल सेंटर है, काफ़ी बड़ा सेंटर है, दिस सेंटर विल नॉट गेट क्लोज्ड। उसके 2 दिन के बाद अचानक से सेंटर क्लोज हो जाता है विदाउट एनी इन्फॉर्मेशन टू एनी ऑफ द पेरेंट्स।
Viewers, before we wrap on this edition of Profit 360, I want to alert that it's just 7 days left for the budget 2025. But what should you expect? How should you trade? And how can you profit from budget 2025? Record a video message of your questions and send it to us on WhatsApp. Your questions will be answered by a panel of top market experts, including Ramesh Damani, Prashant Khemka, Gautam Shah, and more, only on NDTV Profit.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
They say fortune favors the prepared. The more prepared you are, using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
I present the budget for a historic
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold, into the mutual fund industry over the past couple of years, will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme, as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will...
Web of Sangvi, CEO at Ask Health Solutions, joining in to talk to us about what's in store for 2025 as a year from here on. Vaibhav, good morning and welcome to the show. My first question coming to you is, clearly with the way the reactions that we are seeing in terms of Q3 numbers, stocks with negative earnings, even with the slightest of the negative aspect, are being beaten down right now by the markets. Taking the way valuations are, do you think expectations with regards to earnings growth needs to be trimmed down from here on?
Of course, and to be very honest, I think that would always be the case when you have extremely high valuations and any scope of disappointment, in fact, any disappointment, even though it may be absolutely marginal, I think it will take a, start to take a knock, when the risk sentiment in the broader market is not very conducive. So in this case, what we are seeing in terms of several names where there is slightest of disappointment, we are seeing more than proportionate reaction to try and see that from a longer term average multiples, it kind of moves towards that. At this point in time, it is kind of trading much higher, especially in the mid and small cap segment.
All right, Vaibhav, if I could just ask you about things global, from a global standpoint, and I reckon that this is to a certain extent pertinent for Indian markets. We've had a lot of noise with the US, the elections, the president, and all the sort of comments they're making. We have a different sort of an understanding, a very conflicting understanding of how interest rates could potentially pan out for the US. That brings me to the question that at the moment we have seen FIIs sell into Indian markets. Are we expecting any likelihood of them coming back anytime soon? And the reason why I ask you is because we want a better understanding of the valuations picture of whether or not we could perhaps see valuations go back to elevated levels. Of course, I know that you have already suggested that valuations are still expensive. Still, do you think there could be some sort of possibility, keeping global events in mind?
No, of course. See, when we talk about 2025, when I'd written an article in terms of outlook for 2025, I'd clearly mentioned that 2025 is a year of government policies and reforms. And to be very honest, it's pretty anti-intuitive, purely because after 9 or 10 years of the current government, why am I talking about policy reforms and policies again? Now, in this perspective, I'm not only talking about India, I think I'm also talking about what's going to happen from a US government perspective. What we do expect is basically 3 or 4 things. Quickly, one is weaker oil prices. 2, I think in terms of corporate tax cut, which I think to some extent it's being talked about yesterday. 3, I think vocal exchange of views between the between the US government and the Fed in terms of interest rates. Lastly, tariffs is always the case. So in all, what we do think is that it's going to be US industry first, and precisely the reason why we've seen the last couple of months where dollar is kind of strengthening. And because of which also we've seen large part of kind of capital is kind of moving back to US in terms of the record inflows to US as a market. My sense is basically this will continue to happen at least for some time, till the time we don't resume our earnings growth or probably stabilize our earnings growth. And from a valuation standpoint, I think we start looking attractive from a relative perspective as well. So let's wait for it. February 1 is going to be an extremely important day in terms of our policy direction and reforms. We'll wait for those kind of events to pan out and then take a call for the next 18 to 24 months.
So Vaibhav, what are you advising your investors at the moment? Keep cash on the sidelines, or are you seeing any pockets where you could deploy?
See, we are a long short fund, right? And we have that flexibility of going into cash, waiting out, and taking out these kind of risk events completely from the portfolio management perspective. So we do these ahead of any big binary events like a budget or probably a credit policy or any event which has the potential to take the market either ways. We generally go in with high cash and probably high hedges as well. So we will wait out, wait for the events to pan out, see what is the outcome, and then analyze and redeploy. And that's the liberty we have, from an absolute return fund.
Okay, and going forward, I'm assuming that the approach will be a lot more bottom-up than it was. The question then is, in terms of your expectations for growth in FY26, have you tempered those expectations down as compared to perhaps 3 months or 6 months ago?
Of course, I think that the consensus is way higher, to be very honest, from an earnings growth perspective. While this year is likely to be a big disappointment from a total earnings growth, I think 26 and 27, I think that the numbers are likely to get downgraded, as we kind of, go by. So we do expect that to happen. But what is going to be also important is that, when February 1 comes, the direction of the government in terms of capex versus consumption, or probably a combination of both. In fact, that will kind of determine what is the constitution of the market in terms of the movement for the next 18 to 24 months as well. We've seen in the last 9 years to 10 years, the government was laser focused on terms of capex, and because of which we've seen fantastic kind of performance where earnings also growth happened and also multiples kind of moved up or inched up in this whole segment, while consumption kind of lagging. So my sense is basically if we are coming from 2 quarters of suboptimal growth from a GDP perspective, it will be very important to see how the government kind of helps to pump up the kind of economy from here on in terms of the growth rates.
Vaibhav, we'll leave it at that. Thank you so much for joining us here and talking to us here at NDTV Profit. Hello and welcome to KYC, a brand new show at NDTV Profit. In this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep, comprehensive understanding of the companies they invest in. Know Your Company is a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Today, we are going to talk about PB Fintech. This is the one which is very popularly known as one which runs 2 platforms specifically, Policy Bazaar and Paisa Bazaar. So I'm going to very quickly take you through what each of these platforms does. So as far as Policy Bazaar is concerned, that's perhaps the more well-known website in this case. Of course, it's an insurance comparison website where you do have a lot of insurers come and all who are interested in picking up insurance, you'll be able to compare the various schemes that are available as far as that's concerned, and you have the ability to perhaps make choices there as well. It's India's largest digital insurance marketplace at the moment, and it has over 90% market share, and it looks at insurance that would include life, general, medical, and so on and so forth, including auto for that matter. Paisa Bazaar is the other one, which in fact provides a variety of loans and credit cards. This is again an interesting one because this is where you have the debt market come into play, and not unlike what we see in Policy Bazaar, Paisa Bazaar also partners with large banks, NBFCs and fintech lenders, and what they do is they provide a wide choice of products across personal credit categories as well. And of course, it's a digital consumer credit card marketplace, so that's something that you need to keep in mind as well. All in all, if you have, the company is also ventured into certain other newer businesses. So when it comes to its core business, about still a 2/3 of its revenue still come from core businesses, and it was FY24 in which we started to see a large chunk of the new business start to contribute as well, as far as PB Fintech is concerned. But, let's move on and talk about a handful of factors. And what we usually do is we take all these companies and we assess these companies through the lens of the financial statements, as well as various other fundamental parameters to gauge to how the company has done so far. In this case, we'll be separating out income statements and profitability because, well, it's a platform. Of course, we'll be talking about balance sheets and cash flows as well. But moving on, of course, we talk about shareholding, how the shareholding pans out, the valuations picture as well, along with street coverage and street credentials. And for that, of course, I'm going to get in my colleague Harsh Saita to also take us through and give us a little bit more insight with respect to some of these aspects. So, Harsh, welcome to the show and thanks for joining in. Let's start with what you make of profitability, rather let's start what you make of revenue and then move on to profitability.
Yeah, in fact, let's pull up those numbers, on the revenue count. If you look at the revenue over the last 3 years thereabouts, it's literally gone 4x. So from sub 900 crore, the current revenue for FY24 was roughly 3,400 odd crore. For just a couple of minutes, I'd request you to ignore the EBITDA and PAT number for now. Just look at the trajectory of revenue growth. It's been very strong in that sense. FY21 was 885 crore. New business within FY24 contributed just 1%, which is 12 crore. That new business has now become a third of the company. What are these new businesses? Some new businesses also include international operations, something like a Dubai. It also includes the agency channel, which they've started off, where you can call PB Fintech helpline numbers and book your insurance that you require basis your need. So a couple of those have really helped the top line, and that's what we are seeing growth in. So from the 12 crore number in FY21, new businesses have gone to 225 crore in FY22, which is 20x, then 848 crore in FY23, which is 4x on top of that, and then you're at 1060 crore in FY24, which is another 25% growth. So extremely robust in that sense, and overall the revenue number looks very, very solid. So that's a clear thumbs up with regard to the revenue number because it's gone up in such a solid fashion. The guidance for revenue as well continues to be solid at 30%. So you'll continue to grow at 30%. That's the opportunity that management is seeing, and therefore clear thumbs up where revenue is concerned. Very important for platform companies to scale revenue, but along with it, scale profitability as well. And that's our second metric, and I'll try to cover that as well. So now, if you can look at the EBITDA number, the way in which EBITDA has gone, that's a negative EBITDA number, by the way. And therefore, from 295 crore negative, it's gone to 662 negative EBITDA. And thereafter, it settled it in at around 186 crore of negative EBITDA for the full year. And therefore, what you're seeing is that you're seeing an improved trajectory where margins is concerned. If you can pull up those margin numbers, you'll see how margins have improved on a year-over-year basis. And now you're starting to see margins at a negative 5% as the company edges towards that guidance of 1,000 crore profit after tax by FY27. That's going to lead to a push with regard to where profitability is concerned. So growth will now be focused more on profitability, Agam. So growth, thumbs up, but even profitability, a thumbs up, because the manner in which they've been able to go about this underwriting more profitable growth is what really stands out.
Right, sure, fair enough. And point taken. Let's talk about the balance sheet then. And it does have a strong net worth, about 6,100 crores in terms of its equity shareholders' funds. It has a debt of around 333 odd crores. It's a relatively lower amount of debt, and in terms of cash, does seem like it's cash rich. Standing at around 5,400 crores in terms of the cash that it holds, which means that the debt in this case is of less significance. Of course, I'm sure that it will require that amount of debt to perhaps run its operations to a certain extent, but it does seem like it has a fairly large chunk in terms of its cash, and that's why we're going to give the balance sheet a thumbs up. What can you tell us about cash flows, Harsh?
Yeah, it's as expected. Just how operating metrics and profitability is improving, the cash flow is also improving. But there's one big catch here. So one is you have a positive free cash flow now, but the big catch here is that you're going to invest $100 million in the hospitals business. Now this is new. Yeah. They've done new initiatives in the last 2 to 3 years where margins have seen significant decline. You'll want to look out for that as to what happens with regard to the fresh deployment of cash that they're going to do, which is roughly around 1,000 crore, 900 crore odd. That's the cap they've kept as part of their board resolution. So that $100 million utilization within the hospital business, how quickly are they going to do it, and what is the impact of that on overall numbers is something we'll have to look out for. So that's point number one to look out for where cash flow is concerned. The other, therefore, out of the 5,400 crore of cash available today, you'll roughly post utilization of this 900, you'll have 4,500 crore of cash. So on the cash flow front, slightly iffy because they keep utilizing cash in some of these new ventures, and therefore I'm giving this a neutral. I'd want to see a more steady state cash flow where there's more certainty to where they're deploying cash, and hence a neutral on this one. In no count bad because they've done well on the top line whenever they've done this, but a neutral nonetheless.
Sure. So now that we've covered your key financial statements and how things have potentially panned out at the moment, let's talk about a handful of numbers beyond these. So we're going to talk about shareholding. Now, the company doesn't have promoters. It is held widely by institutions. Foreign institutions hold about 48%. And domestic institutions hold about 20.6%. I was actually looking at the quality of institutional holding to see whether or not it is well diversified. It's not that just a handful of entities hold a PB Fintech. So that's the first thing that comes into play. In terms of FIIs, you have names like Tencent, Vanguard in the past, of course, has held the company. We've had New World Fund also holding a substantial amount, but it's fairly evenly distributed across more than a handful of institutions. Even if you consider the domestic holding, and that stands at around a little over 20%, we're looking at your key AMCs like Axis AMC, Mirai AMC, something like an HDFC AMC as well, along with Franklin. All of them hold a good amount of funds, or rather will have shareholding in the company. Of course, given the fact that, once again, in terms of DII holding is well diversified, it's a positive. Which is why I reckon the only issue is that nearly a third of the holding is still with the shareholders, and that perhaps is the reason why we're going to give it a neutral rating and not necessarily a thumbs up at the moment, because about 31% is still out there with the public. So we'll give it a neutral, but let's come down to perhaps
Agam,
the
I'm
most
just
important.
sorry, I'm just going to add one quick point to this.
Yeah.
So for viewer perspective, Naukri holds part of PB Fintech as well, of course. And when you're looking at the founders, which is Alok Bansal as well as Yashish Dahiya. Yashish Dahiya holds around 4.3% of the company, and Alok Bansal holds around 1.4%. So combined, that is not enough comfort, of course, as you rightly mentioned, but Naukri also holds a stake in this one, just for viewer perspective.
Yeah,
of course, you've kind of covered
absolutely
most of it.
So valid points there. In fact, the fact that the people who run the company also have a shareholding, of course, makes it an more important of a factor here. But yeah, I was going to come back to you on valuations, Harsh.
Yeah, this is going to be an interesting one. This was a tough one to break down, frankly, Agam, because valuations for these new age internet businesses anyway very, very hard. They keep burning money. And therefore, what I've tried to do is I've tried to build my own valuation thesis to this. 77,000 crores, the rough market cap at this point. And if I can just look at the cash balances. We spoke about 5,400 crore of cash, of which 900 crore roughly to be utilized in the hospital business. So let's currently keep the cash balance at 4,500 crore. On a standalone basis as of today, the company's market cap ex cash is around 72,500 crore. So you're roughly outside of the cash that you're getting for purchasing equity or purchasing the business, you're purchasing it at around 72,500 crore. That's market cap net of cash.
Right.
Now the company's guidance is 1,000 crore rupees of PAT by FY27. Now, with the 5,400 crore of cash, the company is generating roughly 350 to 400 crore of other income annually, which also contributes to top line. Now, which also contributes to bottom line, I beg your pardon. And therefore, I'm going to remove that from the bottom line, right? And at the lower end of the band, 350 crore is what I'm going to take. Remove that from the bottom line number of 1,000 crore in FY27, leaving us with 650 crore of core profit after tax on the basis of a market cap of 72,500 crore. I hope this explains clearly how I'm trying to value this. And therefore, you have a profit after tax of 650 crore FY27, and therefore the company trades at 110 times this adjusted profit after tax, which I have adjusted for cash, 110 times FY27 profit. But at a 30% growth clip, is this kind of valuation justified? Is a question, of course, that viewers and investors have to think of. But essentially, that's how the valuations line up. Of course, no comfort with regard to that number, and therefore have to give it a thumbs down for now. But nonetheless, you may want to really rework the numbers to FY30 and see how the numbers really change.
I mean, I don't even want to imagine what it was trading at just about a few weeks ago.
Yes.
At around the levels of around 2,100, 2,200. So, yes, point taken. Absolutely, Harsh. There's no doubt about that. Do remember, this is 2 years down the line. So, this one is certainly going to be a challenge. But I'm going to very quickly take you through street credentials. It's going to be an up because the street is positive. We have about, we have seen growth despite the recent correction, about 84% growth on a year-on-year basis. As far as street is concerned, they are largely positive, but I'm going to actually then, okay, so this is a mixed one because they're just 8 buys, 3 holds and 9 sells. So they're not completely positive, but with an upside entailing of around 3.7%. So I reckon the street at the moment is also concerned with the valuations at which PB Fintech is currently trading. And hence we're going to give the street coverage a neutral rating, not necessarily a negative one. Yeah, that should bring for you on your total score out there. And in terms of all the parameters that we've spoken about with respect to PB Fintech, well, we have an overall rating of 5.5 out of 8, if I'm not mistaken. So there you have it. We have these thumbs up, and along with that, valuation, of course, not looking that amazing. Let's pull up the total. And yep, 5.5 out of 8 is what we are looking at as far as PB Fintech is concerned. So good prospects, but it's still very expensive. But with that, Harsh also spoke to the management of the company. This is what they had to say. Listen in.
So if you look at our business, see, we do all retail lines, and the growth is sort of driven by both health insurance and life insurance business units. We don't see any reason it not to grow at the same pace in future, and we have always maintained that 30% is a very good growth rate for Policybazaar sort of businesses. There will be quarters where we will be growing faster or slower across different business lines, but overall, if you combine every business line, we hope that we are able to deliver 30% sort of a growth rates across years, and that's been the case if you look at last 5-10 years of Policybazaar sort of growth numbers as well. See, the way we look at our business, to be honest, is there is huge amount of customer need for these products. So you have to work on 3 parts. You have to work on product innovation with your partners. You have to work on removing all the friction from the buying process so the customer can obviously go through the transaction much easily. And you have to work on the servicing element, which includes the claim as well. If you're able to do a better job for all 3, more and more customers will come to you and they will in fact transact through you. The whole promise around the claim support that we have been able to deliver, and along with that, the focus on regional languages, the focus on physical meetings, along with call center support that we have been able to achieve over the last 3 years, has resulted into a very high growth rates over the last 3 years. And that's what that seems to continue for now. And we hope, as I said, 30% plus sort of growth rates in coming years as well.
Okay. So, sir, I'll touch upon those couple of factors that you spoke about. Those were new levers for you.
Yes.
Having a call center to answer customer questions and therefore push the insurance product out into the market, make it easier for your customers to understand the product better and understand the right product and buy it. What are the new levers that are going to come on stream which gives you the comfort that a 30% growth, maybe for the foreseeable future, it can be 3 years, it can be 5, you can put that number, but what are those levers like? Because you've unlocked a few levers in the last 2 to 3 years.
There is nothing specific like this one thing will drive the growth. I mean, if obviously we had known that there's a single one lever, we would put more effort on that one thing. But it's a multiple thing which come together. So like if a customer wants to have a physical meeting and we are able to enable that, or if we are able to talk to people in their local native language, those are very big positives. But would that one factor determine that we grow at a particular pace? Most likely no. Similarly, the whole claim experience that we are able to deliver. Today, we have about 600 people who are focused on customer claims and customer support specifically. So, those are things definitely keep on adding up. It adds to your brand. It adds to better conversion. We, as I said, we don't look at one factor. We look at the full value chain and we see how do we give a better experience, a better product to customer across the whole value chain and control more and more of the customer experience.
This is the day that shapes the future of a billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you. Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
They say fortune favors the prepared. The more prepared you are, using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
The mother of all Kumbh Melas. At scale never seen before. Livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
That's my expense for this month. By the time it's November, it's free. But then I tell myself that I'm going to use it at least on 100 days of the year, and then next year, and then next year. How do you strike a balance between what you want and then also savings? I'm not splurging, I'm just going to be using something for a long time, so I'm investing in a way.
My entire year's cost in India gets spent in just a few days of buying those newspapers overseas.
They knew how to save, they don't know how to spend.
In the younger generation, there's a lot more focus on self-care.
The other day, I saw this lovely jacket. It cost 12,000 rupees. Now, normally I'd say that it's a little expensive, but then I got to thinking, I use jackets very often. I'm going to use that jacket at least once a month for the next 12 months. That's just 1,000 rupees per month. And what's more, the jacket is on 30% discount right now. I absolutely had to buy it, right? Right? This is exactly how a lot of young people think. You've probably heard of it. A concept called girl math went viral during the pandemic because of a social media video. It is something that has been embraced by millions, but it is also a concept that has been scorned and made fun of. And by the way, there is also boy math. This is MoneyWise on NDTV Profit, and I'm Alex Matthew. On this show, it is going to be my endeavor to understand this concept and discuss how it relates to managing money. To help me understand it, I have with me three of my lovely colleagues. From the left to right, I have Charu, I have Yukta, and I have Tanvi. Thank you so much for consenting to do this. And I wanted to do this because I want to make it very clear at the start. I do not want to interpret this. I want to understand it. So one of you start and explain what this concept of girl math is and how it relates to you. Yukta, you want to start?
Okay, so simply put, girl math is just justifying your expenses. But to be clear, it does not have anything to do with like serious expenses like buying a house. It has stuff to do with gratification. So for example, my version of girl math is buying slightly pricier makeup just so that I don't, like makeup that I'm used to, so that I don't use another brand, and what if like that gives me infection? So then I have to go to a dermatologist and incur like a lot of costs. So might as well just buy the pricier makeup and sort of deal with that. So that's my justification.
Okay, and that is your girl math. So
yeah,
what that means is that everybody has their own concept of girl math. Charu, is that how it works?
Definitely. For some people, makeup is a must-have. For other people, they want to splurge on clothes. Some people want to buy concert tickets, which are way beyond their means. Currently, if I give you an example, for example, I am buying a Hermes bag. I cannot afford it just like that, but I splurge all of my savings on it. But then I tell myself that I'm going to use it at least on 100 days of the year, and then next year, and then next year. So you can just say that I'm going to be using it for 300 days. Just divide the cost by 300. So I'm going to feel that, okay, this is my maths. I'm not splurging. I'm just going to be using something for a long time. So I'm investing in a way.
You're investing in a way.
Yeah.
Tanvi, does this only relate to girls, or is this simply a concept that is emerged where people are putting a tag to it? But you've seen other people do this as well, males.
Yeah, I think we are just getting a tag now. It has been, it is just something that we have practiced for so long that we have never noticed it.
Okay.
But now, because of the trend, we are noticing it.
Give me an example.
So I call this my mom math.
Your mom math. Okay.
So whenever I used to buy makeup, I used to buy it at the start of the month. The moment my salary used to be credited, I used to be like, okay, now I'm going to buy the makeup I want. My mom told me, don't do that. First, you get done with all your expenses of the month. Your electricity bill, your rent and everything else. And by the end of the month, whatever money you've left, now you use that money to buy things that you want.
Okay.
So you're done with your main expenses. And now what is left is the money that you have saved, bit of it, call it savings, and now use that money to splurge. So that is the mom math that is now I'm using.
Okay, so that's an interesting concept. But there's a lot more to this, Yukta, right? It's about how you view cash. It's about looking at discounts. Can you explain these varied concepts?
Okay, so I have an example. So imagine I want to buy, let's say, a watch. Okay, that's a very gender neutral thing. Everyone likes watches, right? So for example, there's a watch on sale at like 60% off. Okay, or actually, you know what, let's just do seasons. There's a coat on sale for like 50% off. It's summer.
Right.
So it doesn't really make sense for me to buy that coat in summer.
Right.
I won't use it instantly. But it's going to be at full cost in the winter. So I'm actually saving 50% of that cost when I buy it in the summer.
And there's also sunk cost. How does that work?
Okay, so sunk cost is, okay, for example, I am buying something right now, like let's say a concert ticket, okay? There's some artist that I really like, the concert is in like November, but I have to like spend maybe 10K on a ticket right now. That's my expense for this month. By the time it's November, it's free. That concert ticket is basically free to me. So at that time, even if I decide not to go, or even if I'm sick, or even if it's just more financially viable to not leave my house at that time, it's a sunk cost. It's already gone.
So you don't feel guilty about it?
I'm not feeling guilty about it because I'm not getting that money back either way. It's a sunk cost.
Okay. So would you say that it is the removal of guilt from a transaction, Charu? Normally, and the reason I ask this is, and I know that generations, the gap between generations is narrowing very sharply. And so the way that one generation thinks about money is not necessarily how the other generation does. And there is often judgment, which is not necessarily the right thing to do, because everybody is allowed to think of their money the way that they want to think about their money. So would you say that you want to experience something, or you want a certain product that you feel that you deserve, and you want to remove the idea of guilt from that, and so you find a way to justify it?
See, I always used to feel very guilty about going on vacations because they used to be very expensive. So what I have started doing is I would book a vacation 4 months in advance, like you were talking about the concert ticket. And when I'll finally have my leaves and I'll be going on that vacation and, you know, using those amenities that I've paid for in advance, I'll feel that it's all free and I'm just enjoying it. It's not true, well, but it's something that is in my mind because I want premiumization. But at the moment, I'm going to feel very guilty about spending so much on a premium product when I know that I'm not making that much. So I'll save up, do it in advance, and then use that to service 4 months later and feel like it's free.
Okay. Have you guys heard of the concept of boy math? So from what I have read, it emerged from girls themselves. Women came up with the concept of boy math. Explain this to me. Who's going to take it?
You go ahead. Okay, so when girl math became a trend, a lot of women started owning up to it. They were like, yeah, you know what, we do it and we're proud of it. We're justifying it to ourselves. We're not really justifying it to anyone else. It's like Charu said, right? I want all those luxuries, but I don't really want to have that guilt attached to it, that I'm spending more than I'm earning. So we started owning up to it, and then a certain section of men also started scorning it and making fun of it, like, oh, of course, women are very frivolous with their spending. But then essentially what men also do sometimes with their expenses is exactly this.
The same thing.
Yeah.
But they spend on other things. They spend on tech, they spend on games, they spend on a PS5 maybe.
What is the difference between me spending 20,000 on a nice like pair of heels and like maybe a person spending it on some tech or a game even? Yeah. So because I'm justifying it with the number of users and they are justifying it with the number of times they'll play. So it's essentially the same thing.
Okay, finding ways to justify it. Okay. So I have actually asked a lot of people in the run-up to this conversation. I must confess that I'm terrified at this juncture and hoping that I will not be trolled. But I asked women around the newsroom and 8 out of 10, 9 out of 10 have said that they actually use this concept. Does that surprise you?
No.
None of you, Charu?
Not really. Actually, you know what? At the end of the day, I don't really think it's girl math or boy math or it has anything to do with gender. We are just young people who are making a certain amount of money and we want the luxuries that our seniors are also enjoying. So we are just doing whatever we can to enjoy it and, you know, experience it. Now we can call it girl math, boy math, anything to, you know, basically separate the guilt out of it, but it has nothing to do with gender. My guy friends or, you know, the boys and the men around in my life have been spending so much on PS5 or really nice pair of shoes or they will, you know, rent the best car on Zoom car to drive around in Goa, which is something not really understandable to me, but I understand that it is giving them happiness. So it has nothing to do with gender. It is just wanting premium things.
Fantastic. Last question, and then we will bring in a financial planner to talk about this concept because obviously they've studied it in a different manner, right? I am very curious about that conversation. But the last question to the three of you, I know that you've started saving, part of it because you've been told it's a great idea to save and hopefully because you've been engaged in the work that we've been doing on this channel. Do you at all feel that you don't need to save for something because that's something that emerged from the pandemic, right? Why worry about something that is 30 years down the line? Who knows what's going to happen? Tanvi?
No, I think we all need to save in some way or the other because as we grow old, our needs are changing.
Sure.
Right? I'm certainly not looking forward to the things that I was looking forward to when I was in college.
Sure.
Right? Right now, I personally want to take a trip to South Korea, but that was not something that I had in mind.
Right.
When I was in my final year of college.
Okay.
So savings are important, but I think the girl math thing or the boy math thing comes in like, first of all, high inflation at the moment, right?
Yeah.
And then your salary is not, you're not able to spend or address your needs or desires in the salary that you get in a high inflation posture. Right. So in that, how do you strike a balance between what you want, chasing those little desires?
That's very difficult to do.
Yeah, and then also saving.
Sure.
So I think, yes.
So the priority, would you say, is sometimes tilted towards that gratification and maybe to a certain extent saving takes a back seat? Is that it?
I think, no, please go ahead. I think what's happened after the pandemic is a lot of the plans that people had, right? And a lot of, as Tanvi said, priorities changed. So I think because we saw our parents save up so much and then like they didn't have the chance to spend. Sure. They don't know how to spend. Yeah. Right? They knew how to save, they don't know how to spend.
That is an important concept.
I think what happened is we saw that and we're like, okay, we don't want to do that. We want to enjoy, but of course, saving is important. Sure. But we also do want to enjoy because what if there's another pandemic? What if there's like a crisis? We don't know.
You never know.
You never know. Okay, so on that very interesting and poignant note, I'm going to close this leg of the conversation. Ladies, thank you so much for joining me and for explaining this to me.
Thank you.
Okay, so that sets the context very nicely for this next leg, which is to speak to the financial expert and see what he thinks about this way of spending or way of managing money. Joining me now is Vishal Dhawan, the founder of Plan Ahead Wealth Advisors. Vishal, thanks so much for joining me.
It's a pleasure.
So I ensured that you could hear that part of the conversation because I wanted you, like me, to get a glimpse into the thinking of the next generation, Gen Z, not necessarily the next generation, but now the prevalent generation, right? What did you think?
So I think justification of spending has always been a brain thing, right? So everyone's always had lesser resources than what they wanted to spend. It's just that the way that people have justified it across generations has often been different.
Have you had examples of that?
Oh, absolutely. I think, I have this weakness for newspapers, and I've had it since when I was a kid. So, when I travel overseas, I actually always want to pick up a newspaper, and it costs $5-6. And not just because I'm a financial planner, but just because it's normal, everyone does a mathematical conversion of multiplying it by 80 or 85 or whatever currency
86 now.
Or 86, right? And then you're like, oh my God, this newspaper costs 500 rupees. And you have a coffee which costs 600 rupees.
Right.
And I justify it by saying that, you know what, but a newspaper gives me so much knowledge that it's very, very justifiable. So wherever I go, I keep buying newspapers.
Right.
And when you think back at it, my entire year's cost in India gets spent in just a few days of buying those newspapers overseas. Clearly not the same amount of knowledge, but in my head, I've sort of convinced myself that, that's a learning thing. Even though I know on my phone, I can log in and see that same newspaper online every day that I'm in India or overseas for free. Absolutely. So this is the version of math that I apply, and I justify that spending. But when I do the same thing with my children, they'd say, hey, the coffee at $6 is way more worth than the newspaper at $5.
Yeah.
And therefore, it just is different.
There are examples galore, right? People will say they would buy a coffee at a coffee store in a mall, but they would say that it's justified because the ambience of the mall and the experience of walking around in the mall and meeting people, it's all added into the cost of that coffee. The experience is part of the coffee. So you find ways to talk about it. But like you're saying, it's not a new concept. People have thought about it and used this a lot. But what struck me is that in my parents' generation, what I have realized is when I speak to them about, say, taking a vacation now that my dad is retired, and saying, why don't you've got so much money that you've saved up. Both of your children are working and self-sufficient. Use this, go to the US for a month, or go to Australia for a month, or take a vacation. And they say, no, it's too expensive. So they've conditioned themselves to think, Vishal, that they can't afford something, whereas they actually can. This is the opposite of that. You're saying you deserve something, you want to consume it, or you want to experience it, and you're front-ending that spend. Do you think that that is what it is?
Absolutely. So I think there's clearly between those two generations that you're referring to, one generation has grown up with shortages and deficits all the time, and they were always trying to balance the books. And clearly, as you went about balancing the books, you suddenly lost the ability to necessarily know how much you can afford to spend. Because all of a sudden, because the children became self-sufficient, you now had the ability. In fact, we see this happen all the time with our client families where children live overseas. The parents live here. A flight to the US is extremely tiring when you're old, especially. You get there and you have jet lag, you have knee pain, you have all kinds of problems. You can well afford a business class ticket, even though those prices have gone up substantially, but you don't do it because you wonder why I would pay 3 times more for a ticket, because ultimately I'm still going to land at the same airport in the US.
It's guilt.
And it's guilt, absolutely. Whereas in the younger generation, there's a lot more focus on self-care. And therefore, mental well-being, how this helps me become a better person, do things better, etc. Gets a lot more attention. Absolutely,
a better product.
Absolutely. So I think there's a larger focus on well-being as a concept, which is prevalent today. And I think it's a very powerful concept as long as you don't go overboard through that process.
What is the definition of going overboard, Vishal?
So I think for each person, as long as they realize that there are these, elements of what I would call preferences, right? Some people might refer to them as quirks. I just say they're preferences because everyone has their own sort of pleasure point in terms of what they like to spend on. And therefore, what you end up doing is you start asking yourself, saying that, okay, by spending on this a little more, what am I going to spend on a little less so that I'm balanced in terms of my finances?
Yeah.
As long as I'm able to do that, it works well. I don't have to get stressed out. I don't have to feel guilty. I don't have to do any other math. I mean, there are a few examples that I hear from people. There are people who tell me that, you know what, when they spend in cash,
it's free.
It's free.
Yeah.
Because the bank balance remains the same.
I've heard that, yes.
Or
if you get a refund.
Or if you get a refund, it's much
earning
cheaper.
money.
Yes, or maybe it's even earning money. It goes to another extreme, right? Or let's say, you know, when you're upgrading your phone, you're upgrading it because you have higher resale value on the phone. So I think there are all kinds of ways that people justify this. But at the end of the day, as long as you're being balanced in your approach, you're not taking on unnecessary debt in the process, you're not getting trapped out there, those are important elements to keep in mind.
We need to talk about that because a lot of the times, because of the imbalance in the amount that you have and the amount that you want to spend exists, to bridge that gap, you are using a credit card or you're using a personal loan, unsecured loan, high cost often. Is there a danger of falling into a debt trap?
Very much. I think a lot of what you spend also does some sort of social signaling very often. And what happens is it's hard to sort of downgrade that social signal. And therefore, if you started off doing it on debt, you run the risk that you could end up in a situation where you need to continue it so that you can keep up with the impression that you've created.
And before you realize it, the debt is ballooned to a point where you can't manage it. You can't manage the EMI payments.
Absolutely, because you may have also projected that my income will grow at a certain rate, the economy slows down, there is stress in your job, you don't get a variable pay, all kinds of other elements could come in. Or you could have something happening in your family, like a large expense which you hadn't planned for. So I think there's lots of risks that you run by front-ending your expenses in the same way as you run risks by back-ending it too much, because you might realize that you don't live long enough to enjoy that money at all.
So is there the golden question then, and I suppose the $1 million question is there a middle ground? Is there the best of both worlds? And is there a way to set aside money for the future that a lot of young people say we don't even know about? So why should we bother about something that is so far off that we don't even know if the world will exist? Is there a middle ground, Vishal?
So I think at every extreme, two things can happen, right? So let's take a situation where someone says, you know, I may not live tomorrow, and therefore let me live it up. In contrast, you could have a situation where someone's planning or thinking that he'll live to 80 and he lives to 100. So there are extremes on both sides. And I think whenever you're thinking about the future, it's important to be able to find the middle ground, saying that, okay, what's the highest probability event that's going to happen? Rather than working with the extreme probabilities. What's the chances that someone who's 25 is not going to be in the world tomorrow? It's a very low probability.
Sure.
What's the chances that someone's going to live to 100? Again, it's not a very high probability. Yeah. So what you need to find is you need to find balance everywhere, because ultimately either you know, whatever you plan for, you'd either have too little money or you'd have too much money.
And you won't know what to do with it.
And you won't know what to do with it. And maybe your children will just have anyways their own so much money that they will also think that it's not going to really change my life.
Okay, so is there a way for young people to do both? So I have always exhorted people because I started too late. And I think there's a tendency as well there, Vishal, because I know now that I should have started at 22, but I didn't start till I was 29. And so I want other people to start when they're 23 or 22 so that they can learn from my mistake. But that's how every generation deals with the next generation.
True.
It's not necessarily a pragmatic approach. So is there a workable solution here?
Again, there's actual financial math here.
Yes.
So what you need to do is just ask yourself, saying that, okay, so let's say I need to, you know, collect a certain amount of money, and it's going to take me 10 years to get there. Let's say it's 2,000 rupees. I get a 12% return every year. I'm going to get 10 years to get to a certain number. Now, if I'm able to get to that same number by increasing my savings from 2,000 to say 5,000 and therefore get there in 6 years instead of 10 years. Now this math becomes digestible because you're now saying that I have 4 years of my savings shaved off. And what's my trade-off? That 3,000 rupees which I would have spent on something today which probably may not have that same value. And therefore, the way to typically deal with one kind of math is to introduce another kind of math, because it's when the logic works with the logic. And that's why I keep saying that, you've got to find the balance between putting away some money of yours in some investment tool. SIPs work beautifully just because they discipline you to do that, especially at the start of the month, before you get to spend anything else, let that go off. And then you spend the rest of the money doing your own math in your head.
Yeah, on that note, Vishal, thank you so much for joining in and for speaking to me. I hope that this conversation helped you either understand how people younger than you think of money, or if you are in that age group, think of how you might want to balance the two. And trust me, no judgment. It's your money. You do what you want with it. On that note, thanks so much for watching. This is NDTV Profit.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
They say fortune favors the prepared. The more prepared you are using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you then.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for, no change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they're expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single-digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place. And
as we embrace an era of AI, as we look at tech transformation, the digital transformation of businesses is absolutely clear. It's absolutely critical going forward. Nigel Vaz with us, the CEO of Publicis Sapient, which does a lot of this and is a global leader. Thank you very much, Nigel, for being with us. How do you use AI to drive digital business transformation?
Very simply, AI today is going to be embedded in every single aspect of transformation, because I feel like artificial intelligence is essentially us going from human action-driven approaches to businesses moving any process forward to now more and more agentic architecture. So the simple way to think about it is you have your digital workforce and your physical workforce working together, or as we like to think about it, is companion AI. So think about Iron Man and Suit. Right. When you start to think about industries like, for example, hotels. When you go to a hotel, you and I travel a lot. We stay in hotel rooms all over the place. How often is it that you have to spend 10 minutes at a check-in desk explaining what kind of room you like?
Right.
Because they don't know. No. You want to be close to the eye. And even if you've got preferences there, often the logic that sits behind the decisioning to make that on a dynamic basis on the time when you get there, depending on who's checked out, takes human intervention. Right. This is an example of something simple that AI could do very simply. And this is a simple example. We're working in fields like radiology and oncology, where you start to see things like radiologists who've had years and years of experience now being assisted by models, which can accurately start to assist them, and in some cases even make the call on whether or not to refer a patient, for example, for biopsy.
But that's absolutely critical. We've seen that in India as well, increasingly the diagnosis of patients using AI. Essentially a second set of eyes, in a sense.
I mean, if you think about medical science, right, it's all pattern recognition. And AI has got incredible pattern recognition because you've now got all of the patterns available at your fingertips. When you start to think about areas like financial services, we've always been using AI. We should be very clear. We've been using AI for years. We've had predictive AI. The big shift now is, rather than looking at data and trying to predict outcomes, you've reached a stage where AI can now create, which is, I think, what's really exciting about this new wave of AI where you have autonomous agents that can actually go on your behalf and actually execute shopping. Or they might be able to make a decision on a credit mortgage application. And all of these things in conjunction with humans, but in many instances doing things that humans don't want to do. We recently finished a very large piece of work for a very big bank managing millions and millions of dollars, or billions of dollars, I should say, in wealth. And this is essentially creating an architecture around AI, helping their teams start to basically go through the entire process. Now allowing the human to focus on the relationship with the customer, as opposed to consuming a lot of research to try and produce insights that might benefit them.
the obvious question which everybody asks is job losses in AI. I know the standard answer to that is that people will reskill. But I think in economies around the world, in South Asia and in India, where I'm from, there is a sense that we're a labor-based economy at a certain level. There are traditional forms of employment as well. AI is all very well, but then people might lose jobs and we may not have the skills to replace them. So how does one look at this conundrum?
Well, I think I'll start by answering specifically with our relationship and my perspective in India.
Yeah.
I feel like India has done an incredible job in terms of building the India stack. You know, you start with essentially a country that's built a public-private partnership around payments with UPI, national identity, which has brought so many people into the fold of being able to run enterprises in the formal economy. I think now AI is only going to accelerate this because essentially when you think about job loss, you have to look at the fact that there are going to be challenges in industries where people need to be reskilled. But I also feel like the opportunities that AI is going to create. I mean, when you think about an economy like India, the amount of consumption that India is going to require in the context of energy, in the context of healthcare, in the context of financial services, every one of these things today is not going to be possible in the traditional context. I wrote a book on digital business transformation, and that's the work Sapient, our company, practices. And what we've observed over years of doing this is right now we're at the stage where you can think about the early advent of the internet. You know, we built some of the first online banks back then, some of the first online retail businesses. And the conversation today in AI is like that. It's like, well, if the browsers are here, what's going to happen with travel agents?
AI is the new internet, in a sense.
Not really. I feel like AI is going to take us significantly further. I feel like the internet reimagined a lot of jobs in the context of using a different technology to do it. I think AI is going to create so many more jobs because I think we're just barely scratching the surface of things like personalized medicine, things like education, where now you have the ability to tutor a kid individually, right? I mean, all of those things are available to a very small segment of the population now. So our view on this is industries, for example, like my own industry, the tech industry, I think has to take a long, hard look at itself and say, look, you know, where we've built in markets like India, companies have built large workforces doing lower skilled IT jobs on the basis of cost arbitrage. We've got to start to really think about how will these jobs move to more value creation. But I think the opportunity is going to be pretty significant because I feel like over the next 5 to 10 years, you're going to require a significantly larger number of tech literate entrepreneurial workers in an economy which is even more knowledge based than today.
I'm just trying to understand, in the past, software was a service, and now you've got services
as a software.
So just for a larger audience, explain the shift that's taken place.
You know, a few years ago, I think Mark Andreessen articulated this software is eating the world, right? And this concept was that everything that could be done by a piece of software will start to get coded into software. I think what you're now seeing with services as software is the transition of the fact that software is now able to start to create opportunities in a space like the services space where you are exponentially able to produce outcomes that you just weren't able to do. So you have large sectors of the services industry, which historically were simply providing people in the context of creating software. Now what you have is a lot of companies like ours building platforms and AI platforms that are creating software from those platforms that have been created. So effectively you've gone from just companies taking products, which are software products, and deploying them, to companies basically saying we can now start to create that software on these platforms that will continue to evolve on an incremental basis, on a real-time basis, depending on what you're trying to accomplish, which is a really significant shift.
Sure. There isn't necessarily a one-size-fits-all model for AI in many cases. The regional sensitivities, the language and cultural differences between, let's say, a user in New York and a user in Chennai are very different.
Sure.
How do you account for that in software which you are looking at, or at AI which you are looking at?
Well, very simply, you have to realize whenever people talk to me about AI strategy, I first start with what is your data strategy? AI is fundamentally based on data, and if you have bad data, you're going to have bad AI.
Right.
So another way to think about this is the AI models that are fueling somebody in Chennai have to be based on data that is relevant to that user. And AI fueling somebody in New York has to be relevant on data fueling somebody there. And when we look at it from an enterprise perspective, a lot of the work we're doing is essentially building AI platforms which accelerates our clients' journeys and their customers' journeys by leveraging their data to serve their customers, because ultimately that's where you create value. So in many global organizations that we work with who have offices all around the world and customers all around the world, the data that's being used, say for example, to provide offers in a restaurant in India for a global quick service restaurant brand and in Chicago are going to be uniquely tailored on the basis of the data of the audience that is aimed at. Now, if you do generic AI, if you will, right, where you ask ChatGPT a question and I ask ChatGPT a question, the answers will vary because it's obviously trained on the data of the internet, right? But most organizations that are providing AI services to their customers are now going to leverage their own data and leverage their customers' data to ensure that the relevance and the contextual nature of what you're asking is factored in. So, as an example, today, we don't need to. If you are somebody that is banking with a particular bank and you are actually in a car dealership, because we know contextually where you are and because we know you've applied for a car loan, we can say, hey, we can see that you're interested in getting a car at this point in time. You're pre-approved for this loan already. That's essentially an automated agent making a decision on the basis of contextual information for that customer. So you start to get super relevant as opposed to historically what we used to have to do is guess at what you were trying to do.
Thank you so much for sharing those insights. Absolutely fascinating. It's here to stay. What form AI takes in the future, I think, is something that we all need to debate going forward. Wonderful speaking.
Very nice.
Thank you very much.
Thank you.
Well, the ref cools off on day 4, but this is literally cooling off because it snowed today in Davos. It's a very cold evening, but our guest has kindly consented to talk in this wonderful outdoors. Hani Kablavi, Head of International at BNY with us. Hani, great having you. Thanks for joining in.
Thank you for inviting me, Niraj.
The pleasure is entirely ours because we'd love to understand the worldview from your prism, considering that when the WEF started off, it was about Donald Trump's presidency and the new administration, uncertainty maybe, or certainty around business, if you will, and then AI, energy transition, what have you. Lot of key talking points. What has been the key takeaway for you out of the 4 days?
Yeah, I think it is the two topics, right? There's the topic of growth, and look, sentiment here at Davos was broadly speaking quite positive, quite optimistic. The markets are showing that. All governments, right? So if 2024 was a year of elections, 2025 is going to be the year when all of those elected, and a lot of them, by the way, a lot of the voters decided to change government. So those governments are getting stuck in, getting bedded down with their policies, and the policies seem to be very pro-growth. And you're right, the US administration seems to be the most growth-minded, and a lot of other governments are either on a pathway towards growth anyway. We can talk about the UK and again, a new administration there, certainly selling Britain and on a growth trajectory in terms of what they'd like to achieve, as well as other places around the world. So growth is topic number 1, and AI is probably topic number 2.
Yeah. So let's talk about growth. US exceptionalism for 2 years on a trot before this. Usually, it's not very usual to see a country which has grown so well for 2 years, been so exceptional, continuing to do that, but it seems to be a real possibility this time around.
It is a possibility. There's a few strings that can be pulled to try and continue to fuel growth in the US. The government talks about deregulation, or at least a lower pace of new regulation. We certainly don't expect this time next year to be talking about having seen a lot more regulations come into place, and a deregulatory environment is generally consistent with a growth environment. Disclosures are a good thing, but sometimes there's requirements for too much disclosure. And so if you can cut back on some of these things, those drive growth. Approvals for mergers and acquisitions, there's more deals being done already, by the way, but there's more deals that are in the pipeline. And if approvals would be, if the sentiment is that approvals would be forthcoming, then you can see that more deals would be done, and that would be growth accretive as well. So there's a few things that I think are telling in terms of where the new administration is thinking in the U.S. and the growth mindedness that comes with that.
Okay, so if the belief was that the dollar at the margin would move from US, which it has stayed in for the last couple of years, to the emerging markets. If US growth were to be a bit off, if the interest rates were to come down a little bit, and if the yields were to behave as well, I think the reverse is happening right now. So I'm just trying to think of what happens to flows in a scenario like this for the year 2025, as much as you can see it right now.
Well, look, so we'll talk about interest rates very quickly. We think there will be cuts this coming year.
Okay.
Our analysts are expecting 1 to 2. So on a probability adjusted basis, we're talking about 40 basis points potentially. However, that's our base case.
Right.
And a base case is only something that you attribute anywhere between 50 and 70% to. So maybe there's some sort of a likelihood, a percentage, a probability that we might attach to interest rates staying where they are, or even potentially going up, to your point. And that's all going to be data driven. The good news is, we have a credible team at the Federal Reserve that is going to be data-driven in putting out a monetary policy that will be thoughtful about where the numbers are coming in.
Yeah, that's true. Okay, fair call. So data-driven, if indeed tariffs come in and then things change, inflationary, we'll get to there when we get there. Okay, that's...
And the inflationary drivers, to your point, right? You've got your supply chain, potential supply chain shocks, and you've got your which are tariff induced, and you've got your labor shocks, if you will. Those are going to be primarily immigration policy induced. So we watch those things and we watch their impact on inflation. The good news, if you are looking for silver linings perhaps in the language that's coming out, I mean, inauguration happened on Monday, and tariffs was not the first thing on the agenda. There was a bunch of other executive orders, but tariffs was not one of them.
Yeah, does that make that more uncertain is the question. But yeah, but I buy your point completely.
It makes it ripe for deal making.
Yeah, most certainly. Negotiating tool, great negotiating tool. Okay. The other aspect of my previous question was, therefore, what happens to emerging markets at large? Of course, our viewers will be very keen to know about how do you, from where you are sitting, think about India?
Yeah, sure. And look, I think there are some markets that have been benefiting from flows. By the way, BNY sits on $52 trillion worth of assets under custody and administration. We have our big data models that actually tell us on a daily basis where those flows are going from and going to. We correlate exchange rates to them as well. And so we see real-time flows happening and can attribute news cycles to different things that we see from a flow perspective. Look, in terms of flows, there are some emerging markets that have been doing well, and we can expect will continue to do well, primarily driven by a good investment climate within those countries, right? Indonesia, India, Malaysia, Vietnam. You've had a China plus one supply chain environment that has benefited some of those countries. And then you've had a China alternative that has also benefited some of those countries. India is a beneficiary for sure, but India is a beneficiary because there is stability, political stability. There is there's really reasonable growth, right? I know we just saw the third quarter numbers in India come off a little bit, but they came off of expectations of 6.5 down to 5.5, I think. I mean, many countries around the world, much smaller than India, would be very happy with 5.5% growth rates.
Great. Well, we will look forward to seeing you maybe in India sometime, Hani. Never know when that happens, but if it happens, please do come and visit us. But thank you so much for your wisdom and intellect here today and speaking to us. And have a great evening.
Niraj, thank you very much for having me.
The pleasure is entirely ours. And viewers, thanks for tuning in.
One of the most exciting sectors in India, in our economy, is civil aviation. Think about it. Just a couple of years ago, Indian consumers had very little choices, but now with the emergence of several large airlines, with a very proactive government policy, we are among the largest in the world. We've got a very special guest with us, Ram Mohan Naidu, the Civil Aviation Minister. Thanks very much for being with us.
Thank you so much.
Let's reflect a little on that first. Do you believe that India can be a major international hub going forward in the way that, let us say, Dubai is?
Absolutely. Just to start with, India is the third largest domestic civil aviation market today, and totally we believe that it can be number one in the coming days. The progress that we are seeing with 10% to 15% growth rate in civil aviation, and one of the priority areas for us to create the hub. I feel not just the push is coming from the own government itself and from India, but geographically, strategically, if you look at the positioning of India, there is a natural push there of India emerging as a hub. So everything is playing along, and I totally believe that we are going to emerge as a hub in the coming days.
That also depends on the government and the private sector working together. For example, we've got record aircraft orders from Indigo and Air India. Nobody would have imagined, India buying so many aircraft. That has to be matched by infrastructure on the ground, whether it's airports, more runways, and a lot of that. Do you believe that might be your biggest challenge, matching infrastructure with the demand and the orders?
In fact, when we talk about infrastructure, we have already started building up the infrastructure. In the last 10 years itself, from 74 airports, we have grown up to 159 airports. So the airlines have to catch up now. The demand is there, the infrastructure is there, and even the existing airports which are there, we have expanded the capacity because we believe that in the coming days, the traffic is going to grow more and more. And like you said, if you look at the global orders also, India has the most orders for aircraft fleet now. So what we are trying to do as the government is encourage these manufacturers to give us the orders at the earliest, because we feel the demand is already there. And what we need is the more aircrafts coming in to cater for the demand, to provide more connectivity and to provide more affordable rates also.
Are you satisfied at the pace at which aviation professionals are being trained, whether it's pilots or cabin crew? Because that is an ecosystem which has to grow at the same pace at which the sector is growing.
Absolutely. Right now, we have a good capacity of training happening, let it be the pilots or the aircraft maintenance engineers or whoever is involved in the aviation sector. But like I said, we have more than 2,000 orders in place today. And imagine when these aircrafts come, the number of workforce that you would need in aviation itself. So we are trying to expand the skilling and training centers that we have. We are talking with Airbus, we are talking with Boeing, we are letting them open more simulator facilities, and we are spreading our airport network which we have. There are these smaller airports where the activity is little less. So we are trying to cater them for flight training organizations, so we can have more pilot training organizations. So we have that vision in mind that we would need more workforce into the aviation sector, and there is a conscious push from the government itself. And the opportunity here is not just the 2,000 aircrafts which are going to come into the Indian airspace. I am looking at capturing the workforce that's going to be globally developing. So we want our Indian workforce to go globally to different other airlines and try to take an advantage of the opportunities that are available there, and people from other countries also. Let them come to India, let them get trained, because aviation I see globally is also very emerging, and especially in the Asia Pacific region, there's a lot of potential for growth there. So it is the right time for us to capture on the skilling and training workspace, and definitely we are moving in that direction.
We have new laws also, the Bharatiya Valuation Adhinayam. It modernizes the sector. Why was it necessary?
It was necessary because it was a pre-independence act that was there before, and a lot of the amendments that have been added to the original act was kind of made the whole act in a very disorganized manner. ICAO, which is the International Civil Aviation Organization, has recommended many times that we need a very comprehensive with the latest legislative procedures being involved in the act, and that is what we have done. And we have brought in a touch of Indianness in it by naming it the Bharatiya Vayan Adiniyam. So the ICAO has been a major contributor in bringing this new law. And one important aspect that we have brought in this new law is that we are trying to recognize India as a state of design and maintenance and manufacture. This was not there earlier.
Let's talk about MROs, because you're mentioning that. How is that critical? It's not just about flying the planes, it's also about maintaining them. How can this be an industrial hub for airlines across the region?
I know this MRO business, the maintenance, it has been hiding under the carpet for a long time.
Yes.
And whenever we talk about civil aviation, it is the planes and the travel, the airports which get a lot of limelight. But what we are missing out is a great opportunity on having the MRO sector, which is a revenue generating sector, which is going to earn us a lot of money and also give us a lot of jobs. So the government, especially in the last 10 years, has put a lot of focus in growing the MRO business. In fact, if I can give you a number, we are only able to do 20% of the whole MRO business that a plane goes through. So imagine the kind of capacity we have, the potential we have to grow forward. In that sector, the government has also taken some proactive steps, and our vision is to grow from 2 billion, which is MRO business, $2 billion US business right now in the country. In 6 years, we want to double it and grow up to $4 billion, and we are on the way. The growth rate that we are seeing in MRO business is definitely very encouraging for us.
Thank you, Minister, very much for speaking to us. So, his most expansive interview, I dare suggest, on civil aviation so far. Ram Mohan Naidu speaking about the potential of the Indian aviation industry, whether it is the creation of India or India becoming a hub, to helicopter operations, to flight safety, to recent threats which have taken place, to ultimately passenger safety and passenger convenience.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
They say fortune favors the prepared. The more prepared you are, using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline, as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Well, the union budget is right around the corner. It's a very interesting time leading up to the budget as well for the policymakers as well as, us as shareholders, because we see a lot of movement in the Nifty as well as speculations are rife with what could be some of the measures that are announced in this particular budget as well as has been in each one going into the same. We look at some of the key moves that have seen in the Nifty before as well as after the budget and get you some of the biggest measures that were announced in these budgets and what could have led to the strong Nifty reactions. Let's first look at 2024 because we had two budgets announced in this particular year. One was post the elections as well, and we did see a 1.5% move in just a week after, and that momentum was continued in the month as well. Leading into this budget, there were a lot of speculation, so we saw a downward reaction of the Nifty in the past week, and we did see some of the measures such as the standard deduction being increased to 75,000 for salaried employees from 50,000 earlier, as well as the new tax regime now in having tax-free status for up to 3 lakh rupees per annum for the investors as well. Apart from that, we saw custom duty reductions on mobile phones, gold as well as chargers as well. And these were some of the key moves in this particular budget. Leading up to the election, we had, the 2024 budget in February as well. Let's see some of the reactions as you can see in this particular time frame as well. One of the key moves was increasing the budget for capital expenditures to 11 lakh crores, the first and a very huge budget as well compared to the last decade. And we did see one of the positive reactions in the week and the month after as well. For 2023, it was a very budget going into this particular budget. Speculations were rife. We did see a negative 2% reaction just in the week before leading up to the budget as well. While the momentum wasn't very strong, and in this particular budget, we did see the new tax regime increasing the rebate to 7 lakhs. But apart from that, there was some continuations of policy measures, but nothing big to report as for. For 2022, it was a very interesting budget because we did see a strong reaction going into the budget just a week before by roughly about 2.5% on the positive side. But in the next week, as well as the month after, we saw a sharp reaction on negative 5% of the Nifty reactions. Some of the key measures were like they had involved rupees 2 lakh crores at registration.
Why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? What has been the one USP that you think makes you stand apart?
Just you get your fundamentals correct. And it's the sum total of these fundamentals which is our USP. And let me walk you through some of them. So making sure that we continue to be India's most on-time airline as we are for the second year in a row.
What are the lessons that you've learned from the mistakes that you saw being made?
Some of the airlines that have come before us have been extremely undercapitalized. People wanted to retain control and therefore, ran out of cash.
On today's episode of The Disruptors, we are talking about the newest and youngest airline in India. The Indian aviation scenario is one fraught with a lot of risks. Possibly the number of airlines that have started and then shut could be record-breaking as far as India is concerned, which is why every new entrant is looked at with some skepticism. How long will they last? Well, for the next company that we're talking about and the next founder we're talking to, this has been a challenge and a question perhaps from day one. I'm speaking today with Vinay Dubey, founder and CEO of Akasa Air. Vinay, thank you so much for joining us here on The Disruptors. Absolute pleasure to have you on.
Thank you, Tamanna. It's a pleasure to be here.
So in terms of what the outline of the show is, and we're calling it The Disruptors, why do you think Akasa Air and your own role as a CEO fits the bill? Have you been a disruptor in the space? Do you attempt to be a disruptor in the space?
Yeah, to be honest, for us, no, we don't use that word and associate that with ourselves, although we've heard that term used for us. because as you look at India today, you don't have a lot of airline choices. And so when people see an airline come into the market, we're welcomed with open arms across the board. And so by that definition, we would classify as a disruptor. But when we look at ourselves as an airline that is being created to fulfill the needs of a country, not necessarily disrupt anything, but really serve the country by being one of the foundations of transportation that will be the bedrock of India's economic engine. Because without strong transportation links, it's very hard for commerce in a country to progress. And by the way, I'm not just talking about airline, but it's road, it's rail, it's sea, and certainly air. And so we look at ourselves as just wanting to serve the nation really, and fill a need for the country.
No, I mean, that's fantastic. Of course, that's the big vision.
Right.
But I mean, from the point of view, look at the Indian aviation landscape right now. You have two major players who have a lion's share of the market. Some would say this is quite a duopoly. And then you have smaller players who are trying to make their way. Right. Of course, Akasa is one of them. What has been the one USP that you think makes you stand apart? Because you're not new to the business. You're a veteran.
Right.
You've been with some of the biggest brands in the business, and then you come with this new brand. So what sets it apart?
Yeah, Tamanna, unfortunately, in aviation, sometimes there's no single sort of silver bullet, or there's no one sort of smoking gun equivalent. Sometimes you need to be get your fundamentals correct. And that's what we're looking to do. And it's the sum total of these fundamentals, which is our USP. And let me walk you through some of them. So service excellence, making sure that we continue to be India's most on-time airline, as we are for the second year in a row. Making sure that our service is both efficient, but also kind. And I use that word on purpose, making sure that the food we serve is something that people actually like and appreciate and care for the taste. Making sure that we remain a well-capitalized airline, making sure that we're an employee-centric company so that our happy employees can then provide this kind service. And so it's focusing just on some of those basics collectively, and doing those in a boringly consistent manner is what our USP is.
Yeah. So in your very long journey in Indian aviation, I want to ask you personally, Vinay, what are the lessons that you learned that you carried forward to Akasa? And what were the lessons where you learned that this is what I should not do?
Yeah, I think, again, it all goes back to the fundamentals, Tamanna. There are a few things that I think you both should and shouldn't do, depending on sort of how you phrase your sentence. But first and foremost, this is a business that requires deep professional expertise. So it was incumbent on us to put together an empowered management team of aviation professionals and empower them to actually do what professionals have been trained to do. That was something that we had to have done. Some of the things both that we had to do and some of the things that airlines have got wrong is they've been either undercapitalized or not sufficiently capitalized, which is something that we saw that would never happen to us, and so Akasa remains today a well-capitalized airline. It was very important for us to have a highly competitive cost structure. It was very important for us to build a platform of world-class safety. That's just non-negotiable. And for us, it was deeply personal to have an employee-centric company. Just be good to our employees, because if we want them to be kind, if we want them to focus on our consumers, then we have to provide a sort of a hassle-free, employee-centric environment for them to work on. So these are some of the fundamentals that we have learned of either what you should or shouldn't do, like I said, depending on how you phrase it, that we've applied to Akasa.
No, so these are the should-do bits.
Yeah.
What are the lessons that you've learned from the mistakes that you saw being made with the airlines that have come before you?
Yeah, I think some of these, some of the airlines that have come before us have been extremely undercapitalized.
They just run out of cash.
That's right. That people wanted to retain control, didn't want to dilute their stake, and therefore, ran out of cash because they didn't want to restructure their balance sheet. or their cost structure was uncompetitive. So like I said, these are both what you should do, but what you should do is sort of lessons learned from others who have not done it, or lessons learned from people that have done it and are thriving.
And I think that's beginning to happen more and more across the industry as well. That realization has come in that you need professionals to come and run to survive in an aviation business.
Correct.
Having said that, I mean, it's not been long, barely I think 2.5 years for Akasa off the ground, but a market share of sub 5%. What is the driving force? Is the driving force to take on the number 1 player, the number 2 player, or just inch up slow and steady? I'm just wondering that how do you think every day about the future of your business, of your airline?
Yeah, I can tell you it's not the former. So we don't really think about our competitors. I think this is a complex business where if you're focused on your airline, your offering to consumers, the way you treat your employees, that's plenty, because we have both the sort of the luxury and the benefit and the responsibility of operating in India, which means that there is this insatiable growth in demand that's ahead of us, right? So we're operating in a country where you don't have to worry about where the next passenger is coming from. The next passenger is going to be there and going to be there for the next 30 to 50 years, and that's linked to India's economic engine. What we have to focus on is how do we win that consumer every single day. We have to focus on making sure we remain India's most on-time airline. We have to focus on ensuring that we offer sort of a kind and considerate and empathetic consumer experience. We have to make sure that we have the lowest attrition rate in the industry by focusing on our employees and creating an employee-centric company. And the thought is, that's what drives us, and that's what we're focused on. We're not really focused on on what the others are doing, except if there's we come across a bright idea that we think we ought to copy, in which case we copy shamelessly.
Have you come across any such idea?
I think
in
plenty.
The last 2 years?
I think plenty. The foundation of our airline is built on great ideas from our competitors here in India and other parts of the world.
Name one.
The focus on the cost structure, for example, the focus on on-time performance and reliability, as another. The fact that you need to have a long and firm order book to ensure that you've got growth and you can scale. So plenty. I think we respect our competition, and there's no shame in really copying the good things that they've done.
Two things I find interesting in what you've said so far, Vinay. One is to unabashedly say that, yes, if something is working and my competitor is doing it, I have no qualms in picking it up. And the second is the use of the word kind in a for-profit commercial organization. That's not usually a word that you see in the vision document. You see success, you see, excellence, etc., etc. You don't usually see kind. What do you mean by kind at a time when the average Indian flyer is perhaps not really getting any focus on customer service?
Yeah, so I'll talk about our airline. I cannot talk about the experience that the Indian flyer has on other airlines. And by the way, we're trying to make sure we do this 100% of the time, but it's not that we get it right 100% of the time at all. But the word kindness for us is extremely important. I think people travel for a variety of reasons that are all very personal for them and very important for them. And we want to make sure that through their journey and the time that they spent with Akasa, it is hassle-free. And by being kind, it's an easy way to make sure that they get to focus on the purpose of their journey versus the journey itself. And I'll tell you, the word kindness needs to soak into everything that we as human beings do in every sort of walk of life. And so we tell our people that we hope you can be both efficient and kind, but on that rare occasion that you have to choose between efficiently and kindness, please choose kindness, because we want people, to walk away with that sort of hassle-free in the sense of comfort, where they can focus on the purpose of their journey versus the journey itself. So it's very important for us.
You talked about kindness in the context of employees as well, and this is something that I wanted your view on, because of late, something that has dominated the headlines and industry-wise is unrest, unhappiness from pilots, from crew, and in some airlines there might be different contexts, of course, cultural clashes, etc. But more and more, when we go out and our reporters go out and speak to people in the aviation industry, people who have worked in the aviation industry, the overwhelming sense is that they feel they're being treated badly and they don't have a way out. I'm talking about employees right now. I'll come to passengers in just a bit. How important does that become? Because I know a couple of years ago, you yourself were in the middle of this whole fight about keeping people on who wanted to leave, notice period, etc. All of that had blown up. How do you manage something like that?
Yeah, Tamanna, I will say in context, we have one of the lowest attrition rates in the industry, first and foremost, which we're extremely proud of. We're also proud that we're running this airline not based on 1 or 2 or 5 or 20 leaders, but the only way we run our airline is because we've got about 4,500 dedicated and committed employees, and the least we can do is is create an environment that that is meaningful, create an environment where their careers progress. So it's very important for us, and it's very important for us because that's the only way we can be successful. And so how do we go about it? Let's talk right off the bat of compensation and benefits. You need to make sure that you are right up there with the industry standard compensation and benefits to make sure that that what people work for is something that they can take home, whether it's money for their future, money for their parents' medical bills, their children's education. So you want to make sure that the compensation and benefits is something that that is focused on. But beyond that, it's transparency, it's encouragement, it's progress in their careers. So we want to make sure we promote people from within. We've got this amazing pool of talent across, every level within the organization.
Having said that, and I just want to go back to this whole thing about, and I know it was a temporary situation you faced when the matter reached court on notice period, between employees and the airline. How do you think it resolved, and what was the lesson learned from that in hindsight? Because there's also, the context of course was pandemic, shortage of staff, etc., and suddenly airlines coming back and wanting to scale up. But what was the big one takeaway from there for you?
Tamanna, this was maybe a year and a half ago, and it was a 60-day period. Honestly, I don't have a takeaway. The takeaway was, has been before that, during that, after that, was to continue to build an employee-centric company. I remember our first discussion on board the aircraft, where you got to, you were exposed and you help us, tell the world that we've got gender-neutral uniforms, that our flight attendants have sneakers that are comfortable, no heels, that our uniform is made out of recycled marine waste. And so, before, during, after any period of time, we've always had this view where we want to be good to our employees. We also want to be just good, corporate citizens, focus on the environment, focus on sustainability, do the right thing. And by the way, you can be profitable and highly profitable without having to compromise in some of those values of just being good people. And so we continue to focus on that.
So what is on the anvil? I mean, we're in an interesting phase when I think business class is back. There was a time when every carrier was a low-cost carrier. There was not too much space for premium customers. Now we're moving back in that direction. Market leader has introduced that kind of a product. Is that something that you want to look at some point? Do you think we're now ready as a market for a business class, a first class on domestic flights as well?
Yeah, so to be honest, I think, we've always been ready for multiple classes of service. I mean, as you know, if you were to look down the streets of Mumbai, you'll find a Maruti and you'll find a Mercedes. So I think as a country, no matter what consumer product you're looking at, I think there is, a need that is created in multiple segments of the market. For us, though, business class is not in our near term, nor do I think most of the consumers necessarily need that. Our view is our economy, consumer experience is on par with any other airline in the world, by the way, not just the best airline in India. I flew back this weekend on an airline, which I will not name, but has historically been a, what's labeled a 5-star, 7-star, whatever you want to call it, airline. And
domestic or international?
International.
Okay.
International, one of the, known for their service. And I will tell you that, and I know I'm slightly biased, Tamanna, but I'm trying not to be, but I would rather fly our airline than their airline, honestly.
Why is that? What's the one thing that you thought was
because
better?
I think our people that we have here on our airline are nicer, they're kinder, they're more efficient. I think the food that we serve is better and it's nicer for my palate. I think our aircraft are newer. I think our seats are more comfortable. So almost on any dimension, I would prefer to travel our airline. So sometimes we're given a bad rap by being pigeonholed into a low-cost carrier or something else. But I would say our experience on Akasa is as good as any and the finest in the world.
So, we did an in-depth piece recently where we spoke to a lot of flyers, a lot of analysts, and the general experience of Indian flyers is deteriorating. As more and more Indians are flying more flights, the conditions are getting more cramped, the experience from the airport into the flight, moving out is coming down, and the focus on the flyer is also coming down because it's no longer a luxury, so to speak. More and more people are flying and can afford to fly. Do you think that is one big mistake which is being made in the industry?
So again, I cannot talk about what others are doing.
You're surely seeing what your competitors are doing.
But I'm seeing what they're doing, but I focused on what we're doing. You can't walk around with blinders and by the way, I do travel on our competitors from time to time. It's a necessity for places that we don't serve, and so I get to sample the quality of their service as well. But I don't comment on it. I focus and comment on Akasa's service, and I'll tell you everything that we're doing, Tamanna, is to create service excellence on Akasa. So I'll tell you, our focus is not diminishing. Our focus is very much on the consumer, whether it's the first-time flyer or the frequent flyer. Our focus is on the consumer, making sure we provide as best as we can a hyper-personalized service. And so there's a lot of emphasis at Akasa on data and analytics. So we understand our consumer, we understand how often they fly, where they fly at a name level, right? And then over time be able to offer them a very personalized experience based on their travel habits. And so everything we do at Akasa is to make sure that we have the highest standards of service, across the world, actually.
So what next? What is, going into 2025? What is the big goal for the airline, for yourself personally?
I'm sorry, I'm being a bit of a bore here, but to be honest, there is no sort of big flashy thing that we're doing. It is continue to be boringly focused on the fundamentals, on service excellence, on cost leadership, and employee centricity, world-class service. These are the things that we are focused on, day in and day out. I think you will see us expand internationally. We've already set records here as being the only airline in India that is launched international service in less than 5 years. We did it in, I think, 18-20 months. So I think you'll see a lot of international expansion. You see domestic expansion. We carried our 5,000th pet, and so we'll continue to carry happy pets.
Tell me why you wanted to do that, and is there such a huge demand for it to have pets on board?
5,000 is not a huge number.
Yeah.
So clearly there's not this, and by the way, we've carried over 13 million consumers 13 million, we hope, happy customers. So 5,000 versus 13 million gives you the sense that no, it's not something that is massive. But again, there's some things that don't take much. Like it doesn't take much to smile, doesn't take much to be kind. It doesn't take that much to be able to offer a service for those that love their pets. And so we're doing it.
Yeah.
And we're doing it happily, and hopefully we're doing it to fulfill the needs of some people. But, in terms of what's coming in 2025, I'd say hopefully we will continue to build our brand. We'll continue to grow. We grew at triple digits last year. This year, between the fiscal year 24-25 and 25-26, obviously our base is larger, so we can't grow at triple digits, but certainly, high double digits is something that we will grow at. And so growth, reliability, service excellence, that's, try and focus on the fundamentals.
So what does Vinay Dubey do on their time off? I'm wondering what an aviation or an airline CEO does on their time off. Are you as, straight and focused?
Well, I've got twins, 17-year-old twins with me at home still. And we will have them at home with us for the next 8 to 10 months. And then I think they'll head off to college. They want to go to the US to study. And so my wife and I will be empty nesters. So in my spare time, I try and spend as much time as I can with them, although they're teenagers, which means they don't necessarily want to spend time with dad. I try and play golf once a week, which is something that gets me focused on anything but work. So it's between family and once a week golf is how I while away my spare time.
So you're not a 70-hour-a-week kind of a CEO?
I hope not 70 hours. I think I have a full week. I think I work hard. But no, I want to be there with my kids.
Do you think youngsters in this country should work 70 hours? I mean, that's everyone's favorite talking point. So keen to know your view.
Well, I don't want youngsters, and I don't think I can, I can tell people to do what I'm not doing. And so if I'm not working 70 hours, if I'm working, 50, 60 hours, then that's the only expectation or advice I can give people. I don't think there are many people on their deathbed that thought, oh, I should have spent more time in the office. More people in their last breaths are thinking they should spend more time with their kids or family and friends. I want people to have that perspective. But to be honest, I think your careers can flourish. I think for young people, their careers can flourish, but yet have a work-life balance. So I'm on that side of the debate that is raging. But that doesn't mean 30 or 40 hours either. I think youngsters need to work hard. There's a time in your life where you should work hard, but let's have a certain perspective about us as well.
Fantastic. Thank you so much, Vinay. It's been a pleasure speaking with you. Good luck to everything coming ahead for you and, of course, your company.
Thank you, Tamanna. Appreciate it.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs, and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
They say fortune favors the prepared. The more prepared you are, using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you then.
I present the budget for a historic
the mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Hey everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter?
NDTV Profit is on the ground at the Mahakumbh area, and we're going to tell you all about the economics of this Mahakumbh, as well as how high-tech it is and how arrangements have been made by the UP government to ensure the safety and security of pilgrims who are coming from across the country and even from across the world.
These women arrived the previous night by train from Bihar. Devotion brought them to Prayagraj in Uttar Pradesh, home to the Mahakumbh Mela.
रात रुके हैं स्टेशन में, स्टेशन में रुक के नहा उहा के अभी भोजन कर रहे हैं.
Devotion makes people do extraordinary things. Tens of thousands undertake Kalpavas, a physically demanding journey of introspection and inner sanctity. Saints and sadhus flock to the ice-cold waters of the Triveni Sangam for a dip in an unforgiving winter. For many others, the Mahakumbh is also about livelihood. Like this differently abled man, Prabhudas, who has come all the way from his village near the Nepal border to sell his wares.
ये व्यापार के हिसाब से एक ही दिन ज़्यादा 5-7-6 हज़ार के व्यापार हुआ, उस दिन मेरा 1500 रुपया कमाई हुआ, संक्रांत को दिन, मंगलवार को दिन, और उस दिन से मेरा 200, 400, 500 ऐसे बचता है, अब 2,000-1,500 के बिकेगा तो में से 400, 500, 300 बचेगा। भगवान की दया और भगवान के दरबार में आए और कमा लेंगे तो अच्छी बात है। विकलांग आदमी है, 2 रुपया कमा लेंगे, अच्छी बात है। चाय 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 चाय।
Small traders from Tamil Nadu to Kashmir have set up stalls across the sprawling 4,000 hectares of the Mela grounds, selling everything from combs to toothpaste and of course the essential chai.
चाय पीने हर कोई आता है हमारे यहाँ। कुंभ मेला में हम लोग आए थे जूस का ठेला लगाने, लेकिन अंदर जगह नहीं मिली तो हम लोगों ने फिर सर्दी का मौसम में सोचा खाने पीने में लोग ज़्यादा ध्यान दे रहे हैं तो वही लगा लिया। कमाई का तो पता नहीं थी, 4 लोग हैं हो जाता है 1500, कभी 1000 भी होता है। 13-14 को हुआ था थोड़ा अच्छा, डेली का 1000 मान के चलो, 4 लोगों में 200-300 रुपये मजदूरी होता है डेली का। ज़्यादा भीड़ होता है तो ज़्यादा होता है, कम होता है तो कम भी होता है, करना पड़ता है, क्या करेंगे। वहाँ कुंभ की वजह से बहुत फ़ायदा हुआ, मतलब यहाँ इतने सारे जो लोग आए हैं देखने में थोड़ा अजीब लग रहा है, इतने सारे लोग कभी देखे नहीं हमने, और बहुत साधु संत है तो धन्य हो गए जी यहाँ आके। कमाई से मतलब नहीं, लेकिन यहाँ आके थोड़ा अच्छा लग रहा है।
For others who have maliks or owners, lavish tips from devotees goes a long way. After all, the Kumbh is about Snan and Daan, the holy dip and charity.
दिन में तो हम लोग को महीने में तनख्वाह मिलता है, ये सब पैसे ठेकेदार लोग ले जाता है।
अच्छा, तो पर अभी तो थोड़ा कमाई ज़्यादा हुआ होगा।
जो खाने के लिए दोगे वही थोड़ा बहुत मिलता है हम लोग को। आपका सेवा किया, हम लोग तो ले जाएगा स्नान करा देगा आपको बढ़िया से।
The Mahakumbh is about economics of scale, from temporary housing to tents to small vendors to food. Everything is at least 10 times the ordinary.
So I'm all set with my hot puris and sabzi for breakfast. There are of course lots and lots of people, lakhs of people in fact, who probably do not have the money to pay for food. And they come here out of devotion and they travel from very far corners. So what do these people do for food when they cannot afford even a puri bhaji on the roadside stand like I'm having right now? Well, there are many organizations who are providing free meals to the poor, and it is said that in the Mahakumbh no one ever goes hungry. So I'm going to take you to one such organization which is providing free meals at scale.
The scale gets mind-boggling at the ISKCON kitchen, where food is being prepared almost round the clock. 1.5 lakh free meals every day from 9 a.m. to 9 p.m. in a kitchen that is ingenious in its automation.
One of the mega kitchen, and like it, we get 3 mega kitchens within Prayagraj. Every kitchen is having capacity of cooking up to 3 to 4 lakh meals a day. We have automation machines for chapati, and we at the same time we are keeping these natural resources like cow dung and goat. So you see here that there are a lot of brood and cow dung. Chulas are being installed. Whether it is a ghee or vegetables, everything is in multicolor of quintals which we procure, and more than 2,000 total devotees are involved in stability between the cooking and the supply chain of the animal. So this kitchen works 24 hours. Our preparation starts somewhere 1:30 a.m. and the first need is getting dispersed at around 7:30, 8 o'clock it is ready, and 9 o'clock the distribution starts. But the last distribution is 9 p.m. in the night, which goes up to 12 o'clock and 1:30 again hours again. So the entire food supply is completely been sponsored by the Adani Group. At this scale, what we are doing, it was possible only because of this collaboration. I mean, this is a very unique scenario where a very large scale release organization with one of the most premium corporate is coming together for a social cause. and feeding and supporting the those crore at such a large scale. In India, where crore and crores of people are getting benefited, which is really.
No one wants to miss out on the massive Mahakumbh footfall. 45 crore people descending in Prayagraj over a 44-day period is a customer-facing company's delight. Even LIC has opened a center to help resolve queries and complaints. Public and private sector banks have opened makeshift centers for customers. And perhaps the most interesting stall of them all, the Reserve Bank of India, which has opened a center to raise awareness about digital frauds and to promote the e-rupee.
If you're coming to the Mahakumbh for the first time, well, ask policemen who are there everywhere. They've been brought from across the state of Uttar Pradesh. They've been posted here on duty 24/7, and they have all of the information that you require. They will be able to guide you to, if you sort of get lost and find it a little overwhelming. So, police is a great point of contact. A lot of helplines have also been started by the UP government. They have a chatbot on their website as well. They have a number, a toll-free number that you can call for information. Apart from this, there are a number of tourist information offices which you can reach out to for help. So be prepared to walk a lot in the Kumbh. So vehicles have been stopped at a specific point, and from there e-rickshaws ply up to another specific point, and from there it's all entirely on foot. So the Mahakumbh is all about walking, it's all about the snan, and as the officials say, it's also about daan. So donating to charity, donating to poor people is a big part of this particular festival. So the best way to do this is to go to the UP government website, kumbh.gov.in, and that has all of the details you require, including places where you can stay, as well as the map of the entire Mela ground. So it's a great place to go and check out and plan your trip before you actually come here.
Getting the site ready for the pilgrims was not an easy task for the UP administration. The Ganga flooded the Mela area for longer than usual in August last year. Leaving a month and a half for the administration to put up basic infrastructure and the tent city. Then began the process of laying power cables. Water supply had to be given, sewage lines had to be dug, the area had to be leveled, street lights had to be put up.
Usually the flood water recedes in the month of August, but this time the river Ganga flood receded in the month of September, almost in the last month of September. We got the land at the catchment area of the entire region in October first week. Then we built the basic infrastructure such as roads. We have built 651 kilometers of checkered plates. So you might have seen the steel seats are there. Thereafter, the 67,000 LED lights are installed in the entire Mela area through the poles and through ST lines and LT lines, through different substations were built, and 1250 kilometers of drinking water pipelines, and besides the sewerage network was there. In addition to that, irrigation departments have done lots of dredging work. Actually, the river Ganga usually takes some channels, and the land patch that is between these channels are islands and they are of no use. Then we think the Mela Pradhikaran decided that we should go for the dredging work. With the help of IIT Guwahati, we get the dredging work done, and we were quite able to channelize the river Ganga in a manner which we wanted. It's a humongous task, no doubt. Lots of machinery, lots of manpower works. but some sort of devotion and divine power also helps. I personally believe that some sort of divine power is there, and that helps us to get it done. We are expecting this year 35 to 40 crores of public coming to the Mela area in the entire Mela period. If you suppose a very minimal amount, if you take 40 crores public spend 1000 rupees here in this journey, so it's a much bigger figure in economic point of view. We don't work for the revenue generation, we just work for the betterment of the public. Our motto is that the public should come, they will take the bath very safely, and they should they should be safely evacuated to their destination.
ICCC command centers, integrated control and command centers, for redundancy and for mirroring, and they are in different areas, not all of them are here, so that even in the case of failure or say for disaster recovery, we can use those centers. We work in 3 shifts 24/7, and the number of personnel is about 200.
Police officers from all over UP have been deployed in the Mela area to maintain law and order. On January 14th, despite an unexpected crowd of 3.5 crore devotees, this management ensured no stampedes or accidents.
The crowd management is through the basically AI enabled tools. For example, we monitor the number of people taking dip at any point of time, and then in advance planning can be done. It is actually being done. At any point of time, we have an idea how many people are taking dip at the Sangam nodes, at the other ghats, and if other ghats are unutilized and there is a pressure at the Sangam or some other ghat, then we can uniformly distribute the crowd so that concentration of crowd is not there at one particular place. This is done by diverting the traffic, by activating our various barriers, by basically diverting the crowd to different ghats. But the idea of doing this, taking this decision comes through the technological intervention only, because we cannot monitor manually at every place. So the feed which we get from the different ghats and the number of head counts which we get, through that we take the decision and divert it through the different paths, whether it be the area entering the Kumbh, or distribution of crowd in different ghats, or the parking places. Forensics is basically integrated with them. So they are basically intelligent cameras. So their function is not just to see. They can report regarding certain features too. So in all, very handsome use of technology is there in managing this company. Yeah, there are many different type of drones, like maybe underwater drones or tethered drones or other drones. We have our own anti-drone systems also for security purposes. So various technological equipments are there. With the flood PAC, we have the smart buoys for saving they use the technology, and you can guide them, and they can bring the person drowning in the water to the shore. So there are many different type of technological equipments which are being used.
The UP government has provided free accommodation for these sadhus and Hindu organizations or sanstha's and their devotees. Tents and small cabins made of plywood dot the Mela area. At the core of the Kumbh is one family that has been putting up tents for over a century now, the Laluji family.
We belong from the Laluji family, who has I'm the 6th generation from that family, and we only serve for Kumbh Mela and Magh Melas basically. Our 90% of the work is basic only. We do events in other departments also, in other cities also. But for Kumbh Mela, we are the only family who do the major work. As far as concerned for this Kumbh Mela, 95% of the work has been allotted to the Laluji family itself.
Okay.
There are 2 other vendors who are apart from this family. Basically, Laluji was my grandfather's grandfather. His full name was Baijnath Das Agrawal. In 1920, he started his tent business from Varanasi. Later on, he shifted to Prayagraj, one Rambagh. First office was one Rambagh in Prayagraj. After that, Pandit Jawaharlal Nehru, then former Prime Minister, has called him to the Delhi for the setup of temporary structures and all. So it belongs from there. Then after that, Lalluji had five sons. After that, their sons. So at present there is around 300 to 400 family members in this family. Right? Earlier it was in the whole. It was a united business, but since time it begins, now there are 7 parts basically who are impaneled. There are more players, but 7 of them who are major players are impaneled with the Mela Authority. 10-15 minute दीजिए बस आ रहा हूँ.
27-year-old Yash belongs to the biggest branch of the Lalluji family tree, Lalluji and Sons. It is said that a Kumbh cannot take place without the Lallujis. But this Mahakumbh has been extra large, even for the veteran tent business.
Actually, what government did planned earlier, we have crossed that limits in 3 times also. What they planned for us, we have got the work order. Suppose I am saying for the item, suppose there are tin sheets we are using for fencing and for pandals and all. Earlier it was stated that we have to use 3 lakh to 4 lakh sheets. But at present I have installed 10 lakh plus sheets. They have instructed us to give new items this year. We have not used old sheets. There was instructions to us to use new sheets, new tents, and it is totally tremendous to this government and Mela Adhikari what he has done. There was very much work pressure. There was less time due to flood. We have got very less time, but we have arranged that things. We have arranged labours and all. From throughout the India we have labours. So as far as quantum is concerned, we have crossed the milestone. It is said that the whole Mela Authority has installed 2 lakh plus tents and 10 lakh plus suvidhas, including furnitures and all for this Kumbh Mela. I guess more than 50 to 60 CR. Personally on my level, we have invested. Yogi government has a tentage budget of around 300 plus CR for the public. I'm just talking about the general tentage, German hangars, public accommodation, they are separate from these things. We were in preparation from the last, I can say, 1 year for this Kumbh Mela. And there was a situation recently that we had to face a crunch of material. So we have to procure at any rates because we have to fulfill our commitments.
Not only does Lalluji provide tents and construct temporary houses, they also provide furniture for all segments, from the basic to the VVIP accommodation. Huge pandals are also erected by them. These are services that a regular event management company cannot hope to match. Employees here have worked for Kumbhs for over 40 years, and they say they have never seen one of this scale before.
तेजी से हो रहा है, बड़ा हो गया है. पहले कुंभ से इस कुंभ का बड़ा कुंभ हो गया है. पहले इतना बड़ा कुंभ नहीं लगता था. इस साल का कुंभ बहुत बड़ा मेला हो गया है. और डिजाइनर बहुत बड़े बड़े बन रहे हैं. पहले ऐसे नहीं होता था, जो की बार हो रहा है.
The Lalluji business is now split into 7 different entities, though all of them carry the Lalluji name. They too get a slice of the tenting and furnishing pie, although it is much smaller than the main business.
हमारा मोस्टली काम तो टीन शेड और पाइप पंडाल्स है और प्लस टेंट्स है. तो ऑलमोस्ट 600 to 50 to 800 करीब हमने लोगों ने सस्ता की है. उसमें टेंट्स हैं, पाइप शेड हैं, पंडाल्स हैं, स्टेज हैं, काफ़ी चीज़ें हैं.
4-5 विभाग हैं और संस्था जो पर्ची आती जा रही है, काम करती जा रही है, जल्दी बड़ा हुआ.
In a time of high inflation and price rise, the Mahakumbh has provided the much needed relief and support for thousands of people in this country.
महाकुंभ से पहले कोई खास कमाई नहीं थी. यहाँ पे जब से महाकुंभ लगा है अच्छी कमाई है. रोज की मालिक को देने के बाद हमारे पास मान लीजिए 500-600 बच जाता है हमें.
It is not only direct employment for lakhs of people at the Mela area itself. An event of this size has many unseen hands working from the far corners of the country.
मैम जैसे देखिए रोजगार में तो आप ये समझ लीजिए कि कई राज्यों की लेबर हमारे आ ही रही है, उसके साथ साथ हमारे यहाँ जो सामग्री आ रही है, सामग्री से वेंडर जो जुड़े हुए हैं उसके द्वारा उसके रोजगार जो लेबर लगे वो भी जुड़े हुए हैं। जैसे राजस्थान से कपड़ा आता है बेवर से, ठीक, बल्ली हमारी आसाम से, बांस आसाम से, उसके बाद जो टेलर लोग लगे हैं, अलमारी है, इसके विभाग अलग हैं, सामानें जो आ रही हैं उसके द्वारा बहुत लोग जुड़े हुए हैं। ना कि कुंभ में केवल हमारे यहाँ लेबर खा जी रही है, जिस वेंडर से सामान आ रहा है उसके भी रोजगार में फर्क आ रहा है इस कुंभ के द्वारा। अगर ये मेला का आयोजन ना हो तो बहुत लोग बेरोजगार हो जाएंगे।
Well, this massive religious festival is going to continue until the 26th of February, which is the last Snan date. It concludes on the night of Mahashivratri, and pilgrims are pouring in. The UP government, as we've already told you, is expecting around 40 to 45 crore pilgrims to come into Prayagraj over these 44 days of the grand Mahakumbh festival. And we've told you all about the arrangements that have been made. We've told you the people who are actually making those arrangements. And we hope that this has been an informative and an interesting episode for you. Thank you very much for watching NDTV Profit. This is Sandhya Ravishankar signing off from Prayagraj.
This is the day that shapes the future of 1 billion dreams.
From the fields of agriculture to the backbone of defense.
From ambitious infrastructure projects to everyday tax policies.
Every decision counts.
How will this budget balance growth and fiscal prudence?
What will it mean for jobs and what will it mean for your portfolio?
Join us for the most comprehensive coverage of Budget 2025
as we decipher the impact
of this budget on you.
They say fortune favors the prepared. The more prepared you are, using the tools of technical and fundamental analysis, the more returns you can make at the markets. Join me, Gautam Shah, at NDTV Profit's special session for investors. See you there.
The mother of all Kumbh Melas, at a scale never seen before, livelihoods of lakhs in the balance.
NDTV Profit is boots on the ground at the Mahakumbh in Prayagraj.
Managing 45 crore pilgrims with high-tech gadgets. Don't miss Kumbhonomics on NDTV Profit at these times.
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be expected. In the insurance company space, that is the next sector to watch out for. No change in tax rates or any product or any corporate profit tax rate change can be expected in this budget of 2025. The next sector to watch out for will be cement and metals, where they are expecting announcement on import duties to restrict imports on certain metals and certain materials. Moving on to the auto space, outlay for PM E-Drive and PLI can be expected. Policy initiative to drive localization of key EV-related parts can also be expected. The next sector in focus would be the consumption space. Mid to high single-digit increase in cigarette taxes can be expected. The budget, interim budget which was announced last time did not have any tax rate change in cigarettes, which is why we did see an uptick in stocks like ITC and VST. But this time you could see mid to high single-digit increase in cigarette taxes. Reduction in taxes for low middle class consumers could take place, which could boost consumption in the rural as well as the urban spaces. Moving on to the next space, jewelry is the space where no reversal of custom duty cut on gold will take place. In last budget, there was a custom duty cut announced on gold, silver as well as platinum. There will be no reversal on this as per Macquarie. Moving on to the next space, pharma and healthcare, potential support for higher R&D via tax reduction can take place, and PLI for anti-diabetic and weight loss medication could also be one of the factors that the budget might consider. And modest increase in allocation for Ayushman Bharat is something that Macquarie is expecting from the pharma and the healthcare space. Infra is the next space. Capex allocation for key ministries like railways, roadways, etc. Can be expected in this budget, and announcements around additional dedicated freight corridors can also be expected in this budget 2025. Defense is another area where initiatives to boost defense exports can be expected, and announcements around that will be expected, and initiatives fastening domestic defense equipment procurement could also be one of the things to watch out for in this particular budget. Lastly, in terms of power, green energy thrust to continue. Steps to promote initiatives across the value chain, that is to promote green energy, might also be seen during this budget. Oil and gas is the last counter where Macquarie expects that OMC's compensation for LPG under recoveries might be seen. So these are Macquarie's expectation on different sectors as to how budget may come out with different changes in different sectors and how it may impact these sectors.
Hello and welcome to Ask Profit right here on NDTV Profit. I am your host Puneet Zaveri, and with me is Himakshi Bahuguna. Together we are going to be with you for the next 1 hour and solving all your queries. You can dial into us on WhatsApp as well as call into us into this particular show as well. You can reach out to on both these numbers which are flashing on your screen right now. Apart from that, we are going to be seeing a very whole host of queries today because we've seen the markets also react very positively. And on the show today, we are now joined by Mr. Girish Sudani, the co-founder of Ensure Capital on the fundamental side, and Jay Bala, the founder and chief market technician of Cash the Chaos on the technical side. Gentlemen, thank you so much for joining us today and taking us through a whole host of queries over the next 1 hour. To start with, the first query that we are looking at is going to be on WhatsApp. Vinod is, writing into us today for this particular query, and he's looking for the first stock, which is on Spandana Spurti. Now, he's looking to see if he can buy into this current price for the long term. So let me go across to Girish first. Girish, welcome to the show. I just wanted to ask you for Spandana because, the results have not been, for quarter 3. It's been a lackluster quarter. We've also seen the promoter completely exit as well, the previous promoters. Any kind of outlook that you're looking for in terms of Spandana Spurti, and what should a viewer do with the same?
So basically my outlook was a little bit negative in this particular counter. There's low to the coverage ratio as well as you already told that the promoter holdings are decreasing, and that is quite be a red remark from our end also, as well as the quarter in the term means of low return on the equity sides also. So we are not very much bullish in this particular counter. So my suggestion is to just avoid this counter for the longer period of time also.
Jay, if any kind of entry would be cited into this particular quarter, while Girish has mentioned a sell rating, would you concur to avoid this stock based on charts?
Absolutely, the charts concur with it, and it's been in a extremely strong momentum-driven downside, and it's come to about 304 and bounced to about 520, and it's coming back to retest the all-time 52-week low. So the price structure isn't yet stable yet. And if you're trying to bottom fish, it comes with a lot of risk. As an insurance, you always wait for the stock to put in a bottom and form a base. And once that's done, you can look at bottom fishing candidates. But it's quite risky to go and stand in front of a moving train.
All right, so that's a view coming in by Jay Bala on Spandana Spurti. Now with that, let's go across to one more WhatsApp query. So Natasha is writing to us from Goa. She says that she's bought 1,158 shares of Bajaj Housing Finance at 166 apiece. So should she sell the counter or should she hold it? So currently the stock is trading at 109 and it was down almost 1% today. And recently Axis Cap's note on Bajaj Housing was to initiate reduce with the target price of 110. Since she hasn't mentioned the time frame, I'd like to come to you, Mr. Jay Bala. What do you have to say on the counter?
The price structure is quite weak, and the visibility of a bottom is not in place. So it's an avoid at the moment. Wait for the stocks to stabilize. Yeah, 100 does look alluring, thinking that there could be no more bottom. But stocks have done amazing things that people don't expect. So wait for the stock to bottom out, and then look for bottoming candidates. Right now, it's still an avoid.
Got that view, Jay. The next query is actually our first caller for today. Zach is dialing us from Bangalore. Good evening, Zach. What's your query?
Hi. My query is about entering into OFSS, Oracle Finance at the current levels. I would like to take a swing on it, post budget. I expect it to go about 15-20%. I may be wrong, so I thought I'll take the expert's opinion on that.
Okay, let me go across to Jay real quick. Jay, OFSS as a candidate on the charts, do you suggest that our viewers should get into the stock right now?
See, the stock has been a tripler from early 2023-24, and it's come down from 13,000 to 9,800. So it looks like a good correction, but the overall trend for the market is such that we are still correcting, and the Nifty is likely to go down to about the June 4th low. And though the IT index is still the strongest index, you might want to keep a track on Nifty IT index at about 41,000. If 41,000 were to break for the Nifty IT index, there'll be furthermore selling pressure on the entire gamut of IT stocks. For the moment, the pressure is felt only on the frontline names. Oracle Financials hasn't felt that much pressure. Persistent and Coforge, they are all doing quite well. So right now it's just in middling around. So just again an avoid here. If you're trying to get in here, keep a stop loss of 41,000 on the Nifty IT index. If that were to break, definitely get out.
All right. With that, let's go across to another caller. So Zenith is calling from Bengaluru. Zenith is a very regular caller on our show. Hi, Zenith. Good evening. How can we help you?
Good evening, everybody, and sorry to bother you every single day.
No. It's you're not bothering us. It's our pleasure that you're constantly keeping in touch and calling us.
Thank you.
So with that, please go ahead with your query.
Okay, I'm holding 200 shares of Motilal Oswal Financial Services at the rate of 852, and I'm intrigued to know why there is a sudden downward trajectory based on just rumors on Kalyan Jewelers. While the stocks like Zomato, which has been disappointing results, is not budging at all. I'm really intrigued. Our retail investor sentiments have changed.
Okay.
That is my query, and what's the trajectory for 6 to 1 year?
All right.
The quarterly results is about to come. Are we expecting any positivity?
Yes. So, Girish, coming straight to you on this one, how are the fundamentals of MOSL looking like? Because as he rightly mentioned, what is it that's going wrong for the counter?
So, first of all, there is no any specific reason that why the Motilal is going down. If we saw that every single broker is going down, because as we saw that there's a 4 to 5 quarters, we are just seeing the market is a heavy volatile. And during this particular situations, the retail investors are little bit lower in the terminal valuations as well as the trade remarks. So every single broker is down. So this is not a sponsor of the Kalyan Jewelers or any other Zomato or Swiggy. We can't say that. But now comes to the company's fundamentals. The company fundamentals was very good. They are just expanding very heavily, as well as we are just expecting a very strong quarters numbers in the next 2 quarters itself. The companies are delivering a very good profit growth in the last 5 years itself. So the company fundamentals was good. Just hold your position as of now. So as the investor, you are just go with the 1.5 year time frame. So my suggestion is to just average this below around 600. If you saw that the level of 600, 610, then just do an average of that particular near terms and hold your position for the 1.5 year.
Got that view on Motilal, and multiple businesses there: wealth management, housing finance, broking being one of them as well. So stock has been doing very well, 62% in the past year. But let's go across to our next caller. He's dialing in from West Bengal. Arun is dialing us. Good evening, Arun. What's your query?
Yeah, I am holding 7,500 shares of Zomato at 280.76.
Okay. And do you want a long-term view on the stock?
6 months to 1 year.
Okay.
What should I further do some averaging, or should I hold it, or
Got
should I
that.
exit?
Girish, let me come across to you really quickly. Zomato, while the Q3 results weren't the strongest and stock has taken a beating post that, any kind of outlook that you have on Zomato right now?
So my outlook is little bit negative in the terms for the near terms. But if we get the range of around 160 or 165, then it would be the more favorable range for me to just invest in the longer term frame. So my suggestion of this particular caller that just wait and watch for the 160 range. If they reach it out at that particular level, just do an average for the longer period of time, because you have to wait for at least 1.5 year. The companies are still working on the restructuring model. And then the profit obviously just go and decline to the next 1 quarter itself also. So just wait and watch for the 1.5 years itself.
Jay, Zomato, a retail favorite stock. Anything on the charts that you would suggest that it could see a downward trajectory? It has fallen from the 300 rupee mark. Any outlook on Zomato?
Went from 44 to 306. So that's a 5-bagger move, 6-bagger move. And the stock broke below significant support at 240. I've been mentioning this on NDTV Profit as 240 as being a very important support. But having broken that, the stock is likely to retrace and correct the entire move that started from 44 to 306, and that works out to about 175. So 175 is the next important support. I think the stock could find some value buyers around that zone. So wait for a little more time. The longer term trend is quite strong. At the moment, there's nothing to be done. So wait for stock to approach significant support, which is around 175. I don't think it's going to go to 144, which is the next support below that. I'll watch out as to what the stock does around 175.
All right, so that's a whole view coming in on Zomato for short term. With that, let's go across to one more caller from Chennai. Hi, Kunal. Good evening.
Good evening.
How can we help you?
Yeah, so I have DAM Capital, which was recently listed at 400 rupees, 125 shares. So it has dipped a lot in the recent past given the market conditions, but today its results came out which were, overly positive.
Yeah.
So I'd like a long-term view on it, given that maybe even 2 or 3 year range would be really helpful. Thank you.
Okay, so Girish, I'd like to come to you on this one because DAM Capital rightly said it came up with its Q3 earnings today. Revenue was up 64%. Broking revenue, although was down 11%, but overall net profit was also up. It was 2.3 times at 52 crore rupees, which is a significant number for the counter. So what do you have to say on the fundamentals of DAM Capital? Should the investors stay invested for another 1 to 2 years?
Definitely, because DAM Capitals, as we already saw that the what the management commentary is all about, it's related to the merchant banking, how the revenues are still improving in the merchant banking process. And they have already done a 17 transactions as of now with the raising of around 20,000 crores valuation AUM. So we are just more bullish on that particular DAM Capitals, but obviously the investor have their own view of for the 1.5 year time frame. So little bit more positive in the DAM Capital and just hold your position as of now.
got that view. Let's go across to our next caller. Sumit is dialing into us.